to go. It's fantastic. We're on top of the world. We're leading the change, and we have the support of all our colleagues.
Talented, supportive,
happy. They empower men and women combined in the newsroom.
They are driving it, not just changing it.
smart, fun yet intellectual,
radiating confidence,
vibrant, effervescent, and stunningly intelligent.
innovative, hardworking,
multitasking, versatile, enigmatic, and very cheerful.
Tenacious, humble, and wanting to get to the depth.
They are much more talented. They are much more creative and innovative. And they are bringing a sanity in overall discourse that we are currently creating and consuming.
Welcome. Thanks so much for joining in. You're watching NDTV Profit. My name is Alex Matthew. At the onset, we know that Women's Day is in fact tomorrow, but let's start by wishing all of you tuning in and everyone at home a very, very happy Women's Day. This is, of course, a day to celebrate women, but we believe that women should be celebrated throughout the year. On that note, let's start on all you need to know. Let's start with the headlines. Fed is not in a hurry to cut rates, says Powell, but markets shrug off his caution, equities rise. Bets on gold are not off. The yellow metal resumes its record rally, but a correction could be in the offing according to experts. SEBI gives BSE brokers option to settle cases involving reversal trades which manipulate stock prices and volumes. Mahindra & Mahindra promoters will sell stake worth 1,832 crore rupees, but says that they have no further intention to sell further shares in the foreseeable future. Investments will drive India to become the third largest economy, says Sanjeev Sanyal, Prime Minister's economic advisor, in an exclusive interview to NDTV.
The committee does not expect that it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably toward 2%.
All right, that was Fed Chair Jerome Powell, and that's in fact the big story overnight. The US Federal Reserve Chair Jerome Powell gave testimony to US lawmakers last night, and he reiterated that the central bank is in no rush to cut interest rates until policymakers are convinced that they have won their battle over inflation. He said that it will likely be appropriate to begin lowering borrowing costs at some point this year, but made clear that officials are not ready yet. Meanwhile, Bloomberg has reported that Federal Reserve Bank of Minneapolis President Neil Kashkari said he expects Fed to cut rates once or possibly twice in 2024, but emphasized that he hasn't finalized his forecasts for the Fed's upcoming meeting. Now, markets understandably were watching for Powell's testimony, and the reaction suggests that the comments were along expected lines, or at least that traders were not too perturbed by his caution. Equity markets rebounded from selling earlier in the week, with the Nasdaq and the S&P 500 both gaining about 0.5% each, and the Dow gaining about 0.2%. The yield on the 10-year Treasury was largely unchanged at 4.1%, but remember, it has dropped quite substantially in the past few sessions. Let's pull up the Asian markets as well. Those that are open, at least the three early rises started in the green. But you have a little bit of a red tick now, with the Nikkei dropping into the red, down about 0.1%. The Hang Seng down about 0.1% as well. To give you some perspective on the latest, and we were watching for this Fed testimony, we've got Radhika Rao, who is a senior economist at DBS Bank, joining us. Radhika, thanks so much for taking the time this morning, and happy Women's Day in advance. We're celebrating it today. Let me start by asking about what you made of the Fed chair's testimony yesterday. Was it something that you were expecting? And what are the pulls and pushes in regard to the growth and inflation dynamics that you're reading right now in the US?
Good morning, Alex, and thank you very much for the wishes. Certainly, I think, between the fourth quarter of 2023 and the first quarter of 24, many of the things have really turned on their head. Markets got really, ahead of themselves late last year, expecting as much as about 150 basis points of cuts from the Fed. And that happened very fast. And you saw the reaction in the dollar and you saw the reaction in the rates as well. But come first quarter of this year and then, all the subsequent high frequency numbers, it is telling us a very different story. And thankfully, through this entire period, we were quite skeptical about why the markets had really, become much more or priced in much more policy easing. So we maintained where we were that, Fed is not going to be in a hurry to lower rates. Certainly, I think the last mile of disinflation is much slower than what would be preferred. If you talk about the trimmed inflation gauge, or if you talk about the core gauge without shelter, it's quite clear that inflation is coming down slowly and on sequential basis, that is on month basis, it's still quite strong at about 0.3, 0.4%, again, depending on which gauge you're looking at. Goods inflation, I think, has largely ebbed, but services has been hard to beat. And this is all happening against a backdrop where you've really seen real wage growth now being higher than inflation. So it's back in black, the real wage growth is back in black. If you talk about any other, indicators like the personal savings as a percentage of disposable income, that has come back to pre-pandemic levels after a sharp move higher. But at the same time, you have to see that against households' net worth, that has gone up by a third since late 2019. So a lot of moving parts here, certainly, which basically tells you that while supply pressures have come down, demand pressures are still very much there. Labor markets are doing well, and that will get the Fed a bit more leave the Fed a bit more cautious than markets anticipate, because you don't want to be in a position where you begin to cut rates and you still see inflation ticking higher or growth seemingly more resilient. So we would think that personally we have kept on to our soft landing expectations. But we have dialed up the probability of no landing by a bit. So now if you see generally growth come in at about 2.5% today, this year, our own baseline is about 1.5%. But if you do see growth average higher at 2.5%, then I think it's very hard to conceive anything but a very shallow rate cut cycle this year from the Fed.
So therefore, what Neil Kashkari has said seems to be the base case where you're talking about 1 or 2?
Yes, again, it will be contingent on how growth overall does. Just because inflation is coming off very sharply, it's not still near target by any means, right? So even if you see the headline come to those levels, I don't think the Fed would be jumping and to cut rates. I think they will also look at how economic activity is overall, especially given, like I mentioned earlier, households' net worth, which is doing quite well. As a baseline, we have about 100 basis point cuts this year, but we are really looking at what is the incoming data to see if we need to revisit that. So yes, contingent on sub 2% growth, I think our baseline will work out. But if you see anything stronger than that, certainly a shallower rate cut cycle, and it starts late in the year.
Fantastic. Thank you so much for giving us that perspective this morning, Radhika. Pleasure having you on the show. All right, let's turn to the Indian equity markets and get you a sense of what the latest cues are, because we've had a little bit of chop and churn, not just in our markets, but in global equity markets. Yesterday, of course, the cues were a little better heading into trade today, and seemingly a lot of the Asia-Pacific markets are sanguine at this point. Of course, there too, you're seeing a little bit of consolidation. Today, of course, is the weekly expiry also to factor in on the F&O side. Agam is joining in to give you some perspective on that. Morning, Agam. Do we say consolidation continues? Yesterday was a tough day for the broader markets.
Yeah, it was, Alex, and I reckon that the benchmark will continue to see a little bit of a sideways movement. Sure, yesterday was the first day we saw a sharp knockoff when it comes to the broader markets. Can that have an impact on your key indices? That's a wait and watch. But, well, at least yesterday, there wasn't a case because the Nifty did advance and end up with gains of around 0.5%. Of course, that move was very sharp towards the end, the last 1 hour of trade. But along with that, we saw longs coming through as well. And at the moment, well, it continues to make new life highs every single day. Moving on to the Bank Nifty, again, a good day of trade, but this is where we saw unwinding as far as your open interest is concerned. As we move into today's weekly options expiry for the Nifty, well, we are keeping an eye on a range which would perhaps be 22,200 on the lower end. And of course, on the higher end, now keeping an eye on something like 22,600, 700. Of course, yesterday, since we saw the Nifty move largely around here, it was 22,400, 500, where the options saw the most amount of writing. As I was mentioning earlier, on the higher end, we're keeping an eye on 23,000. Is call, and that's where you have max OI, but it's highly unlikely that the Nifty will go up to all the way to that level today, of course, which is why we are keeping an eye on 22,700 today. Moving on to stocks, and that's where all the action was, and we saw a lot of shorts coming in through for MGL, IGL, Samadhan, Motherson, Ramco Cement, and ND Finance, and also longs unwinding in Tata Motors, BHEL, Interglobe Aviation, and BPCL, except for Muthoot Finance, which saw a bout of short covering. So broader markets, Alex, as you said, was where there was a lot more weakness, and it's wait and watch whether or not we continue to see that today as well.
All right, thanks so much for getting us those details, Agam. There's an important update coming from the Securities and Exchange Board of India. It has now given BSE brokers, or certain BSE brokers, an option to settle cases involving reversal trades, which are used usually to manipulate stock prices and volumes, and for a particular period. We've got Charu joining in to give you the key details of this update. Charu, what are you picking up this morning?
Good morning, Alex. So what happened is that the Security and Exchange Board of India on Wednesday came up with a settlement scheme for entities that are engaged in the trading of illiquid stocks, which are basically the high-risk stocks. And these are for the trades that are happening at the Bombay Stock Exchange and will be subject to the SEBI Act itself. Now, what will happen is that the entities that were engaged in such trades from the period of 1st April 2014 to 30th September 2015 will be able to take the benefit of the scheme. And this will be available from March 10th to May 11th. And both these days will always be included in this, but they can be extended if any competent authority asks for an extension on the scheme. So for some context, we have to understand that SEBI considers reversal trades as non-genuine because they try to boost an artificial kind of interest in these illiquid stocks, which are usually not having a very high value in the market, and it creates some sort of an illusion and misleads people to think that this particular trade or financial instrument has a lot of value and people are really interested in it. But now this is being introduced to basically settle such disputes, to reduce the wastage of time, efforts and resources spent in litigation, and a settlement offer or settlement benefit will be given to the parties engaged in them.
Fantastic. Thanks so much, Charu, for getting us this update. Now, it's time for a quick break, but we leave you with a slice of an exclusive conversation that we had with PMEAC member Sanjeev Sanyal, who expects India to become the third largest economy in the world in the next 24 months. Listen in.
8.4% is certainly even above what we had expected in the government. It just shows that the momentum in the economy is very strong, and it's happening, remember, in a time where frankly, the rest of the world's economy is not really helping us. I mean, almost all our major export destinations, whether it's Germany or UK or Japan, are in recession. Even the US is growing, but there are always questions about it. So the point I'm making is that in a very difficult environment externally, we have managed to generate these growth without causing macroeconomic stresses. So inflation is not spiraling out, or external accounts are not blowing up. So I think it's quite creditable what we have been able to achieve as a country, and we are now well on our way to becoming, in the next 24 odd months, the world's third largest economy.
Hello and welcome to NDTV Profit. Today we will talk about tattoos and the worth of this market. The history of tattoos in India can be traced back to prehistoric times when tribal people were captivated by drawings on stone or wood walls. Their attempt to replicate these figures through needles gave birth to the practice of inking skin. Over the course of time, tattoos were embraced by tribals as a mark of bravery, war, religious beliefs, customs, marital status, protection from the male gaze, and so on and so forth. Today, in 2024, tattoos have become a means to express thoughts, individuality, personal experiences, and sentimental designs. The industry is estimated to generate over 20,000 crore rupees per year. What is driving this growth? One of the key drivers behind the growth of the tattoo market is the rising demand for customized and unique designs. Improved technological equipment for making advanced, safer, and painless tattoos have boosted the market. The laser technology for removal or modification of tattoos have also added to the surge. Increased exposure and promotion of tattoo designs on social media have led to widespread influence of tattoo culture on the youth. Take a look at these figures now. As per Fortune Business Insights, the global tattoo market is projected to grow from $2.04 billion in 2023 to $3.93 billion by 2030 at a compound annual growth rate of 9.87%. This is a sharp rise from 3.8% year-on-year growth between 2017 and 2022. As per Custom Market Insights, the diamond jewelry market is expected to grow at a compound annual growth rate of 5.5% by 2032, while the luxury jewelry market at a rate of 8.9%, but the tattoo market is estimated to grow at 9.5%. Is the tattoo business lucrative? According to an article by Opportunity India, tattoo kits are now easily available for less than Rs 10,000, while high-end kits range from Rs 20 to 35,000. Now, in a city like Mumbai, the average cost per inch is Rs 2,000 to 2,500. In Delhi and Bangalore, the cost per inch is between Rs 1,000 to 2,000, and in Goa, it is about Rs 500.
Welcome back. You're watching All You Need to Know. Now, Brent crude has largely hovered around that $80 per barrel mark in the recent past. What you're seeing on your screen is NYMEX, but we've got an update for you on the Singapore gross refining margins, or GRMs. It's an important metric to track for oil marketing companies. The GRMs have fallen to their lowest level since November of last year, and they're down over 50% month on month. The question is, what does that mean for OMC stocks, which have seen their prices rise quite substantially in the recent past? Mika is joining in to give you some perspective. Mika, what are you picking up?
Yes, so the Singapore gross refining margins have dropped to $4.5 per barrel versus $6.9 per barrel. And when you compare it on a month-on-month basis, the drop is 53.6%. So what Singapore gross refining margins basically are, it represents the profit earned for every barrel of crude. So it reflects the difference between the price of your crude oil versus the combined price of various refined products such as petrol, diesel, liquefied petroleum gas, etc. Now, Singapore GRMs as on Jan 26, according to the data that we do have, was 8.3 per barrel. So it's it's nearing almost half of what we had at the end of Jan. And the Singapore GRM level currently is the lowest since November 27, 2023. And when you talk about the impact OMCs could be a little bit under pressure, while there are obviously other factors that do affect the stock movement of the prices. This is a key metric because it kind of reflects how the global refining industry is. Lower GRMs marks a shrinking gap between the price of crude oil and the refined products. And since the petrol and diesel prices have not been changed since May 2022, OMCs do see a little bit of pressure because they don't have the liberty to increase the prices, at least right now. When it comes to Reliance Industries, the impact is mixed because it's diversified into different segments. Negative impact on their refining business, but a neutral or maybe a slightly positive impact on their petrochemical business.
Fantastic. Thanks for wrapping that up. And in fact, that entire pack is going to be in focus today. Let's focus in on some key stocks and bulk deals that you should keep an eye on today. And Anushi is joining to give you some perspective on that. Anushi, morning. What's on your list today?
Morning, Alex. So right for today, we are going to be concentrating on LNC India, where the government is selling about 9.71 crore of shares over here, which represents about 9% of equity, or 7% of equity, so to raise up to about 2,100 crore. So this includes about 5% stake with an additional green shoe option of about 2% stake. The floor prices are set at Rs 212, which showcases about a 6% discount compared to yesterday's closing price. Now, one of the major one is M&M, which is in focus after promoter Prudential Management is offering to sell up to 93 lakh shares, which represents about 0.75% equity for rupees 1,800 crore. The price band for the same is in the range of about 1911 to 1970. So the upper band is at a discount of about 3%. Now, Prudential Management does hold about 11.6% stake as of December 23, but they are planning of no additional stake sale going forward. Now, on yesterday's bulk deals also, we have two in focus. So Zomato was one, wherein Anfin Singapore Holdings sold up to 2% stake at a price of about 160, wherein Morgan Stanley Asia bought about 0.66% stake in the company. And final on the list is RBL Bank, in which Matthew Syrick has bought about 32.5 lakh shares, which showcases about 0.54% of equity. So these are the stocks that definitely should be in focus today.
Got it. And there's more. Thanks so much, Anushi, for getting us those details. Mahima is joining in to tell you about Jupiter Wagons, GPT Infra, and a couple more. Mahima, what are you picking up?
Right, Alex, as you rightly mentioned, the first pack is a pack of stocks who have received orders from the Railway Ministry. Well, first one is Jupiter Wagons, which has received an order of around 956 crores. Now, this takes their order book to approximately 8,032 crores. And if you talk about the stock performance, well, Jupiter Wagon has been a multi-bagger since past 1 year. It has gained over 255% in the past 1 year. And this order book is for supply of 2,237 bandwagons. Then we have GPT Infra, where the company has received an order of 135 crore. And this is for UP's North Central Railway. And the contract is a JV, so GPT's share in this will be around 51%. Then moving on, we have Hindustan Aeronautics, where the company has signed an amendment to LCA-IOC contract, and the contract value has been doubled. Prior to this, the contract value was 2,700 crores, whereas now it is at around 5,000 crores. So this is significant because the contract value has doubled. Then talking about the recent order wins, well, HAL had a recent order win of 5,200 crores for supply of RD-33 aero engines. And if we talk about the stock performance, HAL again has been a multi-bagger in the past 1 year. The stock has been up around 6% in the 5 days, and over the past 6 months, it's been around up around 60%. Moving on, we have Asian Paints also, where the company has entered into requisite agreement with Gujarat Chemicals Port, and now this will be for setting up ethanol storage and handling facility in Dahej, Gujarat, and the contract value is for approximately 2,100 crore. So this will be the cost for setting up the facility. And lastly, we have Infosys, where they've announced a renewal of digital innovation partnership with ATP Tour, and this will be aimed at driving the AI's first innovation for professional tennis. So these will be some of the stocks on the radar for the trade today.
Thanks so much, Mahima. And finally, moving on to an update from the Vedanta and Sterlite plant case in Thoothukudi. The company is said to be exploring all possible legal solutions against the Supreme Court, or rather in the Supreme Court, in a bid to reopen that plant. Varun is joining in with more details. Varun, this has to do with the Tamil Nadu government versus Vedanta and Sterlite Copper, essentially. What can you tell us about the latest?
Yeah, hi Alex, thank you. As you said that Vedanta is exploring all possible legal...
Audio? I think that we seem to be having a little bit of an issue with his audio. We'll try and get him back. In the meanwhile, let me try and give you a perspective on what he was talking about. Apparently, the company is exploring on possible options and is also exploring the possibility of filing a review petition before the Supreme Court. The Supreme Court, remember, had rejected Vedanta's plea to reopen its copper plant last month. It has, according to the Supreme Court, repeatedly violated environmental norms. This, of course, relates to a case of a leak that resulted in quite a few health issues in that Thoothukudi facility. The plant was ordered to be shut in 2018, and 13 people had been killed in a protest against that unit a while back. That brings us to the end of this particular... Oh, I believe there's one more. So we've got a wrap on this edition, but then we leave you with a slice of a conversation with Union Minister Ashwini Vaishnav. Here's what he had to say about India's growing fintech space. Listen in.
I'm joined here by Senior Cabinet Minister Shri Ashwini Vaishnav ji. Thank you so much, sir. So what would you like to say about, we're at the FinTech Festival. What do you see as the future of FinTech in India as we enter 2024?
In the last 10 years, the Digital India program, and as a part of that, the FinTech industry has made a huge difference in every citizen's life. Today, UPI system is being adopted all over the world. Japan has given patent to this technology. This is something which has made India proud, which has made a big difference in our citizens' lives. This is the Viksit Bharat Sankalp, which our Prime Minister has laid for all of us. 140 crore dreams, one purpose. That's the direction in which a country is moving. The foundation for Viksit Bharat has been laid in the last 10 years, and FinTech is part of that. And in the coming 5 years, this foundation will be further strengthened to take India to developed nation status by 2047. Thank you.
Amul has completed 50 years in India. PM Modi will attend the Silver Jubilee celebrations of the Gujarat Cooperative Milk Marketing Federation, the owner of Amul. At one point of time or the other, we've all grown up with Amul butter or milk for sure. The famous Amul girl created in 1967 is family. We all recognize her. But as the brand grows 50 years old today, do you remember the full form of Amul? It is Anand Milk Union Limited. From producing 250 litres of milk per day since the time Amul was formed back in the mid-90s to today, where Amul has over 36 lakh dairy farmers and produces nearly 300 lakh litres of milk per day, the brand has had a long journey. The story goes way back in time. In the 1940s, dairy farmers were worried. The middlemen exploited their ways of profitable income, and a poor milk production system made their living difficult. Tribhuvan Das Patel and Verghese Kurian identified these issues and helped in the formation of the first milk union called Kaira District Cooperative Milk Producers Union in 1946. The cooperative model gave farmers direct ownership of the dairy industry. The union helped them process, market and sell milk and milk products without the interruption of intermediaries. And it was in 1955 that this union chose a brand name for itself called Amul, which means priceless in Sanskrit. And then in 1973, Amul Dairy along with 16 other district cooperatives formed the Gujarat Cooperative Milk Marketing Federation, which has now completed 50 years in India. Amul also started India's white revolution that made our country the world's biggest maker of milk and milk products. The brand follows an umbrella marketing technique which has helped GCMMF prevent association clashes and keep an open door for the patrons to coordinate in creating items. As per a report by Statista, the annual sales turnover of Amul from 2011 to 2023 has consistently risen, recording about 55,000 crore rupees of turnover in 2022-2023 alone. And did you know, Amul has also held a Guinness World Record for having the longest continuous run of any advertising campaign that has ever taken place anywhere in the universe. Amul Doodh Pita Hai India and Utterly Butterly Delicious will always strike a chord. Let us know which famous advertising phases of Amul do you remember?
Couple of seconds to go. It's fantastic. We're on top of the world. We're leading the change, and we have the support of all our colleagues.
Talented, supportive,
Happy. They empower men and women combined in the newsroom.
They are driving it, not just changing it.
smart, fun, yet intellectual.
Radiating confidence.
Vibrant, effervescent, and stunningly intelligent.
Innovative, hardworking.
Multitasking, versatile, enigmatic, and very cheerful.
Tenacious, humble, and wanting to get to the depth.
They are much more talented. They are much more creative and innovative. And they are bringing a sanity in overall discourse that we are currently creating and consuming.
Welcome. You're watching India Market Open, and it's going to be an interesting and important day for the markets. In case you're wondering, yes, we are celebrating Women's Day here at NDTV Profit a day earlier. Women's Day, of course, is tomorrow, but it's going to be a markets holiday.
Yeah.
So,
should I have worn pink? Is the question.
Of course.
Sure.
Undoubtedly.
Maybe after this show.
As long as the mood is not red on the markets. A bit of a scare through the day yesterday and recovery during close. But that overhang still very much there.
Yeah, and individual portfolios hurting badly. So I think that's the problem, that while the large caps may be doing what they're doing and recovering, the broader end of the spectrum is taking another chin. We'll talk about that in detail. But yeah, a happy Women's Day. Hopefully, portfolios for women, men, everyone alike recover a little bit from the kind of gashes that they had yesterday, especially at the broader end.
Correct. And watch out for a lot of specialized programming we have about investments, building your portfolios and assets for women. And of course, the same applies for men as well. But let me begin with a very quick wrap of what's happening globally. Recovery in the global market. So that might have some succor. After three, weak trading sessions, US markets did recover. All the indices did. Of course, the big move there was because of Powell speaking. And Powell said exactly what was expected. In fact, a lot of his statements in front of the Finance Commission were lifted straight from the last monetary policy, and Fed statement. So that shows you that he stuck to the script, that there may not be any big changes. June is the date penciled in, or the month penciled in for the first cut. And the market is thinking that that's what's going to happen. I'm just going to run a quick quote of his where he again reiterates that you will see a cut this year. He's waiting for data, so nothing really changes. Bonds took it positively. Your 10-year was at 4.1 levels odd, so an improvement over there. Another factor that is building that up is the jobs data, the private jobs data, which has come in a little lower than expectations. So that's telling you that the US economy is not quite overheating overall. Crude is the other big story. Crude prices going up because of the expectation that interest rates will be on track. As a result, Singapore GRMs have shrunk a fair bit. So watch out for impact on OMCs this morning, Indian OMCs. That might not be a very, very good picture for them. Asia is doing well, at least in the morning trade was good. Nikkei overall started up well, but has now slid a bit since we saw last. So that's the setup. Mixed picture for Asia. Over here, I think the overhang and the pressure on the broader markets is going to sustain for some time because there is so much regulatory direction on controlling that quote-unquote froth.
Yeah, and you're very right, Taman, and frankly, that's what's playing out, right? I mean, there's some measures in conversations yesterday about how the Nifty may continue to do what it does, which is move up, and the broader markets may continue to fall. So, new highs on Nifty, short positions existing, by the way, viewers, keep in mind, because if you look at the call strikes at 22,500 and 22,600, they are still very, very high, and therefore, if the index were to inch higher, which is the point that we've been making, 22,400, some bit of covering now. If that happens, and if that happens swiftly, don't think it will, but if it were to happen swiftly, then you will actually keep on seeing these upticks happening because of short covering on the index at large. The problem, though, is not the index as much. The problem really is at the broader end of the spectrum. Portfolios, individual portfolios are getting badgered out of shape. You talk to almost any investor who is invested across the SMID space, and retail investors, even HNIs are that. those continue to get badgered, even as, by the way, volatility keeps on falling, right? 6th day on a trot now, we've had India VIX come off, but that hasn't helped individual portfolios. So that's the point I'm making, that the index at the headline level is looking okay. It may not look okay, depending on what the oil and gas names do, but broader markets not looking great. Now, yesterday, amongst sectors that we were talking about, we spoke about cement and how there is a bit of a pullback that is coming up in cement, pullback that is coming in cement in a meaningful way. Look at the short positions added on to what was already existing. So yesterday's session as well, Ramco, which was down about 2.5%, added 24% OI. A significant short build-up on Ramco, which already had a short build-up the previous day and had fallen as well. Ultratech down 2% yesterday, about 12% OI build-up. And YTD performance for some of these stocks isn't the greatest either. And we'll talk about that a bit later on maybe on Editor's Cut. But, you know, cement continues to wobble. And therefore, there's this, yesterday, Tamanna, the issue was that while maybe IT did okay, maybe banks did okay, but a clutch of economy-linked spaces, the Adani twins, cement names, some of the auto names, all had a large corrective move within the headline number of the Nifty looking okay.
Yeah, it's broadly seeming like a bit of uncertainty over what the next step will be, which company is next, what's next. Is that kind of maybe overhang? But remember, it might be a bit painful in the short term, but having a clean, robust capital market is key. So think of it as a jab of a vaccine or some such. But let's get to stock specifics. And your large caps are in focus. I'm going to begin with Tata Motors. Tata Motors has constantly been in the news. We've covered it. It's seen a bump up over the last few sessions as well because of their demerger plans. And Moody's has now come out and affirmed their long-term rating at BA3 with a positive outlook after the demerger has been announced. They say that the CV unit will generate substantial earnings, and I thought this was interesting because all the focus seems to be on the PV/EV kind of play as far as Tamo is concerned. But the CV unit is very solid and strong as well. The cash to service debt obligations is something they're talking about. They say the proposed structure will optimize synergies across PV and EV businesses in India and JLR, and all units will deliver strategic growth priorities while maintaining a balanced financial policy. The other stock, and we're going to go through a lot of them today, business updates have started trickling in, so we'll cover a few of those. But I want to bring your attention to Adani Enterprises. Their Dubai unit has acquired about 100% stake in LMDF for 5,000 euros. Now, this is a duty-free SAS. So it's called Les Marches Duty Free. And as your airports, play increases, all of these add-on services will be accretive and quite important. So that's one I would watch out for. Morgan Stanley is another one which has bought into Zomato, and which is why Zomato is the next sort of stock on my list. Remember, Antfin Singapore Holdings sold about 2% stake at 160 rupees 0.4, but Morgan Stanley Asia has bought 5.68 crores worth of shares. That's about 0.66% stake in Zomato at 160.1. Zomato also, for various reasons, and we've spoken about this on the show before, long-term play, turnaround and paths to profitability perhaps looking clearer. I mean, obviously yesterday they didn't have a great day, but then a lot of the market didn't, a lot of the broader market didn't. Zomato would be perhaps one, but
well absorbed. I mean, there's a large block yesterday for Zomato, well absorbed. So on a block size like this, if you told anybody that it'll be down 2% end of day, I think most people would take it with both hands. So pretty decent performance now for Zomato.
I think so. I think so, definitely, and one that you should keep on your radar.
Most certainly. The other thing that Tamanna spoke about, which is what could happen to oil and gas names. Now, here's the reason. Singapore GRMs have dropped to $4.5 per barrel versus about $6.9 per barrel YOY. This is the lowest number since November 27th, 2023. And therefore, watch out for Chennai Petro, big impact on that one. Watch out for Reliance, watch out for oil marketing companies. All of these tend to get impacted when this happens. In fact, if I'm not wrong, and I'll just take a second here to just pull up what my statistics would be. Right. So for stocks, right, for Chennai Petro, this every $1 drop in GRM lowers EPS by circa 25 to 30%. For IOC, BP, HP, it decreases earnings by close to 15% as well. For Reliance too, about 3-4% impact. So you actually have impact on Reliance, OMCs, Chennai Petro, maybe MRPL. So watch out for all of these names could be active for the wrong reasons in the session today. So that's the one pocket you need to definitely watch out for. Tamanna would have spoken about Mahindra and Mahindra as one deal, which is an important one because there is a block out there from the promoter. May not be too much of an impact, but keep in mind. But NLC India was interesting too. I thought the government is going to sell up to 9.71 crore shares, including green shoe option by OFS at 212 per share. The price is at about a 5% discount or slightly over that. So do keep an eye out for NLC India in the session today as well. And before I hand it to Tamanna, maybe just maybe, car trade could be an interesting one because while Springfield has sold about 6.32 lakh shares, that plus others were bought over by ICICI Prudential Mutual Fund. So they went lock, stock, barrel out, not a very large quantity for them, but they bought significant stakes in car trade yesterday, ICICI Prudential. So could be an interesting stock to monitor today.
Yeah, just a couple more which have business updates coming up, and Bajaj Finserv is one of them. I wanted to put that on the radar because the Bajaj twins have had a couple of rough sessions for various reasons. But their Fed business update says that gross direct premium underwritten is 1294.8 crores, while new business premium is 1,050 crores. So this is a bump up of about 11 to 13% year on year. It's okay. It's not spectacular. So which is why, of course, business updates just give you the tip of the iceberg, but one to look out for. The other one really where you have seen another business update is all cargo Gati, where there has been an improvement in the month of Feb, and the volumes have gone up to 104 kilotons, about 15% up year on year. And I was interested in this one because you have a lot of overhang of what's happening in the Red Sea. Will that have an impact? Was the other question. I found HAL also interesting, and just I want to bring HAL to your attention. The company has signed an amendment to its LCA with IOC, with Indian Oil Corporation. The value of the contract has been revised, and it's a hefty revision. Look at that. It's gone from 2,700 crores to 5,077 crores. HAL anyway has been quite a solid play in for a long-term perspective. In a month, up about 10% already. So maybe HAL is one you want to keep on your radar. 3-month growth is 20% on the stock price. There are quite a few more, but anything that you want to add over here, Neeraj?
I mean, Jupiter Wagons was interesting, the 960 crore order. I mean, it's one of the many that they get, but watch out for Jupiter Wagons. In case it reacts, you know why it is reacting. It's on the back of the order. We'll do a conversation with an expert, Deepak Jasani, in just moments from now. On this GRM piece as well. There's a new kid on the block, Mukka Proteins, very high subscription numbers, maybe some of the last of these high subscription numbers that we're seeing in the near term. But watch out for Mukka Proteins, could be an interesting one in the session today. Subscribe 137 times, might have a bit of a reaction. And some interesting brokerage notes, Tamanna. You would have picked up some. The one that I thought was amongst the ones which was very interesting was this HSBC note on Phoenix Mills. Yes, they're very early on target price of 1,600. They've revised it to 3,100. So don't get confused by the uptick in target price. The current price is about 2,753. They've raised the target price to 3,130, which is a 13% upside. But they effectively saying that there is a version 3.0 now. Stabilization of new malls and office portfolio will drive high double-digit earnings growth over the next 3 years. And I must say, save for the COVID lows, this one has had a phenomenal, steady run all through the last 2, 3, 5, 7 years. It's been a wonderful stock. No reason why it cannot continue.
Only one more note is on Mahanagar Gas. Because of what we saw yesterday. Now, Motilal Oswal has maintained a buy on Mahanagar Gas at 1665. I mean, this is a stock which yesterday dropped 15% on the back of concerns that gas prices will be cut. And the reason that Motilal Oswal is saying this is they say the government has focused on volume growth rather than regulating prices. So they will focus on volume growth, saying that don't worry too much. The end of infra exclusivity only leaves 20% network capacity for new entrant. That means their dominant position continues. So they do not believe Mahanagar Gas faces a significant risk. In fact, their target price is 1665. And they look at a 4% volume CAGR over FY23 to 26. And I found that interesting, considering that you had Indraprastha Gas also announce price cuts after that. So, different take?
Yep. Well, let's wait and watch how these stocks shape up. Some of the pressure or some of the discounts maybe in the price. Let's wait and watch. But oil and gas is in focus for more reasons than one today. And Deepak Jasani, Head of Retail Research at HDFC, joins us right now on the phone line for his thoughts. Deepak, thanks so much for being patient with us. Neeraj here, good morning. This fall in GRMs doesn't happen overnight. It's been now happening, but this large differential between what existed, let's say in the month of November, or let's say maybe a year ago to now, what kind of impact do you think it has on some of the oil and gas names?
Yeah, so the refining margins in the Asian region have slipped to about 8-month low. Now this is mainly due to China factor. Now China, despite giving a 5% GDP projection, investors were disappointed with the lack of any major stimulus. The internal combustion car sales also continue to fall. There is sluggish industrial activity and property downturn. So all this is weighing on the petro products demand. So this has led to the refining margins shrinking in the Asian region. Now, as far as Indian companies are concerned, most of them are trying to beat or earn more than the Singapore refining margins due to their unique facilities that they have. And apart from that, they also have a large portion from marketing margins. So the marketing margins so far have been sort of compensating for the soft GRMs. As long as the petrol and diesel retail prices are not revised downwards, their marketing margins will continue to be quite healthy and may offset a little bit from the soft refining margin side.
Good morning, Deepak. Just a quick question over here. You're saying that this depends on whether petrol prices at the pump are increased or decreased. The thought is that you're not going to see too much of a movement ahead of elections, which would be par for the course, but in this case, we may not. Is it fair to say then, in that case, the impact for HPCL, BPCL, IOCL may be higher because they definitely cannot increase pump prices at this time?
Yeah, so going by the latest crude oil prices, the pump prices are meant to be revised downwards. So as long as they are able to maintain the pump prices at the current levels, their marketing margins will remain protected. So there is not much of a threat as far as the marketing margins are concerned, as long as the pump prices are not revised downwards.
Deepak, what about the other players? Let's say at Chennai Petro, MRPL, Reliance. Is there an impact on them, do you foresee, because of this differential, or not really?
Yeah, the pure refining companies will face some sort of a pressure because of the soft refining margins. So but the OMCs who are marketing plus
so Deepak, OMCs are fine, but you see a large impact on let's say a Chennai Petro or an MRPL, or it will be contained?
See, now things are not so easy as far as these refining companies are concerned, because there is also an element of inventory profits, losses and gains. So we'll have to wait out for the end of quarter prices of crude oil. So that will have a big impact on the overall profitability. But net, based on this development, there is a reason for some fall in their profitability.
Fair call. Okay. Deepak Jasani, much appreciate you taking the time out. Thanks for being with us this morning. So that's the update on this big news flow around GRMs coming off and what the probable impact could be. Watch out for all of these names. So difficult to comprehend what the exact impact could be, but at least you got a gist. OMCs, maybe the least impacted, though, on a nominal basis, they get impacted by about 14-15% for every $1 drop. Maybe the pure refining companies, the MRPLs, Chennai Petros, Reliance, liable to get more impacted. Watch out if there's a reaction. You should know why that is happening. But you should also try and know why a reaction is happening in cement companies, Alex, isn't it? It's been a rough ride thus far, YTD.
Absolutely. In fact, let's pull up some of the prices of the stocks while Neeraj makes his way to the podium for the editor's cut. We're talking about cement companies because some of the, actually, I would say 3/4 of the cement company stocks have seen quite a bit of a crack in 2024 so far, and that should be on your screen. Let's pull up that graphic right now. The likes of Ramco, the likes of India Cement, Shree Cement, even Ultratech Cement losing about 7.7%. Of course, a lot of that action, I was looking at yesterday's price action, Neeraj, and quite a few of these have lost ground yesterday as well. But I was looking at a few reports just to hopefully set you up for this conversation.
Yeah, sorry, just one correction there. So, viewers, what you're seeing is that the top 4 stocks are actually down in trade. Ambuja and Star Cement are the only ones which have gained in trade. So most of the cement stocks actually have a negative performance YTD.
Yes, and Ultratech Cement is down 7.7% as well. That graphic was incorrect. But while trying to set this up for you, I was looking at the projection for Q4, and while volumes are not expected to dip, there's expected to be an increase in volumes. Pricing seems to be the big concern, Neeraj.
Yeah, so, you know, we're borrowing this partly from the dealer checks that both Investec and Nomura have done, right? And we watch out for these dealer checks happening every month. So pan-India prices for the month of February, Alex, declined by about 9 rupees per bag month on month versus Q3 FY24. Now, 9 is a fairly large number for what usually is a busy construction season or the start of the busy construction season, because in the head up to the monsoon, you expect these activities to be high, post-festive season activities to be high, people have come back, etc. The pan-India prices, in fact, have seen continuous declines. From October 2023, the spot prices are now 8% lower from that peak, October 23 peak. So that is an issue that we have, that cement prices, no matter what companies may be trying to do, are not seeing an uptick.
Yes.
And you rightly said that if one looks at what is in store for the month of March, right, as per both the notes, as per the Nomura note, prices in March have moderated further by 6 rupees per bag, and Investec says that mills have not indicated any kind of price hikes for the month of March. So price hikes are out of the window. Now, the question is, do you see volume growth being so strong enough that it compensates for prices being lower? Because revenues would be a factor of volumes into prices. And when we are not seeing pricing do well, if volumes are also not growing at the pace that one would like them to, is there a case for cement to be constructive? Never mind the fact that we believe that it is a great sector for the long run. In the short term, are there issues at hand?
So, the reports that I was reading, there was one by IDBI Capital that was projecting this post the Q3 results and looking into Q4. 8 to 10% was the volume growth that was projected for the industry. And one would assume that, and this is, of course, you know, accounting for everybody, but you're talking about a significant increase year on year in the fourth quarter, but the EBITDA is likely to shrink based on the prices.
Yeah.
So I guess to a certain extent there could be impact on the bottom line in the short term, but then the top line growth is there.
You know, the confusing thing, Alex, is that for some companies which have gotten efficiencies back into play, like a case in point being the Ambuja ACC duo, and standard disclosure, they are owned by the Adani Group and the Adani Group owns NDTV, but that doesn't matter really. ACC Ambuja have guided to EBITDA per ton inching up. Now, that could be the case because those companies are now feeding on the efficiencies that come in from all the related infrastructure efficiencies that the group brings to the table. So that may be an isolated case. But for most companies who are talking about, let's see what happens in quarter 4, and a significant EBITDA uptick or EBITDA per ton uptick seems so difficult to clock in at a point of time when you're not seeing prices go up. Because remember, Q3, commodity prices or input costs softened quite materially, right?
Yes.
So you could see some of those benefits come in selectively in metal companies, in cement companies, etc. Now they haven't gone further down from those levels.
Yes.
If anything, select commodities have inched up just ever so marginally. But if cement prices are coming down, then how is it that you see the EBITDA uptick? So that might be a question mark. Quarter on quarter. I don't know about the YOY numbers, excuse me for that, but quarter on quarter, it might be difficult to predict that for sure.
Last question from my end, and perhaps I'm sure a lot of the viewers are also wondering this based on the price movement that we showcased at the start. Those last two companies that have moved up quite significantly, I believe one was up as much as 16, Star, and Star is up 16%.
Yeah, again, the East India activity, very, very pronounced there. We know the kind of infrastructure development happening out there, so that could be one factor out there for Star Cement. For Ambuja, like I said, efficiencies coming into play. It wasn't trading at the kind of numbers that, let's say, for example, Shree Cement on EBITDA per ton was all through this day in wholesale. So that is one. But while you didn't ask that, Alex, just one quick word before we wrap up. Yeah, what's in store in March? That's the other thing, right? So dealers had indicated demand was muted in Feb 24. Don't foresee too much of an uptick in March. That's part one. Labor shortages could be a big thing in March. Ramzan, Mahashivratri, Holi. All impact worker availability, maybe production, maybe dispatches, maybe a combination of both. So that's the second piece. And slowing activity this year in particular because of the Achar Sanhita or the election code of conduct. So if that comes into play and the government spend and activity and infrastructure is a bit muted, then what you would have on a YY basis, you might have an issue out there too.
Absolutely. All right. On that note, that brings us to the end of this particular edition of Editor's Cut. Let us know what you think and whether or not this gave you a little bit of clarity on your investments into the cement space. We'll be back in just a bit with setting you up for the rest of, or rather setting you up for the start of trade. Do stay tuned.
Presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Hello. Good morning, ma'am. I'm speaking from XYZ company. Are you looking for a job or a job change? Have you been receiving unwanted calls from spam numbers? Are you tired of being offered new jobs, insurance schemes, or free health checkups? Well, today we will look at an interesting survey report by local circles on pesky calls that received 60,000 responses. Most unwanted calls are related to financial services, 54%, and real estate, 22%. In fact, the report has taken names. 40% mobile subscribers have identified Bajaj Finance as a top offender, HDFC Group as the second biggest pesky caller. The report reveals that 60% of people received 3 or more spam calls on an average day every day, and 92% of people registered on the Do Not Disturb list still get pesky calls. So is being listed on DND working? Clearly not. But the report also recorded a minute relief as per which 6% people don't get any such phone calls. This relief comes after the TRAI directive to banks, insurance companies and other commercial entities. TRAI is the Telecom Regulatory Authority of India. In fact, the Department of Consumer Affairs has constituted a committee comprising members of different regulatory authorities, telemarketing companies and cellular industry to draft the guidelines to address the issue of pesky calls. So yes, pesky calls are still a worry, but there is a little relief too. Can you ignore them though? Toll-free numbers are identifiable, so institutions have found a new way. According to the report, calls from different mobile phone numbers that seem to belong to companies or brands have risen from 29% in February 2023 to 36% now. And look at the change in trend. Real estate selling has risen from 18% last year to 22% now. However, job offerings have decreased from 10% to 4%, and in the case of those selling financial services, the calls have slipped from 60% to 54%. So the bigger question is, Will the nuisance of pesky calls end anytime soon? There should be a system where pesky callers are blacklisted at the Aadhaar level, so they have the risk of not getting a new SIM. Also, brands on whose behalf the contracted callers are calling also need to be held accountable by the Department of Consumer Affairs, so brands institute the right consumer outreach practices both with employees as well as third-party contractors. For more such updates, stay tuned to NDTV Profit.
Welcome back. You're watching India Market Open. A quick look at the implied open before we go on to Agam to set the day for you on the F&O side of things. Improvement, I would say, from what we're seeing at least the last couple of days this week. So muted start again, but in the green. A positive start, maybe some short covering, maybe some recovery also expected. Agam, ahead of a long weekend and on Nifty expiry day.
Yes, so yesterday was a very interesting day of trade. What really happened was that very earlier on, we saw the sharp up move in the bank Nifty. And the expectation was that it will eventually come off because the Nifty was trending nearly in the red throughout the session. But it just so happens that we saw the reverse coming through. And well, following the bank Nifty, we saw the Nifty move up, which means there was strength in a lot of the other pockets as well towards the last 2 hours of the trading session yesterday. And that has eventually led to the Nifty advancing and closing at a new life high. And this time around, after 3 straight sessions of no change in open interest, we are now starting to see traction there. So a 9% increase in OI there as well. As far as the bank Nifty goes, well, we do know that it was essentially the private sector banks which continue to give strength through the course of the day to the bank Nifty. It's not at a life high, but it is inching towards that mark. And we did see a little bit of unwinding coming through as well. So a lot of your old shorts perhaps were covered through. Well, in terms of the options market, today is the weekly options expiry. It's a very broad range. This is, of course, just the change in open interest. But in terms of the range, as I was mentioning, right at the lower end, we're seeing maximum open interest in the 22,000 put. You know, it's at the moment, it does seem very unlikely that we're going to go all the way till there. I reckon at the moment, we're going to see a little bit more continued resistance, or pardon me, support around 22,200, 22,300. And on the higher end, sure, a lot of people have written the 23,000 call, but they've all taken advantage of the sharp move on the Nifty in the last 1 hour of trade. But these options are anyways very, very contracted. I reckon in the near term we will, and today specifically, we will likely see some amount of resistance around 22,700, 22,800 and thereabouts. If we do see substantial strength on the Nifty 50, that said, 22,500 continues to be one level that is going to be a hard one to take out, but you never know. If we do see a very strong opening, things just might change. Now, this is as far as your option markets are concerned. In terms of stocks, we saw a lot of shorts in MGL, IGL, and we're likely to see a little bit more weakness in IGL as well, considering they have gone ahead and taken cues from MGL and also cut pricing there. Samadhan Motherson, of course, on the back of block deals, Ramco Cement and LD Finance. In terms of stocks which are unwinding, we largely saw short covering only in Muthoot Finance. Save for that, Tata Motors, BHEL, Interglobe Aviation, BPCL looking at longs unwinding coming through. But the real question is that how do you address the Nifty today on a weekly options expiry day, even as we move into a long weekend because tomorrow is a trading holiday? Well, let's get in Shilpa Rao, the Prabhudas lead other, who's going to be joining us right now. Shilpa, good morning and thank you so much for joining in. Firstly, your view on the benchmarks, the Nifty and the Bank Nifty, how would you trade them?
Good morning, Agam, and thank you for having me on the show.
talking about the indices, we are seeing Nifty soaring, to new all-time highs, session after session. And yesterday was just a breather, like we always talk about, a good run-up and, couple of sessions, consolidation, a small breather is always, benefiting, for this health of the index. So you will see again Nifty hitting towards 22,000. This is what I believe. Even I believe, when we talked about the rollovers at the end, at the start of the series, this is how we talked about that Nifty is well placed for 22,800 to 23,000 zones. So this is the view stays intact. Nothing is changing. The FI's net long still at 40%. So they have not, dipped much also in this breather. So I believe the trend is still positive. And once they go longs above 45%, I believe, the upside scope for them to, extend their net longs will be around 60 to 65%. So in that regards, 22,800 to 23,000 levels for Nifty will definitely come in. Talking about Bank Nifty is better placed and more strong on databases than Nifty. Bank Nifty is definitely heading towards that 50,000 mark that we have been talking about.
All right, potential of the Bank Nifty to move towards 50,000. That also means that, of course, it'll take out a life high. But Shilpa, in terms of stocks and ideas there, what are you tracking?
I have two buys. The first one would be a buy in BEL. BEL trading at around 210 zones. It has given that breakout above 200 and it is, holding quite well. Even if you look at the option chain, the 210 put writers are very, very active and that is where the close has been happening for the past 3 sessions. So I believe now it is time for the stock again to show a breakout and move towards 230 to 235 zones. So there's a way to play this. I believe 215 call. It is trading at around 6.5 rupees, and you can sell 230 call, which is around 4.5 rupees. Sorry, 2.5 rupees. So the net outflow for the trade would be around 4 rupees, and the upside potential of around 11 rupees from here. So the maximum loss that one can incur here is around 24,000 rupees, but the upside potential of profits zooms up towards 65,000. So the very well risk reward favorable trade here for a bull spread in BEL. The other one would be a buy in Axis Bank. Axis Bank also is holding very well with Bank Nifty showing so much of strength. I believe Axis Bank is definitely heading towards 1180 to 1200 zones. So as long as it is holding 1090, I believe the stock is very well placed for that upside rally.
Okay, so there you have it. Two positive calls. One is on BEL and the other one is on Axis Bank. Of course, BEL, remember that we have another broking note, UBS, and they have also revised their price target there to about 257 rupees per share, which on a fundamental basis in the long term also involves about a near 20% upside. But on that note, Shilpa, I'm going to take a moment to thank you for joining us and taking us through your views on the markets as well as giving us a handful of trading ideas. And with that, it's back to you, Neeraj.
Okay. Thanks a lot for that, Agam. So, well, those are some ideas that you got to keep an eye out for from a trading idea. Remember, between 8:30 and 8:40 every day, Agam talks to one expert for the outlook on the markets as well as specific option strategies that you can enter into. Please follow these strategies for a few days so that you also get a hang of the kind of conversation that Agam does with the guests that he gets, so that you have an idea of the kind of stuff that we're doing here. Just a request, because options isn't the easiest thing to execute. Now, what is also not easy is trying and figuring out what are the key stocks that one should watch out for in a given day, simply because the list usually is very large. Mahima does a fine job of picking out the 2 or 3 or 4 which might be the most relevant on any given day. Mahima, good morning.
Good morning, Neeraj. So today's topics would be first one, GPT Infra, where the company has received an order of 135 crores from the Railway Ministry, and this will be concentrated to the Northern Central Railway in UP. And the contract is a JV between two companies, so 51% stake will be for GPT Infra in this. Then we have Hindustan Aeronautics. Well, the company has signed an amendment in their LCA IOC contract. Well, the contract value has doubled now. Prior to this, it was 2,700 crores, and now it has been revised to around 5,000 crores. Talking talking about the recent order wins, they also had a recent order win of approximately 5,200 crores for supply of RD-33 aero engines. And if we talk about the stock performance, well, the stock has been a multi-bagger for 2023, and in the past 1 month it's been up 10%, and 6 months it's been up around 60%. Now talking about moving on, third stock that is on my radar today is Asian Paints, where the company has entered into a agreement with Gujarat Chemical Ports, and this is for setting up an ethanol storage and handling facility in Dahej, Gujarat. The cost of this facility is approximately around 2,100 crores. So these are the three key stocks to watch out in trade today.
Okay. So watch out for some of these. Now, remember, a 2,000 crore manufacturing facility announcement by Asian Paints, I think came in 2-3 days back as well. So keep in mind, because of the aggressive entry of Grasim, you'll probably keep on hearing sporadic announcements by everybody else in the ecosystem as well. But I must say, for all the scare around Asian Paints, when the event happened and the stock corrected for 2-3 days, just keep in mind the stock is corrected so much for the last couple of months that it's now stabilizing at around this 2,800 odd levels. So that's to be kept in mind. But without much ado, let me get in one more special woman. Soni Patnaik, AVP JM Financial Services, joins us right now on the show with her thoughts on how do the markets look and what could the way ahead be. Soni, great having you. In advance to you and your team at JM, a happy Women's Day. You guys are doing an amazing work. I would love to know how you guys are thinking or how you are thinking about what markets could do in the session today ahead of the long weekend.
Good morning, Neeraj. Thank you so much for having me on the show, and thank you for the special wish. I think on just that note, I think every day should be Women's Day. And just talking about the markets, so Nifty has given a good breakout yesterday. It was consolidating. It was struggling to break out above 22,400, 450. That range, it has broken out yesterday with the support from Bank Nifty and IT as well. So today being the weekly expiry, the weekly expected expiry range for today is somewhere between 22,450 to 22,600, 650. There's a significant shift of open interest on the put side. The highest open interest has come up to be 22,300. So in short term, 22,300, 22,200 holds as a very crucial, important support band. As long as that support band is holding, you can see 22,800, even 23,000 can be on the cards. Similar for Bank Nifty. Bank Nifty is looking quite strong. It has, given a breakout above 48,000 yesterday. It broke, although the closing was below it. But Bank Nifty is, definitely poised to take out its previous all-time highs around 48,600, and any move above that, you can see 49,500 plus levels as well, which can be on cards. Bank Nifty has multiple support. You can see, 47,500, 47,000, very strong support. So I think Bank Nifty structure is slightly better than Nifty at the moment, and most likely Bank Nifty can lead the next leg of rally.
Soni, very good morning. And I also want to welcome Amisha Vora. You're right. Both of you all are right. Every day should be Women's Day, but we are making a special effort to focus all the talent there is, out there, especially in the markets community, which sometimes goes under the radar. So hence, great to have both of you on this show today. Amisha, let me start with your take on, the gas pack. We have a clutch of notes today, and in fact, Motilal Oswal is quite positive on it. City gas companies, what kind of a play do you think there will be today? Mahanagar Gas and Indraprastha, both of them took a massive knock yesterday.
When you open up a sector which is, their absolute kind of a monopoly, definitely there is going to be an impact. I would say that because they are very well established, it's going to take the competition a time. And finally, it is going to be good for the consumers. But in the process, these stocks can take little time who are losing their monopoly. But important part is that even stocks like Gujarat Gas, which is not into city distribution, but more into commercial distribution, there the competitive fuel prices are going up, and gas is becoming competitive again. So I think these stocks will have a better future because of better unit consumed by the commercial units. So there will be a transition within the gas pack, which is what we will see going forward.
Got it. Amisha, Neeraj here. Good morning.
Hi, Neeraj.
We're seeing you after a while. In fact, probably for the first time on NDTV Profit. Is it my imagination or are you looking younger?
Thank you.
Amisha, the markets
There
might
is no
make...
better compliment on Women's Day than this.
no one better than to know how to give compliments than Neeraj.
No, but we are seeing Amisha for the first time on the channel.
Yes,
so I just,
absolutely.
I'm seeing her on TV after such a long time. So that's the key
true.
thing. Amisha,
That's true.
Just the broad sense, we got this sense from Sony as well about how does the market mood look. I'm just trying to understand the last few days. The texture seems to have changed in that small caps and mid caps are taking it on the chin, while the Nifty maybe, even if the Nifty is stable,
holding back.
Yeah, would you reckon that to be the case going ahead, that index might hold out, but the small caps might be under further pressure?
Yes, that looks to be a trend, which is where the mid caps, small cap will give in or consolidate. And see, most of us, we knew that mid caps, small caps did exceedingly well. I wouldn't say they were in absolute froth space, but quite a few pockets were showing little excesses. And we have seen in the past many cycles that when this upcycle is pricked, then there is a little cascading impact which one sees. And probably we are seeing in last 4 or 5 days or a week, that kind of impact being setting into the small cap and mid cap. So for some time, we think that the weight within the portfolio of large cap and Nifty could be higher because they will hold steadier in the portfolio as compared to large cap, as compared to mid cap and small cap.
Got it. Okay. Amisha, the other aspect is the way the market is discounting bad news. More than 40-45% drop in IFL Finance in 2 days, and that was the extent of the impact believed. Gas companies, 15% taken in 1 day. That was the extent of the impact to be believed. There was a thing about this wind energy companies and how they have gotten derated after having such a rosy picture and outlook for the next decade. But 4 days on a trot, a lower circuit, derated. Is the market in the mood for taking out all bad news with venom, like with a strong stick in a session itself?
So it's more something like this, that they saw what happened from the IFL JM perspective. I'm saying that they saw what happened in Paytm and the extent of damage that it could do. So that's why I think the fear factor was really too high in the rest of the two actions which happened by RBI. And if they stop, for example, or even if it will be 1 over, gold finance, but that is the heart line of the business for IFL. So I would say that actually has an impact on their business. But coming back to even gas companies, an overall trend, when you get to pay the M2M or margins, you become very jittery. And that is the time when you decide, okay, there is a bad news. First, let's get rid of this. And that is a kind of a psychology also which is playing out, where bad news is truly pronounced because the rest of the markets are showing a kind of a corrective mode and there are payments that people might have to do.
Absolutely. Amisha, once again, so fantastic to have you here on Women's Day. And the fact is that there is so much talent out there. We need to showcase it as channels, as platforms, and we're hoping to do that today. But coming back to what is happening in the markets right now and the kind of nervousness we are seeing, what in your view is the play? A lot of people are sitting today, perhaps watching this, looking at their portfolios and saying, yes, I have bet on the India story. I know that this is the fastest growing economy in the world, but right now my portfolio is not looking too great. They've been hammered on the small and mid cap stocks. Is this the time to rejig, look at your larger players, and if so, which spaces are looking the best to you?
See, I would say that 50-55% plus allocation should go back to large caps, whether it is only Nifty or little outside Nifty is okay. And within that space, I would continue to say that private banks who are showing very healthy business trend, but have not quite equally participated in last 12 months, should find a good place. Of course, ICICI Bank continues to be one of the top picks, but rest one can choose within the private sector pack. And to some extent, you say within BFSI, HDFC life insurance. So insurance pack also can come in because they went through a full set of pain, which was there because of the last year's change in IRDA policy. So the base effect is now factored in post-March quarter, which is still going to be impacted by the last year's changes, which is the last quarter. First quarter onwards, we will start seeing growth. So this stock again, sector, the life insurance, will be back in action in the new financial year. And so also I feel that in the large cap infrastructure play, Larsen continues to look really very good. Because of the overall economy where things are falling in place, they will be one of the well-placed. So from large cap perspective, we continue to remain with private banks, infrastructure. It's not only Larsen, but Siemens also, auto and insurance as 3-4 key areas where portfolio should be. And I would still say that selectively, mid-cap, small-cap, after this particular round of rout, will continue to do well. I don't think it is all over as yet, and this party will continue for much longer.
Just want to take a quick word from Soni for her picks of the day, which we usually do around this time. You spoke about levels, Soni, and obviously happy Women's Day in advance. Great to have you on the show as well. But what would be your top picks for the day?
So the first pick would be HDFC Life. We've seen a significant breakout above 600 level 2 days ago. It held well even in yesterday's choppy market. That's a very strong support. There's an option chain breakout as well above 600. So HDFC Life be the first pick. Buy at current levels with stop loss of 600 and target of 660. The second pick would be in Axis Bank. Axis Bank has seen aggressive short covering yesterday. There's a breakout on daily charts as well and an option chain breakout above 1100 level. So Axis Bank, you can buy at current levels with a stop loss of 1090 and target for 1200.
All right. Axis Bank, of course, is one of the picks Soni has, but a lot of news flow today and so many stocks to cover. Anushi is joining us with some key stocks which may see action today, as well as the bulk deals that mean that we need to keep an eye on this list for the day. Anushi?
Right, Tamanna. So two large trades that we need to be focusing on today is one is NLC India, wherein the government is selling up to 9.71 crore shares, which represents about 7% equity. So this includes about 6.9 crore of shares, about 5% stake, and an additional green shoe option of about 2% additional stake. The floor price for the same has been set at rupees 212, which is a discount of about 6% compared to yesterday's closing price. Now moving on to a major one over here is M&M, wherein promoter Prudential Management is offering up to 93 lakh crore or 93 lakh shares for sale. This showcases about 0.75% of their equity for to raise up to about 1,832 crore. The price band for the same is in the range of 1911 to 1970. So if we have to look at the upper band, that is about a 3% discount over here. Do note that Prudential Management holds about 11.6% stake as of December 23, and in the press release, M&M did specify that they are not planning on any more stake sale. So these are for today, but if you come to yesterday, there was Zomato which was in focus, wherein Antfin Singapore Holding sold about 2.04% of stake at rupees 160.4. On the other hand, we had Morgan Stanley Asia picking about 0.66% stake at a price of about 160. So Zomato did close about 2.5% lower in yesterday's trading session. So it remains in action for today. And lastly on the list is RBL Bank, wherein Matthew Sarek has bought up to 32.5 lakh shares, which showcases about 0.54% of equity. So these are some of the key highlights in the stocks that we are going to be focusing today.
Right, Anushi, one more large trade to add to that list, flashing on your screen as well. 4.9 crore shares have been, sold for Bharti Airtel, changed hands in pre-open. That's about nearly 1% of equity. So Bharti Airtel, another one to watch out for. We'll take a very short break, but we'll be right back with our pre-open session, our fantastic guests for the day, and a lot more. Stay tuned.
Electoral bonds have been deemed unconstitutional by the 5-judge Supreme Court bench headed by Chief Justice D.Y. Chandrachud. They were first introduced in 2018. An electoral bond is a means to fund a political party in India while maintaining anonymity. These bonds are available in multiple denominations ranging from 1,000 rupees to 1 crore in specified branches of the State Bank of India. This was introduced in the system to maintain transparency in political funding via a banking network and reduce black money. But on the flip side of this intention, questions have been raised on the basis of an important fundamental right of democracy. That's right to information. Is it constitutionally right to keep the source of political funding discreet? Why shouldn't the public know who is funding how much money to different political parties? As per the findings of Political Party Watch, a program under Association for Democratic Reforms, 28,030 electoral bonds worth rupees 16,618 crore was sold between March 2018 and January 2024. The Supreme Court's unanimous decision follows a petition filed in September 2017 challenging the Finance Act 2017, which introduced the electoral bond scheme for the purpose of electoral funding. The Act has also removed the previous limit of 7.5% of the company's average 3-year net profit for political donations. The Supreme Court has asked the following corrective actions to be taken immediately. State Bank of India will need to stop issuing electoral bonds immediately. SBI will have to submit the details of
Back with India Market Open right here on NDTV Profit. A quick check at the implied open and you will see a small bit of an uptick. But frankly, that won't matter as much because what will matter is what happens at the broader end of the spectrum. So I think you need to look out for what's happening at the mid cap and the small cap end of the market to take notice of that. I want to take the conversation back to our guests. Amisha, I'll come to you first. Now, maybe I missed it, but I heard you refer to the instances that happen in JM, in maybe in a Paytm, maybe in IFL Finance. I just want to understand from you, when I take a look at both the instances, at least IFL Finance and JM, objectively, the price erosion that has happened in these businesses kind of makes up for the business loss, more or less. Now, my question is, I'm not asking you to make a specific comment because I can understand they are in the same field as you are, but I'm just trying to understand from you, when you think of instances like these, can you look at these things objectively and say that for a long-term investor, maybe these are good times to buy? IFL Finance yesterday, for example, saw some serious delivery-based buying as well, despite the fact that it was on a lower circuit. The volumes were large.
So yes, I would say that these are more like an institutions, both of them. Even if there are certain irregularities, they will correct it and make sure that they get complied again. So it's a question of time that over a life of an organization of say 30, 40, 50 years, there could be a patch of 1 year which will slow down or which will go into correction. And particularly for Jain, this is just one of their businesses. The rest of the all businesses are doing so well. So one part of the business has got compliance related issues, which they will correct, I'm very sure. So I do agree with you that from a very long-term perspective, both these franchisee can be looked at.
Okay, fair call. The other thing, and actually, Sony, it might be difficult to ask about technical views on some of these or derivative views on some of these because they've been locked on a circuit only. But banks yesterday, Sony, had a good move, right? So are there banks that are a part of your buy list today? I'm talking about financials by and large, but banks in particular. I don't know if you gave a bank idea as a stock idea, but if not,
Axis.
is there Axis? Okay,
Yeah.
okay. So I stand corrected there. Axis is one good name. Anything else? HDFC Bank had some fairly interesting moves too yesterday.
Yes, definitely. I think apart from Axis, we can see ICICI and HDFC Bank looking quite good on charts and derivative data as well. So I think if you look at HDFC Bank, it has taken good support from 1400, 1420, which was acting as some consolidation resistance. It has broken past above it, and going ahead, we can see that it can test 1480 to 1500. Of course, this is more of a positional play, but if for the short term on charts, it looks like that the correction that had happened in HDFC Bank is mostly done and dusted, and this could be the reversal from here on. So it's looking quite strong to play for a short-term trading perspective, and look for targets of 1500 plus. Also, it can test, but the first target definitely will be 15.
All right, just a few seconds to go for pre-open rates to hit. We'll see a bit of volatility in the first few seconds, but a couple of more stocks that maybe should be on your radar this morning. BEL, one of them. There's a UBS note out on it. They've reiterated a buy on BEL with a target price of 257 because of their sharp new order accretions in FY24. I would watch out for a Pratap Snacks as well. They've put out a clarification on media reports of GST action against them and have said media reports are baseless, factually incorrect, etc. So that's one to watch out on. I would watch out for an MGL, a Mahanagar Gas. Let's just quickly see what Mahanagar Gas is doing in the pre-open session. There's a Nuvama note out that has reiterated a buy on MGL. So after that drubbing yesterday, you're seeing very, very mild upswing. I mean, these rates really should be taken with a pinch of salt, but the Nuvama target is at 1601. On all of these. Amisha Vora, I want to come to you on what you would do with your PSUs right now, and we'll talk about PSBs, public sector banks, as a separate bucket in just a bit. But this is one space which I would say after decades has now got the confidence of investors that these companies will perform, their balance sheets will be cleaned up, that profitability and shareholder rewards and shareholder value will be one of the priorities. Do you think that that sentiment, that positive sentiment, is now completely priced in? Or is this a space which is one of your key sectors, say, for this year?
See, PSU as a pack, having gained the confidence of all kinds of investors, whether it is UHNI, AIFs, or even mutual funds and retail, I think that as a trend that will continue. Within that, if defense is doing very well, then defense stocks might do much better. Or if there is some other pocket, for example, some refinery stock, MRPL or something, then they will do well. But overall, they will have one thing in common, that because they are PSU and they are untouchable because of the management and capital allocation issues, I think that will be behind us. And they will also participate in line with what growth prospects that they are holding.
On the public sector banks and Sony also spoke to some extent about the banking space that she likes. So would your bet continue to be, Amisha ji, on public sector banks? If so, which would be your top picks in this space?
Public sector banks will also continue to do well, I believe, both because of the overall macro and the micro in which each of the banks are operating. SBI still has a lot of legs in terms of investor returns. So SBI within the PSU bank will continue to be one of the top picks because of the kind of valuable subsidiaries, apart from one of the very niche, technologically advanced public sector bank. Their subsidiaries like even SBI Mutual Fund, SBI Life Insurance, SBI Cards, and so on, General Insurance, are all very, very valuable. Apart from that, I would think that Canara Bank continues to look good. And beyond that, I think most of the other public sector banks are also, in terms of asset quality, coming back big time.
Amisha, somebody made this interesting point yesterday about how indices have gone through change in weightages and what could happen to specific indices, and could real estate as an index come back? It used to be 7% weightage on the index. Now it's about 1.2% even after the rally. Are you constructive on real estate stocks, part one? And part two, if so, I mean, is it pan-India players? Is it regional players? What is it that you like?
So real estate as a space, I continue to remain constructive. Of course, the trend started just after COVID, when a huge confluence of very low, index of home buying in India compared to its last 15 years helped push the demand. But after having said so, we still continue to remain bullish because this is the time when again land has and the construction ability, development ability has become critical and there is sufficient demand. So the working capital cycle has crunched within the industry. Return ratios have improved. And I think this trend has made the balance sheet of most of the players very, very healthy. Plus, some of the large players are sitting on huge land bank, because of which their ability to keep churning out this cash continues to remain for a very long time. So yes, I remain constructive on the sector. But I also feel that instead of a very large all India player, pick and choose of the right player within the geography will be a better strategy.
You know, Prestige is having a good day. They've announced a new project as well, so a bit of news flow over there. But that stock 1% up in the pre-open session. Okay, slew of brokerage calls this morning. My colleague Harsh has the list of the ones that are the most important. Yes, Harsh?
Well, let me first start off with Phoenix Mills. HSBC maintains its buy rating, target price 3130. They believe that Phoenix has successfully executed its 3.0 strategy. 5 malls added since 2020. They're expecting 2 more to be added over the next 3 years, thereby making Phoenix the largest mall operator in India. But not just that, they believe that Phoenix in the bargain has done well to keep leverage low and to churn cash very well across their malls. Margins of roughly 13 to 14% are quite solid even for the new malls, and that is impressive for them. They're expecting a high double-digit earnings growth over the next 3 years, and they're expecting free cash flow conversion to be quite strong as well. EV to attributable EBITDA at around 25 times is what they evaluate for FY26. They're expecting a 16% EBITDA CAGR over FY24 to FY27, and they've given it a valuation of 3130, which is a tad bit below peers currently at least. Quickly moving on, UBS on BEL reiterates a buy. Target price 257 from the earlier 205. It's a sharp increase in target price. They believe that earlier problems were with regard to slower order book accretion. That's been a key concern, but now the new order run rate is quite strong, and that's going to be the key catalyst going forward as well. There's been a sharp new order accretion in FY24, and they're revising their top line estimates. They believe that there is an upside possibility to top line estimates. Currently, consensus has built in a 14% top line growth both for FY25 and 26. They are expecting that to be revised upwards as execution, they believe, is going to be strong. largely on the back of just the way in which the Ministry of Defence is evolving with regard to order demand. They are expecting execution run rate, cash flows to therefore be important parameters, and they expect improvement on both of those fronts, maintaining a buy at 35 times price to earnings versus the 30 times earlier. So they've revised their PE and they've changed it and they've revised it for March 26 estimates. 257 is the target price there.
Okay. Harsh, thanks for bringing us those notes. So watch out for BEL. Excuse me, no major reaction at least on that stock. So bear that in mind. But the pre-open rates have settled, and as the pre-open rates have settled, we're about what, maybe 0.2% higher for 0.14% higher for the Nifty. I was trying to look at stocks which have corrected in the session today as well. So both Suzlon and Inox continue to be lower. I must say the Network 18 and TV18 twins for the last 5 sessions now are on a lower circuit. Network 18 is down 5% yet again. From a price of 110 or 115 when the deal got announced, this stock has been clobbered out of shape and is now at 85. So watch out for those. And watch out for cement. We were talking about how cement stocks, in editor's cut, we were talking about how cement stocks have had a bit of a pullback. So Dalmia Bharat is down 3.5%. Star Cement is down another 2.5%. So there's some bit of pressure on that cement pack as well. Sony, the YTD performance of the cement stocks has not been great at all. Do you see some downsides there? Because I was looking at the YTD performance, except for Star and Ambuja, most others have looked wobbly.
So, Neeraj, if you look at from the data perspective, there has been some selling pressure for the entire pack, in the past 2 or 3 odd days. However, this is on contrary note to how the rollovers had acted out for the cement space, from the Feb to March series. And it was actually indicating at a long rollover. So maybe this entire pack could see some continuation in the selling pressure. But however, this also remains as a buy on dips. I think a lot of stocks, if they can give another 5% max correction, then that could act as a good level to reinitiate longs, at least in a few quality stocks, which we can see from the data perspective. In Ambuja Cement, ACC, you can see these stocks can at least bounce back. So, there are a lot of support also. They've not tested those support. So I think Ambuja 580 is a good support, 580, 575. If it's able to hold that support, it should definitely bounce back and then head again towards 620 odd levels. I think these are some of the stocks that we can still look at on the entire pack.
All right, just a quick look at the Feb sales data that has come in from FADA. That's at the dealer level, and especially for the passenger vehicle segment. This seems to be the highest sales year on year in the month of Feb, where total auto sales have risen to 13%. Auto is going to be on the radar as well. Amisha Vora, I wanted your take on not just auto, but on Tata Motors too. With the whole demerger buzz around it, there's a Moody's, rating and a Moody's note as well. How do you look at this space, and is it safe to say that Tata Motors will be the pack leader in the PV segment at least?
So on an overall basis, yes, Tata Motors will continue to chuck along very well with the increased focus that individual demerged entity will have to pursue their own individual goals. And the stock has, from COVID, almost has been a 10-bagger. And I still feel that they will continue to do very well. Each of their segment actually is doing very, very well. And the fact that they are demerging shows that within the EV business also, and passenger vehicle business also, they're seeing so much strength that their capex requirement or cash flow requirement will be met by that individual business and will not have to lean on to commercial vehicle business, which always has been the case in past 10 to 15 years. So I do believe that from here on also the story will continue.
So the Tata Motors story will continue, but within the pack, what would be your big bet, Amisha, on the two-wheeler and the four-wheeler space?
Hero Motor is one of the stocks that we've been recommending. And overall, when you see the four-wheeler pack along with four-wheeler pack, we believe from the listed space, Tata Motors continues to be one of our top pick currently.
Okay, so Tata Motors is your top pick, and of course Hero Moto in the two-wheeler space. Sodhi, I'm going to ask you, your take on the auto pack and what are you liking over here?
So from the auto space, the first pick would be Maruti. We've seen a significant, move in Maruti in the last series as well as in this series, and it's holding above a good breakout level above 11,200. So as long as on short-term perspective, 11,200 is getting defended, it can definitely head towards 11,800 to 12,000. Stock is looking quite good. A small decline would be the right amount or the right level to just enter. Somewhere around 11,400 should do the trick, and keep your stop losses at 11,200 for a target of 11,800 to 12,000. So this would be the first pick, and the second pick would be in TVS Motor. We've seen TVS Motor in a continuous uptrend, and any small correction, any small decline, it always turns into a good buying opportunity. It has given a very good breakout above 2,200 level. So any small decline that one can see in TVS Motor towards 2240, 2250 should be a good level to reinitiate the longs. Keep your stop losses at 2,200. The stock can test 2,400 in coming days.
Okay, well, the market's about to start. Take a moment to thank both of you, Amisha, Soni. Thank you so much for joining me today, and have a fabulous weekend. And thanks for making our morning special with your presence. Well, it's the penultimate day to Women's Day. Let's see if the market salutes that. Well, ideally it should. If I was Mr. Market, I would certainly do that. Let's see if Mr. Market actually does that or not. 20 seconds left for the markets to kickstart. Watch out for the oil and gas majors. We haven't seen a substantial move as a result of those GRMs coming off. Will that happen? I think let's wait and watch. But we haven't seen a substantial move in the pre-open session. What we've seen a move down is on these wind energy companies, Inox, Suzlon, etc. So they continue to sulk. The media companies continue to sulk. Maybe banks will give a bit of a relief to the large caps. For now, starting off about 31 points in the green for the Nifty 50. Bring up the Bank Nifty and see if the banks are performing well. Well, no, today is a bit of a flat day, but we are no longer at 46,500 support levels. We are at 48,000. So it's a good going really for the banks in the last few days. I wonder if Nifty IT, today there's a Morgan Stanley which is contrarian and contrarian to the others and is positive. Mid caps are constructive, Nifty IT is flattish, and small caps, the ones which have been taking it on the chin. Voila, today there's a bit of an uptick, so not a bad start for the small cap space. Let's get the heat map up on the screen. This is the most pleasing number. Let's see if this lasts. More green than red. Let's talk about the winners first. JSW Steel about 1.7% higher, ONGC 1.18. There is Hindalco. So metals are making a bit of a comeback. 2 days or 3 days on a trot. They've been beaten down. Today trying to make a bit of a comeback. As is Power Grid, by the way, up. Tata Motors, Amisha Vora's top recommendation as an investment idea, up about 0.89%. You would ask what happens to a stock after it's gone up so much. Well, Tata Motors continues to rise. What else? Adani Enterprises yesterday was down. Today about 0.7% higher for that one. There's strength in Bajaj Auto, Sun Pharma. So those are a few names that are looking good. What is not looking good? M&M, but this is a technical thing, a deal-backed thing. Doesn't alter the fundamentals in any fashion whatsoever. Wonder if this will be short-lived. Some bit of mixed bag performance in IT. So Infi and TCS continue to grind lower, and Reliance is looking slightly soft. So from amongst the large caps, and I don't see any of the others like BPCL on the list of losers. So the GRM downtick, Tamanna, hasn't had a dramatic impact from the looks of it. But for the fact that Reliance is down 0.5%. Oh, cement is looking wobbly.
Yeah, cement as well. But also I'm looking at the fact that your indices are at record highs or have hit record highs on opening and have stayed pretty much there. So that is good going. You're not going to have maybe huge moves in a market like this. And we've seen that consistently. It continues today as well. Specific stocks that we should watch out for: BEL. We spoke about that. A UBS note on BEL, reiterated buy with a target price of 257. So let's take a look at how BEL is performing this morning. About a percent and a half up in the green. Not too bad at all. Prestige Estate Projects was the other one on our radar. They've launched a luxury residential project in Whitefield, Bangalore. So very tony neighborhood of Bangalore, 2% up. Pratap Snacks had a clarification out on media reports about GST action. So that's talk about 1% down, but seems to have contained the possible fall. Mahanagar Gas is the other one. A Nuvama note out on Mahanagar Gas. And remember, it had a huge hit yesterday. It's still down after the pre-open rates showed it with a bit of a positive upside, but not down massively, about 0.5% at this point. Phoenix Mills also on the back of a brokerage note about 2.5% up, and Sirma is the other one which is seeming to have a good day because of a brokerage note. So these are some of the pops over there, but it's fair to say that this is not a market going over the top. Careful plays over here, and we've seen that range bound trade continuing, but the trend, the trajectory is upwards.
Yes, it is. And I'll tell you for what the trajectory is upwards. Before we get to Ameera Shah, she's our special guest joining in. IIFL Finance is up 8%. So after 2 days of being down in the dumps, this one is up 7.5 to 8%. Very strong move there. By the way, Inox Wind Energy and Inox Wind, I want to pull them and see if they are also in the green by any chance. It's not on a lower circuit, which is maybe a respite for Inox Wind. Inox Wind Energy incidentally is in the green. Suzlon should come up on your screen. Is that in the green? So that's the other one. JM Financial, Suzlon is up 4.5% by the way. JM Financial should come up on your screen. Was down about 10% or 11% yesterday, up 2.5% today. So good move there for JM Financial as well. So those are a few names which have been beaten down in the last few days are coming up. And lastly, Tamanna, Mark Tawa's Financiers, very interesting move there, up 2.5% today, was up yesterday after all that's happened in the city note yesterday. Was up yesterday, is now adding on to the gains, 3.5% higher for this one. So do keep a keen eye out for this stock as well. And then we will talk about diagnostics because that's a space that is very interesting, and we got a very interesting management joining us.
You know, the great thing about celebrating Women's Day is that we're getting the opportunity to speak to all of these great leaders and superb leaders, because of this. So Ameera Shah, thank you so much for joining us. She's Managing Director and Promoter of Metropolis Healthcare. And of course, since the occasion to mark is Women's Day, let me start with just setting that context and how crucial and important it is. Of course, you have been completely a role model for many women entrepreneurs. So let's start with a message from you on that, Ameera.
So kind of you guys, and of course, happy Women's Day to all of you who are watching today. I think earlier Neeraj mentioned something about Mr. Market. I want to give a different opinion. I think it's Mrs. Market.
Absolutely.
I take on board. Ameera, excuse me, it's just the commonly used acronym, but I take on board. I rename it to Mrs. Market from today, from my end at least.
But I'll tell you why. Our finance minister is a woman. Our SEBI chairperson is a woman. There are news articles talking about how more women independent directors on boards, increase the corporate governance of companies and actually land up creating far more shareholder value over long term. We'll see women-driven companies who are actually performing exceedingly well. So I think it is the time, for us to change this common popular acronym to maybe making it more balanced and maybe more female-oriented also. But look, I think it's a good time, I think, for women, in India. Great opportunity to keep investing in the financial markets. This is a completely democratic space. Nobody looks at your color, your skin, your gender, your sex. It's just who you are and what capabilities you bring to the table. And financial services allows you to really be able to create your own wealth, your own financial empowerment by using your skills and the amount of knowledge available, through you guys as well as others. In public platforms to learn skill sets on investments, I think are fantastic. So I think this is an area that women, even if they're sitting at home and not able to go to jobs for logistical reasons, I think this is an area that each woman must pick up and really build her own financial wealth and portfolio and empowerment.
Absolutely. But, the important thing is that at the end of the day, women want the same opportunity and want to be treated the same as everyone else. So now that we've had that comment from you, we're going to come back to business and how your business is running, Ameera Shah. And completely, Mrs. Market has also treated the stock well. Now, I want to understand overall what the competition is looking like? Metropolis has had, quite a dominant position, at least in the Western region, Mumbai, etc. You have more and more online players coming in. Can you tell us your sense of how you're navigating the landscape as competition heats up?
I think, I think in India, you're always going to have new players coming in. There's no dearth of entrepreneurship. There is no dearth of money. There's no dearth of, interest to invest. So I think that's always going to be a case. But I think there are certain industries which are non-commoditized, like healthcare, where actually your expertise, your real ability, your precision, specifically in diagnostics, all of this plays a really important role in your becoming a leader. And we have not become leaders in our industry by fluke or by simple distribution and marketing, or just product releases. That's more FMCG. In our business, we've become leaders because we are really experts at what we do. And we're able to hone that culture, that DNA, that purpose every day and demonstrate it to doctors all across the country, as well as to consumers and patients every day. When they come to us and trust us, when they're at their weakest and most anxious with cancers and strokes, you know that somewhere there is that trust which cannot be easily built by somebody else, or it cannot be easily broken with Metropolis either. So I think our right to win stays very strong. I'm very comfortable with the structural growth story for Metropolis in the next few years, very comfortable with where we'll be able to perform and create shareholder value as well.
Just going back to, the last set of numbers that we have, Ms. Shah, you had a bit of hit on the EBITDA margins. Of course, there were a couple of reasons for it, but there was a bit of pressure there. You have a network expansion strategy. We'd like to know more about that. You had a one-time impact because of your doubtful debt provisions. Can you give us a sense of whether those headwinds are now behind you?
I think certainly. I think, 2-3 things which are going to be drivers for margins. See, we have to remember in the year 23-24, in the first 9 months of the year, we didn't take any price increase, unlike some of our peers, and our growth was actually solidly volume driven. We had almost a 9.5% volume growth in the first 9 months, which really outpaced the market, the industry quite significantly. And plus we had, a revenue per patient growth, and plus other things. So overall, the revenue has been quite significant in the double digits, for the first 9 months of the year. And we also announced that we would be doing a price incremental revision, inflationary revision at Jan 1st, which has already happened. And therefore, we will see the margin uptick happen from Q4 of this year. Naturally because obviously of prices, but also as we continue to build volume and drive economies of scale and efficiencies in the process. So, like I said, going into next year, into FY25, I think we feel quite comfortable and confident that we've cracked the volume growth code by working really hard through multiple different channels. And now by also using the price lever and also using the product mix lever, together that should really bring us to an overall good growth.
Just one question. There is now a set of the large diagnostic players, you and a few others, then the second rung, and then the unorganized one. What do you think the growth trajectory is like for the next, next 3 years? Everybody's talking about 2047, that's too far out. Let's say the next 3 years or 5 years. Do you reckon that the leaders of the pack will have a higher than the industry growth rate while maintaining operational metrics?
No, it's difficult to generalize that for everybody. I can certainly speak for ourselves, and I can certainly say that for us at Metropolis, we will certainly, go faster than the industry. Margins will grow faster than the industry, and we'll continue to outpace. But each company that you're talking about is in a different phase, of growth. Some who've already captured their growth in the past, and future growth looks a little bit harder. Some where execution is still not in full swing. So everybody has their own sort of challenges. But I think the general noise, which is that, the industry is infiltrated with too many people and now there's too much competition, which is causing the challenges, is actually only partly true. Yes, there is competition, but there's always been competition in our industry. It's never not been there. Really, it is an internal fight on how good your execution excellence is able to drive your margin and revenue up growth. And that's where I can only speak for ourselves, and I feel confident about it.
That's a fair point. Just last word from you, Ms. Shah, on what is your strategy on expansion? You talked about cracking the volume growth code, but I just want to understand how much of focus is going to be on increasing your footprint and presence.
So definitely, if you look at it in 2023-24 as well, we started the year by being present in 350 or 375 towns and cities all across the country. And we're going to end the year by being present close to 600 towns and cities all across the country, right? So distribution in terms of access, providing access to people who can access our specialized tests and our normal tests, and providing that entire 4,000 varieties of test menu to every small part of India is definitely going to be a critical part of the strategy. So geographical expansion will certainly be a key part, but along with that, product mix, as we keep moving people to better, more advanced, specialized tests as well, when it's required by them from their healthcare perspective. I think both of these will play an important role in our strategy. And we are going deeper in the cities in which we are already leaders in. And we are going definitely wider in the markets where we are challengers and where we think that we still don't have a significant presence. And we're making investments in those markets to really be able to differentiate ourselves and gain market share.
Thank you so much, Ameera Shah, for speaking with us and joining us as we celebrate Women's Day a day in advance. But we want to highlight the contribution and the presence of leaders across the spectrum that are women as well. So Ameera Shah there speaking about the growth prospects of Metropolis. Just want to mark what's happening in the markets before we take a very short break, and let's look at what is happening with all the Tata Group stocks. Now remember, the buzz about a listing of Tata Sons possibly by September this year has been growing leaps and bounds. So you should look at what's happening with the Tata Chemical, the Tata Steel, all of them having an interesting day. Tata Chem up about 7%. Right now, even as we speak. So you're seeing quite a bit of action in that space. Tata Investments as well. Let's pull up Tata Investments very quickly and see what's happening there. That has been an upper socket kind of a story for the last 3 sessions. And yeah, once again, Tata Investments on that upper socket. I don't know if it's the semiconductor play or, the whole listing bit of Tata Sons is boosting all of these stocks, but definitely want to keep on your radar. Very short break, but we're coming back with more exclusive conversations. Stay tuned.
The farmers' protests have been making headlines. Indian farmers have demands such as legal guarantee on MSP, pension and debt waiver, no hike in electricity tariff, reinstatement of Land Acquisition Act 2013 and more. But while the protest becomes important from the point of view of elections and politics, it's not just India that has its farmers agitated. The streets of Spain, Belgium, Hungary and Poland have been roaring with protests by farmers too. Around 1,400 tractors took part in a protest in Poland and roads were blocked across the country. What do they have a problem with? Rising production costs, falling sale price, stringent regulations. They say that the European Union is not doing enough to stop cheap imports from Ukraine, which is affecting the demand for local produce. They are also not happy with the European Union's Green Deal that's designed to zero out pollution by 2050 because it limits the use of pesticides, which in turn affects yield. In Greece, farmers have demanded lower electricity prices, tax-free diesel and subsidized animal feed. In France, farmers have been fighting for improved pay and protection from foreign competition. The French government offered 400 million euros, that's $436 million, in various measures in reciprocation to their problems over low earnings, heavy regulation, and unfair competition from abroad. In Germany, farmers are against the government's decision to phase out tax concessions on agricultural diesel. Their argument is that this will lead them to bankruptcy. In Romania, the protests stemmed from anger about low prices for produce, rising costs, imports of cheap foodstuffs, and constraints imposed by the European Union's drive to fight climate change. In the United Kingdom, farmers are struggling to keep up with weather changes and war-related supply chain disruptions. The whole of Europe seems to have the agricultural sector in pain as climate change becomes a central focus and production prices increase. And no, it doesn't end there. As per Down to Earth, since 2023, farmers have protested in 67% of countries in South America region for a variety of reasons, such as wanting better export exchange rates. And
welcome back. You're watching India Market Open, and on our special coverage today, we're celebrating woman power, women entrepreneurs as well on the occasion of Women's Day. Avantika Saraogi joins us now. She's ED, Executive Director at Balrampur Chini. That's one of the largest integrated sugar companies in India. Avantika, thank you so much for speaking with us here on NDTV Profit. Wish you and of course all our viewers a happy Women's Day in advance. Great to have you here. Let's start with a comment from you and a message to women entrepreneurs before we move to the business end of things.
Good morning. Thank you so much for having me on the show. A message to all the women out there, not just the entrepreneurs, but the women who just think that they can be something and someone more than whatever is prescribed to be. I would say go for it. This is the time and this is where it'll be respected. And I think all the corporates, including ours, is welcoming women with open arms. So this is, the right time to try and strive and reach all your dreams.
I must ask you, I know you are generationally from the family that runs the company, but it is a space where you don't see too many women. At least in the sugar industry, I think you're more of an exception. Do you think that it has been a tough task to sort of break that barrier and to ensure that stakeholders in your industry know that when you're speaking, you're coming from authority? Were there any challenges you faced in this journey?
That's a great question, I must say, because it's the same one, I was asking myself before I joined that will I be taken seriously? Will I be respected? Will they really, understand that I'm not just a woman, but I'm talking from a place of know-how or power or whatever. Will they accept the authority? But I tell you that I think that I am one of the lucky ones because it was my grandmother who ran the business before my dad did and not my grandfather. So they were already used to seeing, Madam G, if you may. In fact, our sugar mills were earlier called Madam Wali sugar mills in the, in the areas where they are in UP, because unka payment acha hai. Madam Wali sugar mill ko ganna denge because unka payment acha hai. So these kind of legacies that I have going for me, and everybody sees my grandmother in me. So that's a very, very big, I would say, tailwind for me. So I actually never faced any issues.
That's such a beautiful story, Avantika ji, and thank you. Hats off and ode, of course, to your grandmother as well. Let me come to a bit about the business, and the big headwind has been the FRM that the government seems to have set. That was a downtick for all sugar companies, including yours own, as far as the stocks are concerned. How much of an issue do you see this working out to? The initial feedback has been that don't worry, you will have prices going up as well. Your MSP is going up as well, though it will happen after elections. Are you betting on that?
So I'll explain a little bit of the sugar scenario so that you may understand at least Balrampur or any UP mill position on this. The FRP has been increased by 40 rupees for the season, for next season. firstly. It does not affect the season which is currently running. And secondly, UP runs on SAP. For example, we are already more expensive than the prescribed FRP of next year. So it affects us absolutely zero. Which is what people need to understand, that UP is completely unaffected by this uptick in the price because our cane price was already higher to begin with. So this will affect, Maharashtra, Karnataka millers, but I don't think anyone is really complaining because of the reason that you also said, and plus the ethanol program will be back on track by next year. Hopefully, all things as per what they are going now, ethanol program should be back on track and we should be absolutely fine. There's absolutely no need to panic when it comes to the sugar industry. The government has, in 10 years, maybe they have tried to regulate this industry 5%. What we have seen historically versus this is absolutely nothing. And after the elections, I'm 100% confident that the government will completely bring back on track the ethanol program, as well as the sugar prices will not be an issue.
Let me come to the ethanol portion of it. Can you use sugarcane for blending? Can you not use sugarcane for blending? Give us an idea of what your outlook is on this, because there's so many factors coming in terms of sugar pricing internationally as well, export caps as well. How are you viewing this issue?
So everything is related. It goes back to the crop. Right? If you have enough production in the country, the government is very clear that firstly, the consumption of the country must be met. Secondly, their ethanol targets must be met, and only then will they talk of export. And I think this is the right approach. This is the approach that as a company, even we would want them to take. We are committed completely to the, to the growth of our nation versus just, making some profits or money on the side. So even though sugar is trading at like 46 rupees ex mil for export, we would rather still have the ability to make ethanol rather than export sugar at this moment, because the government is very, very balanced when they come to that approach. So let's come back to the point. The reason that all of this regulation came in was because of the El Nino effect, which they thought would last for 2 years. Now already the El Nino effect is weakening. As you know, it's kind of raining all across the north of the country, a little bit also maybe in Maharashtra, Karnataka side, which in El Nino, it does not happen. So El Nino is already weakening. La Nina is supposed to set in June, July at the latest. If this is happening, which is quite certain, I would say, in this case, the crop production will again be up and everything will be back on track. We will have enough sugar for domestic consumption. We will have enough sugarcane for ethanol blending, and we might even still have something left over to export. And if you see 2 years down the line, we will definitely have enough sugarcane for all three.
Avantika, good morning, Neeraj, and happy Women's Day to you and everybody all female members in the Balrampur family. Just one question. I was intrigued by your response to the changes in the regulation. So I understand that it's for the next season, not for the current season, but that regulation still stays, right, until the government changes it. So the earning impact for FY25 would still be there, because the second half of FY25, which will be the sugar season for you, will see the impact unless the regulation gets changed, right?
So I think I'll make myself more clear. UP millers are unaffected by this rise in FRP.
FRP notwithstanding, the diversion of ethanol, sugarcane, etc., that one? I understand you are on SAP, so that will not bother you.
Yeah, it won't. Yeah. Sorry, so can you say that again? You're asking me about the ethanol blending program?
Yes.
Okay. So you're talking about the FY25, the balance sheet?
Yeah, so what I'm saying is, if you're saying that these moves will have an impact in the new sugar season, hypothetically, in which case it still impacts the second half of FY25, which will be April to March from an accounting year perspective, right? So there will be an impact on FY25 earnings.
Yeah, so I'll explain a little bit at least how Balrampur is looking at it.
Okay.
So we have as well a a dual feed distillery. So that is already running on maize as of now. It's running on sugar and it's running on maize in the distillery section. So a company like ours actually has a lot of flexibility, wherein we may not have as large an impact on the H1 of FY25 as others might, because we have a lot of flexibility and moving parts. I would say that yes, definitely our distillery capacities would be underutilized for the first half of the next financial year. But if the sugar, the sugar prices should hold, and I think in totality, honestly, I haven't thought about the impact on H1 of FY25, but it shouldn't be very bad because we have had a higher crush and we have had higher recoveries. So all in all, I'll tell you, it's it's actually a good season for Balrampur. We've grown in cane crush by 10%, and the recoveries are also looking much better.
Just last word from you, Avantika ji. What do you see the recoveries looking at? And I just want to go back to your comment that you'd rather, work on ethanol or focus on ethanol and exporting sugar. As a proportion of revenue, do you expect ethanol to increase significantly? Can you give us some outlook there?
So we have a capacity wherein we can have around 30% of our revenue from ethanol. That's how it is laid out. Of course, it will not play out that way for this, this coming calendar year. But other than that, it should happen. I think we have 32 crore liter capacity for ethanol.
All right, we'll take a very short break. Thank you so much, Avantika Saraogi, Executive Director, Balrampur Chini, talking about the business outlook. We're celebrating women leaders over here. We have an interesting and unusual story on the other side. And Neeraj, I was very keen when we were planning the Women's Day coverage to speak with Ashwini Bhide, because Delhi had their Metro Man. Mumbai has our very own Metro Woman. She's going to change the face of the financial capital. The coastal road also comes under her. What has been her experience? When does she see all of this incessant digging in Mumbai actually turn into what we've been waiting for? Yeah, that is one of the key questions I've asked her. That interview playing after this very short break. Stay tuned.
Hello and welcome to NDTV Profit. Today we will talk about tattoos and the worth of this market. The history of tattoos in India can be traced back to prehistoric times when tribal people were captivated by drawings on stone or wood walls. Their attempt to replicate these figures through needles gave birth to the practice of inking skin. Over the course of time, tattoos were embraced by tribals as a mark of bravery, war, religious beliefs, customs, marital status, protection from the male gaze, and so on and so forth. Today, in 2024, tattoos have become a means to express thoughts, individuality, personal experiences, and sentimental designs. The industry is estimated to generate over 20,000 crore rupees per year. What is driving this growth? One of the key drivers behind the growth of the tattoo market is the rising demand for customized and unique designs. Improved technological equipment for making advanced, safer, and painless tattoos have boosted the market. The laser technology for removal or modification of tattoos have also added to the surge. Increased exposure and promotion of tattoo designs on social media have led to widespread influence of tattoo culture on the youth. Take a look at these figures now. As per Fortune Business Insights, the global tattoo market is projected to grow from $2.04 billion in 2023 to $3.93 billion by 2030 at a compound annual growth rate of 9.87%. This is a sharp rise from 3.8% year-on-year growth between 2017 and 2022. As per Custom Market Insights, the diamond jewelry market is expected to grow at a compound annual growth rate of 5.5% by 2032, while the luxury jewelry market at a rate of 8.9%, but the tattoo market is estimated to grow at 9.5%. Is the tattoo business lucrative? According to an article by Opportunity India, tattoo kits are now easily available for less than Rs 10,000. while high-end kits range from rupees 20 to 35,000.
Couple of seconds to go. It's fantastic. We're on top of the world. We're leading the change, and we have the support of all our colleagues.
Talented, supportive, happy.
They empower men and women combined in the newsroom.
They are driving it, not just changing it.
Smart, fun, yet intellectual.
Radiating confidence.
Vibrant, effervescent, and stunningly intelligent.
Innovative, hardworking.
Multitasking, versatile, enigmatic, and very cheerful.
Tenacious, humble, and wanting to get to the depth.
They are much more talented. They are much more creative and innovative. And they are bringing a sanity in overall discourse that we are currently creating and consuming.
For decades, we've been hearing and talking about the Metro Man, that is Delhi's Metro Man. But here in Mumbai, we have our very own Metro Woman. On the occasion of Women's Day, while we of course talk about and feature women who are very successful in business, in the corporate world, the fact is that running and executing a large project, a developmental project, is perhaps even more challenging. And today in this exclusive interview, I'm speaking with Ashwini Bhide, as she's of course Managing Director of the Mumbai Metro Corporation and Additional Municipal Commissioner of the BMC. So the Mumbai Metro Line 3 and the Coastal Road is something Ms. Bhide is going to deliver to the financial capital of this city. Thank you so much, first of all, for speaking with us here on NDTV Profit on the occasion of Women's Day. I'm not going to start with the cliched question of how does it feel to be a woman IAS officer, because I'm sure in most cases it's the same as a male IAS officer. But to spearhead such big projects with the backdrop of political headwinds. So when you have a business, you have, risks. Here, in the case of such large infrastructural projects, the fact is that there is a plan, there is a goal, but you don't know what's going to happen in the next election. Is that the biggest challenge?
Yes, I think uncertain or uncharted challenges is something which is, I think I would term is at the biggest challenge. Because the project of this size, they already come with some inherent challenges. The size is huge. You have to implement these projects in a very, very crowded city like Mumbai. You need land, you need money, you need to convince people, and you need to actually take the risk related to construction and deliver the project safely. But these challenges are chartered challenges. You know what exactly this is going to be and you plan for it. But in these kinds of projects, there are many uncharted challenges which you have not anticipated. And dealing with them is one of the most difficult things, I would say. And we have faced many such challenges in this project. And that is something which, you have to decide on the spot what you need to do about it. And sometimes they get dragged. So how to come up with a solution, that becomes the most challenging thing.
RA Metro car shed was the biggest one. It became, I think, a cause for environmentalists.
Yes, that I would put it in this uncertainty box.
But
that kind of challenge.
You became sort of painted as the person who wanted to push it through and didn't care for the environment. How tough was that?
It was absolutely tough. But once you know what your goal is, then probably it is easy to deal with that. Because having a car depot at RA for this metro line is what makes that metro line really efficient and real which can provide real service to the city. If you remove the depot from that area or that end of the metro, then the project completely loses its significance and importance. So if that is the importance of that location at that of that depot, then it was my duty to fight for it and ensure that the project is delivered to the city in the manner it was planned for. And that is why, but that time we had never thought that we will have that kind of an opposition from those sections of the society, because the procedure was already followed, everything was laid down. So this was some kind of an uncertainty which we faced, and we had to deal with it, and I had to take that tough stand, even at the cost of my personal kind of the problems which I had to face.
So you paid the price for that stand. For some time you were removed from the metro project, then you were brought back. All those uncertainties continue. How challenging then is it to now get back on track and ensure that this project, which is very, very crucial to Mumbai's transportation structure, is delivered on time?
There has already been a delay of almost 2.5 years to 3 years.
Because of RA?
Because of RA. Because that decision was pending. There was a stay for that location. And unless you have the depot location fixed and start working on the depot, it becomes very difficult for the rest of the project to get completed and get delivered. So my challenge when I went back was how to reduce that time within which we could complete the depot and deliver the project. Normally, depot would take 2 to 2.5 years to complete, the depot of this size. But we had to reduce it. We have to reduce the number of months which were required for the depot and ensure that the mainland and depot are connected. Because the depot was not there, our trains were partly ready at some other location, but they were not able to be brought here. So all those issues were there. All problems were revolving around the depot. So my job was to minimize those projects, push the depot in the maximum possible manner, which we have tried to do. And now the depot is almost ready. Depot connected, the depot charging is happening as we speak. The main line is getting connected to depot. Our trial testing has started. And we are hopeful that in another 3 months, when we complete all our testing and certification, RDSO certification, ISA certification and CMRS. So by end of May or early June, the project will be ready for commissioning and it will be offered in the service of the citizens.
Okay, so by June, July, maybe
Yes.
we can, actually see this come to life. Now, why is this Metro Line 3 important in the larger picture?
This Metro Line 3 is one of the most important corridors of the overall Mumbai's Metro Master Plan. But the more importance of this project is this is the only corridor which connects the northern and central suburbs of Mumbai to the island city. This is the only corridor which comes to island city. All other metro corridors like Line 2, Line 6, even Line 7, they get connected to this corridor. Similarly, other public transport modes like the Central Suburban Railway, Western Railway, as well as both the airports, they get connected to this corridor. And that is why this is the corridor which goes into the areas which are today largely unconnected by any public transport. And these are the areas where there are multiple business districts and employment centers, educational hubs, and even health hubs. The medical hubs are situated. And people need to take this route, but by using multiple modes of transport, which takes longer time for their journey. And most of the times they have to travel on roads which are extremely congested. So their journey time is not only more, but the comfort and safety is also compromised. So this corridor provides the safer, more comfortable and more modern kind of connectivity to all these congested areas of Mumbai.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
years in India. PM Modi will attend the Silver Jubilee celebrations of the Gujarat Cooperative Milk Marketing Federation, the owner of Amul. At one point of time or the other, we've all grown up with Amul butter or milk for sure. The famous Amul girl created in 1967 is family. We all recognize her. But as the brand grows 50 years old today, do you remember the full form of Amul? It is Anand Milk Union Limited. From producing 250 liters of milk per day since the time Amul was formed back in the mid-90s to today, where Amul has over 36 lakh dairy farmers and produces nearly 300 lakh liters of milk per day, the brand has had a long journey. The story goes way back in time. In the 1940s, dairy farmers were worried. The middlemen exploited their ways of profitable income and a poor milk production system made their living difficult. Tribhuvan Das Patel and Verghese Kurian identified these issues and helped in the formation of the first milk union called Kaira District Cooperative Milk Producers Union in 1946. The cooperative model gave farmers direct ownership of the dairy industry. The union helped them process, market and sell milk and milk products without the interruption of intermediaries. And it was in 1955 that this union chose a brand name for itself called Amul, which means priceless in Sanskrit. And then in 1973, Amul Dairy along with 16 other district cooperatives formed the Gujarat Cooperative Milk Marketing Federation, which has now completed 50 years in India. Amul also started India's white revolution that made our country the world's biggest maker of milk and milk products. The brand follows an umbrella marketing technique which has helped GCMMF prevent association clashes and keep an open door for the patrons to coordinate in creating items. As per a report by Statista, the annual sales turnover of Amul from 2011 to 2023 has consistently risen, recording about 55,000 crore rupees of turnover.
Another listing on Dalal Street today is Mukha Protein. So on a day when the markets seem to be doing okay and a lot of stocks have come off the highs, come off the lows by the way, it'll be interesting to see what Mukha Proteins does. As the company is a fish protein manufacturer, 224 crore IPO, saw some strong subscription numbers, subscribed about 136.99 or 137 times. So having happened, one should expect a listing premium, 30, 40, 50% as the case may be, will come up on your screen as soon as the numbers are out. But I would reckon that the premium should be a given. It will come up on your screen with that kind of subscription. A premium is a given. Yep, about 42% kind of premium for Mukha Proteins. Remember, it's a small IPO. Having said that, has not done too badly on listing. I just want to also mark that the indices are now fairly flat. We hardly have a move there on the Sensex or the Nifty. So it's a pretty flat day thus far for our markets. On Talking Point today, the case for a chat. Well, with the guest that we have and one of my favorite economists, we have to talk about what the recency of print, both on inflation globally and in India, as well as growth numbers both globally and in India, hold in store. Of course, yesterday's news around Indian bonds also included in the Bloomberg Bond Index from 2025, Jan 2025, also make their way into the conversation today. Our guest is Pranjal Bhandari, Chief India and Indonesia Economist at HSBC. Pranjal, great having you. Thanks so much for joining in. And in advance to you and your colleagues at HSBC, a very happy Women's Day.
Thank you very much. Always lovely to be on your channel.
Yep, great. Always lovely to have you. Pranjal, I'm starting off with the worrying signs though. While the whole risk asset community was watching out for when does the commentary and the actual action around rates in the US happen, the recency in prints across core CPI or otherwise in the US isn't very pleasing. Jerome Powell yesterday said the same, which is that there is no number out there or no timeline out there. But my question to you is broadly that could the unthinkable of 2023 happen, which is that we may not see any rate action in 2024 from the US if inflation prints stay higher than what is envisaged?
These are great questions. If you take a step back and you look at global growth, it's actually doing very well. We just got the February PMI numbers for all countries, and global PMI is showing that manufacturing globally is now in expansion mode. Just 2 months ago, it was in a contraction mode. Services PMI is doing even better. New orders, future expectations are only rising across literally many countries. India obviously is spearheading all of this. Even in the US, the PMIs have done very well. Some of the ISM prints have been extremely strong. So generally speaking, it almost seems like growth, is much better now than it was a couple of months ago. Of course, there are problems, there are issues out there. For example, Red Sea, and we could see some fallout from there later, but it's not really being seen in the data, at least, right now. This brings us to inflation. And, as you mentioned, January US inflation looked extremely strong. It was higher than expected, more coming from services than from goods. And my sense is that, yes, I think this will make a lot of policymakers in the US more thoughtful about the rate cutting cycle than before. To be sure, I think if you look at a very tailor rule kind of approach, there is space for rate cuts in the US. But because January inflation came in so much more higher than expected, I think right now all eyes are on February inflation. Will it also surprise on the upside, or will it show some softening? So there are lots of moving parts, and we are all prisoners of monthly data at this point of time. Our US economist does have his, Fed rate cut, first rate cut in June. I must say that he's had it there for like over a year now. Especially when markets were expecting rate cuts much earlier in the year, he was like a standout view. So from that perspective, he was expecting later rate hikes. But right now, because the Taylor rule suggests so, he's keeping to his June 1st rate cut. But of course, I think February inflation data will have a lot of meat there.
So what does that do to... what is a combination of what you just mentioned with regards to global manufacturing, so on and so forth, and if indeed the US inflation print is not benign, let's say, and you add to the fact that Indian central bank will not necessarily make a move on the downside if the US Fed is staying pat, and we have the Indian growth numbers looking the way they are. Does it kind of push back any kind of hopes that people might be having for the Central Bank of India to make a move in order to support growth?
Look, again, a great question. Growth in India has been extremely strong. Maybe later, if time permits, we can talk about the December GDP number. But actually, more important is the data that has been flowing in after that. The Jan and February PMI, for example. We've seen much better data in Jan-Feb than we saw in the last quarter of 2023, both for PMI manufacturing, PMI services. PMI services in particular, right now, if you look at new orders, it's at a 1-decade high. If you look at input prices, it's at a 4-year low, which basically means that corporate margins are improving a little bit in Jan-Feb compared to the previous quarter. So things are looking, really up at this point. And my sense is that when you have such a great, opportunity, that growth is extremely strong and there's no real pressure to cut rates, why not use this opportunity to bring down inflation to that 4% target, which you've been talking about a lot? So yes, very long answer to your question, that if growth remains so strong and, there are no rate cuts globally, my sense is that the RBI will not be in any hurry to ease. Even if RBI eases, my sense is it's going to be an extremely shallow rate cutting cycle. Because what is the need for rate cuts at a time when growth is anyway doing well? And things are on the right side, and inflation is not yet down to 4% or close to 4%.
No, not at all a long answer. We love listening to you, Pranjul. So please continue. But just I have a follow-up question to this. Your GDP note was that you need to calm down. That was the title. And then I hear you say right now that while GDP came at what it did, the PMI data is extremely buoyant. So do people really need to calm down or celebrate growth in India?
Look, I'll celebrate growth in India. I'm very excited about it. But I think the 8.4% number was, had a lot of statistical issues in it. And that was my point. By the way, this title, "You Need to Calm Down," is actually a Taylor Swift song. And, Taylor Swift is in Asia this week. So I just thought it'll be a nice touch. But, that apart, my sense is that we need to look at the GVA numbers a little better than we look at GDP numbers. And I'll just tell you two quick reasons for it. GDP is GVA plus indirect taxes minus subsidies. It's all a little complicated. It should normally be all right, but there are two reasons why a divergence between them can sometimes creep up. One is a very India-specific reason: the fact that when we pay out our subsidies, it's cash payout. It's not accrual accounting. So what we do is that even if the subsidies for December, but if we pay it out for March, then the whole thing will be shown for March and not for December. We do cash accounting, and that messes up the number a bit. The second is global. These are very different times, right? We're seeing commodity prices go up and down. In the December quarter, we saw a 65% year-on-year number in terms of fall in fertilizer prices. That also brought down the subsidy bill. The subsidy bill was extremely low, because of which the GDP turned out to be much higher than GVA. It really doesn't have very much to do with the growth on the ground. So if you want to get a sense of growth on the ground, it's better if you follow GVA, particularly given some of these little things that creep up into GDP, especially in India.
So Pranjal, GVA per se, relative to the rest of the world, even if the GVA numbers are looked at, one, probably not as bad. Yes, we not have that fancy 8% print, but not a bad print. But the addition that I'm making to that is that while, even if you look at the GVA or the GDP and looking strong, consumption isn't quite firing. Now, is that a reason or a cause for concern, and can any regulatory action or a policy action amend that, or it will only stem out of confidence and wage growth?
Yeah, I'm very happy you asked this question, because my sense is that consumption growth, which we are seeing in GDP, is underreported. And my sense is that in subsequent revisions, which will happen, between next 1 to 3 years, this consumption growth number will be revised upwards. I'm saying this because, we are seeing investment growth being strong. Over a long period of time, if investment growth is strong, then consumption growth is also, stronger than before. They move together, because people who are working in this investment construction sites are earning some wage which they can spend. Even if it's capital intensive investment, the owners of capital get, remunerated. So my point being that you can't have such a huge divergence between investment and consumption. Couple of other points. If you look at GVA personal services, which is hidden in the GVA, that's extremely strong. That's 7.5%. That's personal consumption, and it doesn't match with the 3% private consumption that we get in another part of GDP. So I think there is some problem going on here. Finally, look at bank credit data, right? If you look at personal loans, you take out mortgage. So personal loans for non-housing, even that is extremely strong. And a lot of that is there to fund consumption. And sorry, one more final point. If you look at consumer imports, they are on fire. They are 50% higher than pre-pandemic levels. So when I put all of this together, it seems to me that this about 3% private consumption growth, which we are seeing in national accounts, is a little bit of underreporting. There are a lot of issues here, but I think in the next couple of years, it will get increased a little bit.
Okay, so you're saying there are challenges to capture this well, and those challenges will get ironed out, which will result in the correct reportage, which according to you will be higher than what it is showing right now.
Yes,
okay.
That's correct.
The other thing, Pranjal, and I don't remember it exactly to the T, but you tend to bring out these points wherein you look under the hood and look at what's happening to data which is not quite visible. You had mentioned some time back, if I'm not wrong, that when you looked at the rural balance sheets, and there was some high frequency indicators which indicated that part of the market was not hurting as much as is widely believed. Now, this was maybe 3-4 months ago. Some time has passed from now until then, or then until now, excuse me. Is that trend continuing? Is rural a lot better than what the market is fearing?
Yeah, I think I'll hold on to that view. Look, at no point am I saying that rural is like rising rapidly. It's not, particularly because last year was an El Nino year and the Kharif production was weak, and we know that there were a lot of stresses out there. So I'm not saying rural incomes are doing extremely well. But at the same time, I don't think there's rural distress because that alternate employment in construction sites has really picked up. A lot of people are working in these construction sites and sending money back home, which I can actually track from some of the remittances data that we get. If you look at cash balances in Jan Dhan accounts, which are mostly rural, those are also higher than before. So I do think that things are not as bad as they could have been if we did not have this construction boom in the economy that is going on at this point of time. But having said this, I do think that there are signs of K-shaped recovery. I'm not against that point because one group of people is doing much better than another group of people, right? Like I think one strong source of growth in the country in the last couple of years has been professional services exports, the advent of global capability centers. People associated with those high growth sectors are doing much better than somebody who's in rural India and is having to grapple with El Nino. So a K-shaped recovery is there. But my small point is that the rural distress is not as much as a lot of people have made it out to be because they have alternate source of income from construction.
Got it. Pranjul, one final question, and that is on yesterday's announcements around Indian bond inclusion in the Bloomberg bond index as well from Jan. So we have JP Morgan from June this year or thereabouts, then 6 months, then Bloomberg index as well. How material, I mean, we know it's material, but how material from a 2-3 year perspective would a combination of these two and some other indices be for the bond market depth?
Yeah, so we got the announcement in September last year for inclusion into JP Morgan, the emerging markets index. And actually, it's going to start in June, but already in the run-up, we've seen since October $10 billion in India's bond market. So it is substantial. And my sense is that when the actual inclusion happens in June, then we'll get even more money. So that is exciting. And then we got this announcement yesterday for a similar inclusion in the Bloomberg Emerging Market Index, which according to some calculations could bring in another $3 to $4 billion over the next couple of quarters. The one that is awaited is the Bloomberg Global Aggregate Index, which is a far bigger index, but a lot of people think about this as a stepping stone towards inclusion into a bigger index. So if over time we are going to see a series of inclusion, then yes, I think the sort of magic we used to see in terms of portfolio inflows into equity markets, like last year it was $25 to $30 billion. We could see that kind of magic in bond market, right, over the next 1 or 2 years. So I think that is interesting. But taking a step back, what this really means is that the rupee is extremely well funded. My magic number is $25 billion. If we get this extra inflows of $25 billion from somewhere or the other every year, then our balance of payments goes into a big surplus and the rupee becomes extremely well funded. Last year it came from equity markets. FY25, I think it'll come from bond markets. And then I think from FY26 onwards, it'll come more from FDI inflows. And that's just another interesting part. FDI inflows into India have slowed, but my own sort of work suggests that in a 2-year horizon, they'll start to pick back up, and not just that, they will double. And I'm seeing that because I track a lot of foreign investment intentions data into the country, and there are a lot of intentions into futuristic sectors from semiconductors, renewables, green hydrogen, AI, and I think all of that money will materialize in a 2-year horizon. So the rupee remains extremely well funded.
Pranjul, whenever you have the time, would love to do a slightly longer conversation on this particular aspect that you just mentioned, hopefully from our studios. But it's always lovely talking to you. Today was no different. Thank you for joining us. I much appreciate your time.
Thanks for having me.
All right. That's the view from Pranjul Bhandari of HSBC. Time for a break. Well, we talk more about a sector which certainly needs inflows and investments, and that's the wind power space, rocked a little bit by maybe a policy change. Suzlon joins us on the other side to talk about that.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Hello. Good morning, ma'am. I'm speaking from XYZ company. Are you looking for a job or a job change? Have you been receiving unwanted calls from spam numbers? Are you tired of being offered new jobs, insurance schemes, or free health checkups? Well, today we will look at an interesting survey report by local circles on pesky calls that received 60,000 responses. Most unwanted calls are related to financial services, 54%, and real estate, 22%. In fact, the report has taken names. 40% mobile subscribers have identified Bajaj Finance as a top offender, HDFC Group as the second biggest pesky caller. The report reveals that 60% of people received 3 or more spam calls on an average day every day, and 92% of people registered on the Do Not Disturb list still get pesky calls. So is being listed on DND working? Clearly not. But the report also recorded a minute relief as per which 6% people don't get any such phone calls. This relief comes after the TRAI directive to banks, insurance companies and other commercial entities. TRAI is the Telecom Regulatory Authority of India. In fact, the Department of Consumer Affairs has constituted a committee comprising members of different regulatory authorities, telemarketing companies and cellular industry to draft the guidelines to address the issue of pesky calls. So yes, pesky calls are still a worry, but there is a little relief too. Can you ignore them though? Toll-free numbers are identifiable, so institutions have found a new way. According to the report, calls from different mobile phone numbers that seem to belong to companies or brands have risen from 29% in February 2023 to 36% now. And look at the change in trend. Real estate selling has risen from 18% last year to 22% now. However, job offerings have decreased from 10% to 4%, and in the case of those selling financial services, the calls have slipped from 60% to 54%. So the bigger question is, will the nuisance of pesky calls end anytime soon? There should be a system where pesky callers are blacklisted at the Aadhaar level, so they have the risk of not getting a new SIM. Also, brands on whose behalf the
A space in focus, a stock in focus, Wind Energy. Suzlon is the stock that I'm talking about, rebounded after falling close to, well, over double digits in the recent days due to the update on reverse bidding which came in. We're now joined by the CEO of the company, Mr. JP Chalsani. Mr. Chalsani, good having you. Thanks for taking the time out, Neeraj here. How material is this change in policy?
Thank you, Neeraj. I think best is let's decide that at the end of putting some facts on the table. Okay, so I think all of us, including your viewers, can decide whether it has an impact or it has no impact. As we speak today, 9 gigawatts of bids, which were awarded to various IPPs, in turn have been awarded to the OEMs, which is under different stages of execution, which is 9 gigawatts. And in addition to that, about 3 gigawatts have been awarded through C&I segment, that is commercial industrial segment. So therefore, 12 gigawatts of bids have been awarded to the OEMs. They are at various stages to get commissioned in the next couple of years, let's say. In addition to these 12 gigawatts, which already been awarded to the OEMs, not even to the IPPs, in addition to that, there is about 10 gigawatts of bids have been finalized by the government. And these 10 gigawatts of bids have been awarded to various IPPs, who are in turn are in the process of finalizing the OEMs for that. These 10 gigawatts plus additional 5 gigawatts of C&I is in the market today, 15 gigawatts for discussions to finalize the OEMs. So that first 12 gigawatts under execution plus 15 gigawatts under discussions for finalization of orders, 27 gigawatts, these are all pure wind I'm talking about, has nothing to do with the reverse auction, what we're talking about. On top of it, there is about 15 gigawatts of bid schedule announced by Government of India, which is supposed to be completed in the next few months. In that, the 13 gigawatts is only 2 gigawatts is pure wind, 13 gigawatts is predominantly FDRE, fixed dispatch renewable energy, and the hybrid and RTC. Why I'm stressing FDRE is that in case of FDRE, if 1000 megawatt is the capacity of the PPA, actual wind capacity alone would be 1.2 to 1.4 times. In this 13 gigawatts, 10 gigawatts is FDRE. We expect that this 13 gigawatts to have at least 13 gigawatts of wind component, which is at the various stages of bidding, where reverse auction was there earlier, is there today, will be there in the future. There is no impact of this. And in addition to that, about 4-5 gigawatts of C&I segment will flow in. So we're talking about 40 gigawatts of pipeline, which has nothing to do with this reverse auction. And as a country, we have been doing in the range of 1.5 to 2.2 in the last 5 years per year. And we expect to reach about 3.5 gigawatts this year. Even if we achieve 8 gigawatts per year, we are looking at a pipeline of 8 for next 5 years, the order pipeline which is available. So as a country, I think what is important is that not the reverse auction, just no impact, I repeat, no impact on the order pipeline for the next 5-6 years, is the execution on the ground. That is what would decide how much capacity we will add. We all need to concentrate on execution and get that capacity up on the grid.
Which on another day, Mr. Chalsani, I'm going to talk to you at length when you have the time about the execution and the challenges thereof. But I'm just trying to understand. So the point being, for the next 5 years, because of the orders already bid for and in the pipeline, there is no impact on that existing 5-year executable order book that you may currently have or will get. But for the orders beyond that, if there is a negative in the reverse bidding process, it comes into play then, is what you are saying.
No, because this reverse auction is only applicable to the small component of pure wind bids. Reverse auction has always been there. And even in the pure wind bids, let's appreciate the fact that reverse auction has been not taken away in the bidding guidelines. It was only told that reverse auction is not mandatory. Okay? Reverse auction has been there in the FDRE bids, also there in the hybrid bids and the RTC bids, which would continue. Most of the bidding henceforth will happen through this route because as the renewable capacity increases, you need to get in combination of solar, wind and storage. Okay? Because we are reaching a stage where the renewable capacity would be like a fossil fuel capacity where you can dispatch whenever you want. Those are those FDRE bids. So therefore, moving ahead, the pure wind bids are not going to move the needle. What is going to move the needle is the bids of FDRE, hybrid or RTC, which has no impact of reverse auction. So therefore, I don't see, not currently, even in future, this is going to have any significant impact which is going to move the needle. I'm not saying for the sake of saying, which we believe it firmly.
Yeah, most certainly. I have 60 seconds on the show before I have to take a break, Mr. Chalsani. So just one last question. Therefore, I'm assuming the market believe that if not the order wins or the order execution, but operational margins could come under pressure as well. You've negated that. I'm just wanting it for record. You are negating. You believe the next 2-3 years, the earlier guidance on execution and margins stays pat.
Absolutely, without any doubts.
Wow. Well, Mr. Chalsani, appreciate your short time today. Unfortunately, I have to take a break and wrap the show, but I look forward to a conversation with you on the execution challenges as well as the advantages or edge that Suzlon has. We'll love to do that before the earnings season kicks in.
Yeah, sure, I promise.
Thank you so much, Mr. Chalsani, for joining in today. Unfortunately, viewers, out of time completely, but Suzlon saying don't get worried. There's nothing that is negative, at least for the near term, for the next 3, 4, 5 years, maybe even longer in this change of policy. Thanks so much for tuning into this edition of The Talking Point.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Electoral bonds have been deemed unconstitutional by the 5-judge Supreme Court bench headed by Chief Justice D.Y. Chandrachud. They were first introduced in 2018. An electoral bond is a means to fund a political party in India while maintaining anonymity. These bonds are available in multiple denominations ranging from 1,000 rupees to 1 crore in specified branches of the State Bank of India. This was introduced in the system to maintain transparency in political funding via a banking network and reduce black money. But on the flip side of this intention, questions have been raised on the basis of an important fundamental right of democracy. That's right to information. Is it constitutionally right to keep the source of political funding discreet? Why shouldn't the public know who is funding how much money to different political parties? As per the findings of Political Party Watch, a program under Association for Democratic Reforms, 28,030 electoral bonds worth rupees 16,618 crore was sold between March 2018 and January 2024. The Supreme Court's unanimous decision follows a petition filed in September 2017, challenging the Finance Act 2017, which introduced the electoral bond scheme for the purpose of electoral funding. The Act has also removed the previous limit of 7.5% of the company's average 3-year net profit for political donations. The Supreme Court has asked the following corrective actions to be taken immediately. State Bank of India will need to stop issuing electoral bonds immediately. SBI will have to submit the details of the purchase of electoral bonds and their encashment by political parties since the interim order of the court, which is April 12, 2019, to the Election Commission in 3 weeks by March 6th. The Election Commission will have to publish all these details on its website 1 week after, that is on March 13th, after it has received all the information. Electoral bonds that have not been encashed yet by the political parties will need to be refunded. For more such updates, stay tuned to NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Another record high for the Nifty in the Sensex, whereas mid-cap and small-cap indices gain. After 2 days of profit booking, the Nifty trades near 22,500. Most sectors trade in the green, led by media and metals. On the other hand, Bank Nifty, FMCG and auto trade with marginal cuts. Shares of M&M fall over 3% as promoter group sells 0.9% equity worth over 2,100 crores. And Bharti Airtel is in focus as Singtel sells 0.8% direct stake worth over 5,800 crores in GQG Partners. The stellar debut for Mukka Proteins. Stock lists at a premium of 57% to its issue price on the BSE. Hello and welcome. This is the FNO Show. I am Agam Vakil, and in this show we take you through all that is happening in the futures and options space in Indian equity markets. But before we go ahead, a quick look at how markets are faring. And well, it's been a quiet day of trade, but it's a truncated week. We have a trading holiday tomorrow, so I reckon it's been a fairly quiet morning for the benchmarks, at least the Nifty, making a new life high today, eventually coming off and largely trading flat at the moment. For the Bank Nifty as well, pardon me, we're seeing a little bit of temperance after the kind of strength that we've seen yesterday, and that is also largely flat. So I reckon that but a lot of traders are using the morning to take just a little bit of a breather. Of course, it is the weekly options expiry for the Nifty. And, you never know how things can pan out in the second half of the session. But for now, it does seem like a very quiet, morning at the moment. Well, let's move on and talk about how things are panning out for the Nifty and the contributors. In terms of constituents, let's look at the pull and push. So we do have Bharti Airtel, Tata Steel, as well as a handful of other counters which are advancing, providing a little bit of support. Reliance Industries, M&M and ITC, on the other hand, looking at declines and weighing down on the indices. As far as your broader markets go, let's pull that up as well, because we did see some sharp profit taking yesterday, and today they seem to be up again. So the mid cap 100 is up around 0.4%, and the small cap index is also up around 0.7%. What about the future space? Let's shift focus to how things are going on in the futures. And yesterday we saw a lot of addition in open interest in the Nifty, but today once again it has receded. In fact, looking at a 1% decline at the moment, and of course not too much change for the underlying. Is this the same for the Bank Nifty? Let's take a look there as well. And yes, a further unwinding in Bank Nifty futures will open interest, even as the underlying remains flat. When it comes to the options market, of course, Nifty will be in the focus, and at the moment still looking at that very broad range, but at the moment perhaps we can keep an eye on 22,200, on 22,300 on the lower end, and on the higher end, of course, we're keeping, staying focused on the 22,600, 22,700 levels around there. Though Nifty is trading just around the mark of 22,500 and thereabouts. And that's as far as your option market is concerned. But, before I get in our experts for today, just want to address the news around Bharti Airtel and the kind of stock move that we've seen. So Singtel has sold around 0.8% stake in Bharti Airtel to GQG Partners, and Smriti is joining us to give us more details here. Smriti, good morning.
Good morning, Agam. You rightly mentioned Singapore Telecommunications Company has sold 0.8% stake. That's about 49 million shares at a price of 1,193.7 a piece, which comes out to be over 5,850, around that crore rupees. Now, this is sold through their subsidiary company, which is Pastel. If we go back and look at the stake as of December, they held about 10.4% stake in the company as a promoter group. So that's what we're picking up, and as per Bloomberg, the buyer here is GQG. We've seen GQG in the past picking up stake in other enterprises, so they're kind of playing a diverse game from Adani Enterprises to Telecom and to others as well. So that's what we have as of now.
All right. All right, Smriti, thank you so much for getting us those updates. Of course, Bharti Airtel has moderated as of now, and in fact, we've seen green on the screen as far as Bharti Airtel is concerned at the moment. But on that note, let's get in our experts for today. We have Sneha Seth. She is the senior research analyst at Angel One, who's as well as Tina Garodia. She's the president of Quantsap. Both of them are joining us on the show. Good morning to both of you. Thanks for joining in, and also a happy Women's Day to both of you. Sneha, I start with you. Your view on the Nifty. How are you going about this one? Is consolidation on the cards?
Yes, again, if you see consolidation can be said, especially for today. If you see, we are seeing writing in 22,400 and all the below strikes in the case of put option, and the call side, we are seeing massive writing in 22,500. So I believe this 100 point is the range for today. In case of any declines towards 22,400, I would say that could be an opportunity to go ahead and long at the money call option, but I don't think that that dip would be there in today's session. Overall, if you see, yes, the overall Nifty has been forming higher top, higher bottom formation. The long short ratio has improved to 40% now. So overall, we have been seeing buying in Nifty as well. So the overall biasness remains positive. In case of any declines towards 22,200, 300, that should be a zone wherein we can, go ahead and add long. At this moment, at higher levels, I won't recommend buying at this current levels. Someone who is holding a positional bet, the support zone, keeping a strict stop loss around support zone, they can keep holding the long for the target of 22,600, 650 zone.
Okay, that's a view on the Nifty. Tina, good morning to you as well. How are you positioned on the Nifty? How would you play this benchmark?
A very good morning, Agam, and wishing all the viewers of NDTV Profit a very happy Women's Day. So coming to the market, if we talk about Nifty, Bank Nifty, the broader indices, if we talk about the structural move, they are into a long bias. So we are seeing a very good long accumulation in Nifty and Bank Nifty. Both the indices are at very important support point and near the breakout. So these are verged on a very good up moves. Now, talking about the intraday perspective first, Nifty being the weekly expiry today. So if we see since morning the order flow data, which I look very, very closely, so it is showing that the entire sentiment is towards the buyer side. So buyers are a bit aggressive compared to the sellers in the today's session. So we would be seeing a expiry somewhere around 22,450 to 22,500 because 22,500 becomes a pivot point for today's expiry. Coming up, if we talk about a little positional view, by next week, I expect that Nifty should move up and see 22,650 to 22,700 levels. So since we have this truncated week and we have directly the trading session on Monday, so any traders who wants to carry forward a position, I would really suggest to go in with a strategy rather than doing a single leg call option. So I would recommend a bull call spread in Nifty for the next weekly expiry, that is 14th of March. In this, you need to buy one lot of 22,500 call option and you need to sell one lot of 22,700 call option. So if we see the payoff of this strategy comes like there is an initial outflow in this strategy, which is around 85 rupees. The target would be the difference in the spread, that is 200 rupees, and the stop loss would be 50. So overall, to play the structural bull run, this would be the best strategy for Nifty.
Okay, fair enough. So you're buying a bull call spread where you are buying, in fact, an at-the-money call. And mind you, this is the 14th March call. And against that, you're also selling the slightly out-of-the-money call on the Nifty. And thereby, of course, while you are limiting your gains, but you're also limiting your losses. But on that note, let's head across to the address by Ashish Rajwanshi, CEO of Defense and Airspace at Adani Group at the NDTV Defense Summit.
The domestic defense companies that supply to friendly nations are furthering India's strategic interest, and hence the government should support and back up these companies against adverse foreign interest. At the end of the day, the true spirit of Make in India lies in fostering an ecosystem where innovation thrives, industries flourish, and self-reliance becomes our hallmark. Together, let us create a Bharat where Made in India stands tall as a testament of our ingenuity, resilience, and indomitable spirit. To quote the Honorable Prime Minister, India is not just rising, India is ascending. Let us have the conviction in this India, an India growth story, and collaborate to ensure that every sky is safe, every land and maritime border is secure, and Atmanirbharta becomes true to the nation. Thank you. Jai Hind.
Okay, so that's as far as the Defense and Aerospace Summit is concerned at NDTV Defense Summit. But we are moving on to a breaking story at the moment. All right, we'll be back in just a bit, but perhaps we can go across to our experts and take their view on the Bank Nifty then. And Sneha, I'm coming to you then. How are you placed on the Bank Nifty? Similar views to the Nifty?
Yes, the banking index, I feel it has added some longs, and in fact, we have seen this rally mainly because of short covering. Yes, the overall view is again positive. I think we should apply the buy and dips approach in this index as well. But again, we not be very aggressive at higher levels because the kind of writing and the kind of overall market is placed, we are not very comfortable buying aggressively at this point in time. So anyone who is holding a long position should be looking to book profits timely and avoid any aggressive longs when the market is very high or at the higher levels.
Okay. Tina, how about you? Would you also be playing a bull call spread on the Bank Nifty, or do you want to perhaps stay put as of now?
So Agam, if we see the Bank Nifty, the major components being the private sector banks and the PSU. So private sector bank, the large cap, the HDFC, ICICI, Axis Bank, all three are very well poised. So if you see, we are in a very much comfortable zone when it comes about the constituents positioning also. Also, if you look at the PSU banks, State Bank of India, Canara Bank, both are also very positionally very bullish undertone. So Bank Nifty will continue a structural bull run. So definitely I agree in terms of like markets are in a junction where there's a lot of events which is coming up. So volatility, your intra-week swings will be very, very high. So in this type of market, it's always prudent to keep yourself hedged all the time. So I will go with the bull call spread again. That will be for the coming weekly expiry. That's the 13th of March, where you're buying one lot of 48,000 call option and you're selling one lot of 48,500 call option. In this strategy, the payoff, if you talk, the outflow is somewhere around 200 rupees. The target would be around 450 and the stop loss would be 140.
Okay, there you have it. That's another debit spread as far as the Bank Nifty is concerned, looking for an upward move. But on that note, we slip into a short break, and on the other side, we talk about stock ideas and a lot more. Stay tuned in.
Presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
The farmers' protests have been making headlines. Indian farmers have demands such as legal guarantee on MSP, pension and debt waiver, no hike in electricity tariff, reinstatement of Land Acquisition Act 2013 and more. But while the protest becomes important from the point of view of elections and politics, it's not just India that has its farmers agitated. The streets of Spain, Belgium, Hungary and Poland have been roaring with protests by farmers too. Around 1,400 tractors took part in a protest in Poland and roads were blocked across the country. What do they have a problem with? Rising production costs, falling sale price, stringent regulations. They say that the European Union is not doing enough to stop cheap imports from Ukraine, which is affecting the demand for local produce. They are also not happy with the European Union's Green Deal that's designed to zero out pollution by 2050 because it limits the use of pesticides, which in turn affects yield. In Greece, farmers have demanded lower electricity prices, tax-free diesel and subsidized animal feed. In France, farmers have been fighting for improved pay and protection from foreign competition. The French government offered 400 million euros, that's $436 million, in various measures in reciprocation to their problems over low earnings, heavy regulation, and unfair competition from abroad. In Germany, farmers are against the government's decision to phase out tax concessions on agricultural diesel. Their argument is that this will lead them to bankruptcy. In Romania, the protests stem from anger about low prices for produce, rising costs, imports of cheap foodstuffs, and constraints imposed by the European Union's drive to fight climate change. In the United Kingdom, farmers are struggling to keep up with weather changes and war-related supply chain disruptions. The whole of Europe seems to have the agricultural sector in pain as climate change becomes a central focus and production prices increase. And no, it doesn't end there. As per Down to Earth, since 2023, farmers have protested in 67% of countries in South America region for a variety of reasons, such as wanting better export exchange rates and reduced taxes amid an extended economic downturn and Argentina's devastating drought, which have severely damaged crops and agricultural output. And look at this.
Welcome back to the F&O show, and now it's time for a breaking story that we have for you. We brought to you the exclusive news that mutual funds will soon need to conduct stress tests for mid and small cap schemes. NDTV Profit is now learning exclusively that the results of the first test to be out in just a few days. We have Sanjeet Mangat who's joining us to explain what the stress test will contain. Sanjeet, over to you.
That's right, Agam. We understand from our sources that AMFI in its circular to all the AMCs has indicated that all the mutual funds which have small and mid-cap schemes will have to undertake a stress test, and the results of the stress test will have to come by the 15th of the month for the preceding month. So the starting February portfolio, the results will come on or before March 15th, and these results will have to be disclosed on the website of the schemes of the mutual fund and of AMFI, and it will be on a monthly basis that these stress tests will be undertaken.
Right, Sanjeet, but also the method in which they calculate the portfolio liquidity will also be critical. How do mutual funds go about this?
So there is a standard format which has been arrived in consultation with SEBI and which AMFI has shared with all the mutual funds. The stress test disclosure will have columns or data with respect to the portfolio liquidity, beta of the portfolio, annualized standard deviation with respect to the index which is a benchmark for that scheme, and also data like the 12-month trailing PE and the portfolio turnover of the scheme. In addition to that, the method for testing the liquidity is a little complicated, but let me explain it in a very simple term. So if you have a portfolio of say 100 stocks, the method is to first determine how many days it will take to liquidate each and every stock, and based on that you calculate the liquidation for 25% of the portfolio and the 50% of the portfolio. As part of this liquidation process, the bottom 20% of the portfolio, which has the maximum number of days for liquidation, will not be touched upon. So the balance 80% is the portfolio, or 80 stocks. The top 80 stocks in your portfolio with respect to liquidity will be touched as a criteria for liquidation purposes, and then you have to calculate the stocks on a pro rata basis and how it is for 25% and 50% there. There is a volume methodology which also been implied here, which basically means that the mutual fund or the asset management company will have to assume that the volume that it may be able to sell on a daily basis will not be more than 10% of the volume in the market, which has been calculated as 3 months average volume for that particular stock, and you multiply it by 3 times of that. So you take 10% of that volume as the volume that you can liquidate on a daily basis till you fully liquidate the stock. And once you're fully liquidated, you are able to calculate the full number of days you need to liquidate the stock. You calculate that by 2 to get 50% portfolio liquidation, and by 4 to get 25% portfolio liquidation. So it's a pretty comprehensive criteria to look at the stress test coming of each of the portfolio. The good thing is that many of the portfolios have up to 15 to 20% of the large caps, so they are highly liquid, and so it brings in also a risk, saying that if there is a run on small and mid cap, you may see the first stocks to go out or to be sold will be the highly liquid stocks which are large cap stocks.
All right, Sujit, we'll leave it at that. Thank you so much for joining us and taking us through the latest updates with respect to what the AMFI holds and what they have suggested to the mutual fund industry. And of course, we'll continue to keep you updated about the latest on that. But we shift focus back to the futures and options space, and now we talk about stocks. I want to very quickly take a look at all the counters which are seeing an increase in open interest in their respective futures right now, and see where there is in fact traction. So let's pull that list up. And so we do have Tata Chemicals, SAIL and GNFC, which is looking at longs at the moment with an increase in open interest. On the other hand, M&M and Apollo Tyres are under pressure at the moment. And we are looking at some sort of short build up there. In terms of stocks which are seeing unwinding, are there enough? There are, in fact. So we do have MGL and IndusInd Bank, which are seeing unwinding coming through, decline in open interest, even as we see their underlying will come off. And on the other hand, Manappuram Finance, AB Capital and BHA are looking at about a short covering. Speaking of stocks, let's take a look at what our experts have to say about stock ideas that they have for us today. Tina, I come back to you on this one. Any stock ideas on your radar today?
So Agam, if I say that the overall market structure is quite tilted towards the long bias, so my both the calls would be on the long side. So the sectors which I have picked up were where the strength has been there consistently. The first one would be the chemical space. So if we see the chemical sector as a whole have been outperforming last 3-4 days, or you can see from the March series. And the stock which has not yet taken up that space is SRF. SRF has seen a very good accumulation at the lower point. It has given a breakout about 2430 level, and now the stock is poised to go towards 2550 levels. So we need to buy your 2500 call option. So somewhere around 54 to 58 is the buying range which the trader needs to look out for. The target would be 100 and the stop loss would be 40.
Okay. That's SRF from Tina. Sneha, what about you? Stocks on your radar?
So again, I have two buy calls. The first one is Havells. If you see, this counter has given a very strong run after some pause. Again, this counter is showing some strength in today's session, nearly up about 2.5%. So I believe we may see an up move in this counter. So I would recommend buying on dips Havells with a strict stop loss of 15.08, and the target expected is around 15.82. That would be the first target, and the second target would be around 16.10.
All right. That's Havells for you. Sneha, do you have any more stocks on your radar?
Yes, I do have another counter, which is BEL. If you see this counter again, this has been showing decent strength of late, and I expect a continuation in up move. So I would recommend buying an option trade over here, option call 230 call option around 3.5. The stop loss can be maintained around 2.2, and the target expected is around 6 rupees.
Okay. Tina, I believe you have one more stock on your radar as well. Can you take us through that one?
Yeah. So the second stock which I picked is from the metal space, that's Tata Steel. So Tata Steel is in a very strong bull run. We are seeing a long unwinding structure, which indicates that the traders are quite confident of this rally to continue. Going forward for the March series, by mid of March, I expect the stock to touch around 168 to 170 levels. So here we can buy a 155 call option that's trading near 5 to 5.25 levels. The target would be 8 and the stop loss would be 4.
All right. So those are a handful of calls coming in from our experts. As far as that goes, let's address maybe one or two buzzers that we have today for us as well. Now, of course, there's been a mention of steel stocks by one of our experts today. But besides that, we have a lot of chop and churn in your auto sector. At the moment, we also have Bajaj Auto, which is the top gainer, I would say that there has been a little bit of sideways movement after a very strong month of January, and to a certain extent, they've seen good gains to coming through as well. Sneha, your view on Bajaj Auto, what would your trade be, or if you would want to avoid this one at this point?
Yeah, overall, if you see the chart structure is quite good. It has been continuously trading above 20 DEMA on the daily chart frame. It had a resistance around 8,650, which has been breached. And I feel the momentum may continue in this counter. So someone who's holding a long position, yes, they can continue to hold. We can expect it to move towards 9,000 odd levels, because if you see, the options are quite active on that particular strike. So that is the level to watch it. But yes, someone who wants to take a trade now, I would say avoid as of now in this particular counter. Someone who's holding it, they can continue holding it.
And maybe I can take up Mahindra & Mahindra with Tina, because what's really happening here is that after the sharp cut of around 4.2% right now, it has moved beyond the, I would say about a 8-day low at the moment, and that could be problematic, because it very recently made a life high. It was doing well, and now M&M is declining and on very large volumes. Of course, the volumes are also to do with that stake sale that we've been talking about and highlighting since morning. That said, still, Tina, any view on Mahindra & Mahindra? How would you address this?
So if you talk of Mahindra, definitely today's fall is more to do with the deal perspective part of it, because if you look up the derivative data, there wasn't such sort of sentimental negative which was there. So I feel that this is a very short term fall which we have seen. 1850 is a very strong support. Around those level, we can see the buying interest coming up, and maybe in the March series itself, we can see a new high. So I will not recommend anyone to go short in this counter, and near 1850, we can go look out to go into a buying zone.
Okay, fair enough. But we have run out of time on the show, so I'm going to take a moment to thank both our experts, Tina and Sneha, for joining us and taking us through their views on the markets, as well as taking us through their trading ideas. And on that note, it's a wrap on the F&O show, but lots more lined up on the other side. Stay tuned to NDTV Profit.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Hello and welcome to NDTV Profit. Today we will talk about tattoos and the worth of this market. The history of tattoos in India can be traced back to prehistoric times when tribal people were captivated by drawings on stone or wood walls. Their attempt to replicate these figures through needles gave birth to the practice of inking skin. Over the course of time, tattoos were embraced by tribals as a mark of bravery, war, religious beliefs, customs, marital status, protection from the male gaze, and so on and so forth. Today, in 2024, tattoos have become a means to express thoughts, individuality, personal experiences, and sentimental designs. The industry is estimated to generate over 20,000 crore rupees per year. What is driving this growth? One of the key drivers behind the growth of the tattoo market is the rising demand for customized and unique designs. Improved technological equipment for making advanced, safer, and painless tattoos have boosted the market. The laser technology for removal or modification of tattoos have also added to the surge. Increased exposure and promotion of tattoo designs on social media have led to widespread influence of tattoo culture on the youth. Take a look at these figures now. As per Fortune Business Insights, the global tattoo market is projected to grow from $2.04 billion in 2023 to $3.93 billion by 2030 at a compound annual growth rate of 9.87%. This is a sharp rise from 3.8% year-on-year growth between 2017 and 2022. As per Custom Market Insights, the diamond jewelry market is expected to grow at a compound annual growth rate of 5.5% by 2032, while the luxury jewelry market at a rate of 8.9%, but the tattoo market is estimated to grow at 9.5%. Is the tattoo business lucrative? According to an article by Opportunity India, tattoo kits are now easily available for less than Rs 10,000, while high-end kits range from Rs 20 to 35,000. Now, in a city like Mumbai, the average cost per inch is Rs 2,000 to 2,500. In Delhi and Bangalore, the cost per inch is between Rs 1,000 to 2,000, and in Goa, it is about Rs 500. We spoke to a couple of tattoo artists in Mumbai and found that at an average, the business earns them a profit of Rs 75,000 to 1 lakh per month. In fact, as per an article by India Today, a person can earn a minimum of 20,000 rupees to Rs 2 lakhs per month depending upon one's work and creativity, with an initial investment of 1.5 to 2 lakh rupees. A beginner level tattoo artist can earn a minimum of 20,000 rupees per month, which gradually increases to a couple of lakhs or more depending upon the caliber of the artist and the uniqueness of their artwork. And I'd like to leave you with an interesting data by Advanced Dermatology that revealed that 63% of people with a tattoo smaller than the palm of
Good morning, welcome. You're tuned into the small and mid cap show. I'm Harsh Saita. Let's take a quick check on where markets are at. Absolutely flat where the Nifty is concerned. Flat as flat as it can possibly get. We're off the day's lows though, well off the day's highs. We're largely trading with a slight negative bias. But let me quickly take it to the pocket where there is a bit of movement. We're seeing good movement in the small and mid caps, and the Nifty mid cap index, if we can pull that up, well in the green, around 0.5% higher. Even the Nifty small cap is trading well in the green, around 0.2%, playing catch up after yesterday's fall that we saw in the broader markets. Let's pull up the advanced decline, try and understand what's happening with regard to the overall market, and largely it seems that it's a positive cue, at least coming in from the broader market indices. But there you go, the advanced decline showing roughly a 2:1 in favor of advances. So definitely the breadth is positive. It might be turning slightly negative, but outside of that, it currently looks comfortably in the positive. Let's quickly look at where sectoral indices are at. 0.33% of cut on the Nifty Bank after yesterday's sharp 1% rally. So definitely the Nifty Bank seeing a bit of pressure today. But outside of that, among the positives, metal, media was down yesterday, has recovered in trade today. And the general defensives, IT, pharma are looking up. Realty, good to see it a bit in the green after yesterday's probably being the top loser sectorally yesterday. And therefore a 0.5% definitely a welcome move for the Nifty Realty. But let's pull up something like a metal, because that's where some amount of action is at. We had JSW Steel declare some capacity utilization numbers, and the Nifty metal is up and away in trade. Look at those steel stocks, both JSW as well as Tata Steel up in trade. You also have Hindalco, APL Apollo on a positive note by Nuvama is up 1.3%. So across the board, metal names definitely in focus. But let's also pull up an IT, because we had Morgan Stanley on IT, and there you go, the entire pack is buzzing on the back of that, especially large cap. And within large cap, they prefer a TCS and Infi, the larger ones, and even within the small cap, they prefer something like a Coforge. Emphasis was of course a negative, which Morgan Stanley has, and LTTS also they were negative on, but the stock is up in trade definitely today. Let's pull out what's happening in the broader BSE 500 basket, what stocks are buzzing. And while we are there you go, you have Rallis, which is up around 11.5%, IIFL up around 10% as well. Positive move for IIFL after a couple of days of lower circuit. Tata Chemicals 9.5% higher now, was up again by a similar quantum yesterday as well. 10.5% up yesterday, 9.5% up today. Possible listing on Tata Sons being the key trigger why this stock is up and away. And then in terms of the negatives, look M&M being the top negative. So largely the focus seems to be on bulk and block within those negatives. Look at M&M, look at NLC, OFS opening up. Outside of that, can't see any names buzzing on the back of specific news, at least within this pack at the moment. But that's where we're at. I also want to try and pull up the Nifty mid cap and small cap. The Nifty mid cap among the constituents, the top gainers, the advanced decline looks healthy. The top gainers being Tata Chemicals, Fortis and Fact. Those are some of the top gainers. And among the losers, you have Prestige, Adani Power and CG Power. Bit of a correction on both Adani and CG. Prestige down roughly 2% or thereabouts. But let me go across to Mahima Vachrajani, who is in conversation with Ghazal Alag of Mama Earth. Let's cut across to that.
Right, Harsh. So we at NDTV Profit are celebrating Women's Day today, and joining us is a very special guest. From being born to a middle-class family in Haryana to becoming the co-founder of one of the largest Indian BPC brands, Mamaearth, with an empire of around 12,600 crores, she's also now a shark, enabling other entrepreneurs in their journeys. On our very special edition of Women's Day, we have with us Ghazal Alak, co-founder of Mamaearth. Welcome to the show, Ghazal.
Hey, thank you. Thank you for having me.
Right. So, Ghazal, tell us more about how your journey has been like from, being born in Haryana to being a co-founder of Mamaearth.
Yeah, so I was born in Chandigarh. I think very early on, I come from a family which has always been into business. So I've seen my dad work very closely with P&Ls, etc. And I think that was my first tryst with the business world, saying this is how it looks. Of course, I was an overall all-rounder student. Grew up well. Parents were proud. They wanted me to take non-medical as a subject, but I had an interest for computers, and that's what I picked up. And I think my journey has been a lot of ups and downs when it comes to career movements. From computers, I went on to become an artist. I was selling my works nationally and internationally before I started Mamaearth. And that journey was also very personal. It started with the birth of my son, Agastya, and looking for certified safe natural products, which I could not find in India. Is how the idea of Mamaearth came to us. And we launched ourselves in December of 2016 with 6 baby care products. And yes, have been growing since then.
Right. Also, if you can tell us what kind of challenges did you face while building Mamaearth? Because I'm sure because you were a mom and an entrepreneur at the same time.
Yeah. So I think any entrepreneur goes through very different set of challenges in his or her journey, right? It's not just limited to women. But I think my set of challenges were different from the other entrepreneurs that I was meeting back then. I was a mother with no experience per se in the category that I was entering in. And that became a roadblock for me very, very early on in my journey, because people did not have the belief that a mother can, enter or start a business in a category that she's not, very well informed about. But I continued to learn. We started the brand. The self-learning journey was something that continues with me even today. Other than that, I think a woman in this kind of business also needs to then take care of the manufacturing side of things, which is, RM procurement or working with vendors to get the products made. And that was another place which was very heavily male-dominated. And getting your space there and getting the trust of people that, yes, you can figure it out and they should be listening to you was another challenge that we encountered. So multiple challenges, but I think my, outlook towards those challenges was always that this is a problem to be solved and how can I best solve it has always helped me continue to move forward.
Right. And also during this journey, I'm sure you would have a lot of milestones that you've gathered. What are some of the key milestones that you're proud of the most?
I think the milestones that we are proud of the most are not the ones that make an entry into newspapers or headlines, etc. Very little things made us super happy and super proud. So, for example, the first time consumers, this first order that came to our website and people were willing to place their trust in us was the first milestone that I would say that really made us get up and dance around and saying that, you know what, we are getting started. Similarly, the first large order that came to us, it was from a birthday party where the mom wanted to distribute it as return gifts, was another vote of trust where they told us that we are doing well, we are doing okay, and they're trusting us. Similarly, I think, the first employee that we hired, and we felt that, yes, now we are in a position to, have people on board with us to support us on this journey was again a very small milestone, but a very close to heart one. And I would say recently taking the company public, there was something that we hadn't dreamt of until 3 years back. Again, made us really happy. That look in the eyes of our parents, our kids, that celebration, the team was so proud. I think that was another milestone that I'll say we were very, very proud of.
Right, absolutely. Also, now that you're a regular on Shark Tank, well, you are actually a serial entrepreneur per se. So what's next in store? Another Mama Earth?
No, yeah, there cannot be another Mama Earth. Mama Earth to ek hi rahega, and it's special. But within the company itself, which is Honasa, I think we are continuing on that journey of building more brands. We have 6 more brands which are growing really well. The Dermaco is also, one of the brands that we started. Phenomenal response into the active skincare space, which is more derma-oriented, using ingredients like salicylic acid, niacinamide acid. So I think we've identified ourselves as brand builders, and that's what we want to focus on by staying within the beauty and personal care category.
Right. Also, how do you manage your personal and professional life together? Because I'm sure you have a lot on your plate.
One hack which honestly really worked and saved me from that confusion of personal and professional life, because when you're an entrepreneur, the lines between personal and professional are honestly blurred. You might be at work, there might be a personal emergency that you need to cater to. Calendarizing both personal and professional commitments really helped a lot. That is something that I think, made me sane and took away that guilt where I always felt that I was not able to give my 100% to either work or personal life. So I know a lot of people who calendarize their professional commitments, but if you do the same on your personal commitments as well, life becomes easier.
Right. Also, you have a lot of awards and accolades in your name. Well, what is that one award or one listing that you're proud of the most?
I think the first time when someone called me the most powerful woman in business, award is separate, but that recognition that yes, I am in that position of power to influence people in a positive way. I am in that position where, coming from no experience, I could create something that I can now talk about. I think that gives me a lot of strength. And whenever I'm down or whenever I'm not feeling as good, I refer back to that phrase and I say that, you know what, I'll figure it out.
Right. And since Varun and you both manage work together and you both are there in your houses also together, how do you manage your relationship with him throughout this?
So it's a very good question and I often answer it. But it's actually easier when you're partners in life as well as in business, right? Because from your personal life, you bring so much understanding into the business world as well, that you're able to understand the chemistry, the equation of how one needs to deal with different kinds of situations, what is going to piss the other person off, what's going to make the other person happy. So I think we figured it out, and what we've also figured is that we can talk about work anytime we want, and we can talk about personal life anytime we want. So we don't try and segregate the two. I think that's something that has worked for us.
Right, right, Ghazal. So thank you so much for speaking with us at NDTV Profit. Your journey is truly inspiring. Well, moving on, let's take a break now, but stay tuned. We'll be right back with a lot more.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Amul has completed 50 years in India. PM Modi will attend the Silver Jubilee celebrations of the Gujarat Cooperative Milk Marketing Federation, the owner of Amul. At one point of time or the other, we've all grown up with Amul butter or milk for sure. The famous Amul girl created in 1967 is family. We all recognize her. But as the brand grows 50 years old today, do you remember the full form of Amul? It is Anand Milk Union Limited. From producing 250 litres of milk per day since the time Amul was formed back in the mid-90s to today, where Amul has over 36 lakh dairy farmers and produces nearly 300 lakh litres of milk per day, the brand has had a long journey. The story goes way back in time. In the 1940s, dairy farmers were worried. The middlemen exploited their ways of profitable income and a poor milk production system made their living difficult. Tribhuvan Das Patel and Verghese Kurian identified these issues and helped in the formation of the first milk union called Kaira District Cooperative Milk Producers Union in 1946. The cooperative model gave farmers direct ownership of the dairy industry. The union helped them process, market and sell milk and milk products without the interruption of intermediaries. And it was in 1955 that this union chose a brand name for itself called Amul, which means priceless in Sanskrit. And then in 1973, Amul Dairy along with 16 other district cooperatives formed the Gujarat Cooperative Milk Marketing Federation, which has now completed 50 years in India. Amul also started India's white revolution that made our country the world's biggest maker of milk and milk products. The brand follows an umbrella marketing technique which has helped GCMMF prevent association clashes and keep an open door for the patrons to coordinate in creating items. As per a report by Statista, the annual sales turnover of Amul from 2011 to 2023 has consistently risen, recording about 55,000 crore rupees of turnover.
Welcome back. You're watching the Small and Mid Cap Show. Well, we at NDTV Profit are celebrating Women's Day today, and joining us in another special guest, Ramani Dati, the CFO of TeamLease. Welcome to the show, ma'am.
Thank you so much, and thanks for having me today.
Right. My first question to you is that you're anticipating a strong operational performance in HR services in Q4, especially driven by the EdTech vertical. How much do you think will this add to your top line, and how do you see this improving your margins?
Yeah. On top line front, HR services doesn't move the needle much because majority of our business is driven by the staffing segment, because that contributes to almost 95% of our revenue. Only 4-5% comes from HR services. But on margins, definitely yes, because while our general staffing business is making only 1.5% EBITDA margin, plus minus, HR services makes about 7 to 8% EBITDA margin. And especially Q4, because of the seasonality in our billing in EdTech business, we clocked the highest margin percentage in EdTech business in Q4. So that kind of drives the overall margins at group level. And we believe the trend can be continued into future as well, with further margin expansion getting contributed by HR services.
Right. And in terms of your EBITDA margins for specialized staffing, they're around 6.5% right now. However, the aim is to get to 9%. And this is because you're expecting that the demand will kick back in. Now, can you give us the timeline as to when do you expect this demand to come back? And so when do you expect your margins to go back to 9%?
To be very honest, on demand front, we are totally clueless. There is uncertainty as of now on Indian IT services front when the hirings will reopen. We keep hearing that the employee utilization metrics have already peaked out, and at some point in time, they have to open hiring. But consistently for the last few quarters, we are seeing even the permanent employee headcount coming down in IT service companies. For us, GCCs to some extent are helping us to maintain the run rate in terms of revenues and profits. However, for us to expand the margins back to 8.5-9% kind of numbers, we really need the hirings to open up in IT services, Indian IT services. And we are hoping maybe by August, September that we can see some green shoots. And again, that's as of now a hope statement. We don't have any clear visibility on that front.
Right. And since your overall EBITDA margins were around 1.5% in Q3, and this was because there was a one-time bonus effect that was there. Now, going forward, since this benefit will not be available, then do you see a dip in your margins? And if yes, how much?
See, in specialized staffing business, we will be at that 6.5 or sub 7% EBITDA margin into future as well, assuming that there is no recovery in IT services because of the minimum level of fixed costs that we need to maintain and all of that. As and when we start seeing numbers coming back on services, that's when we can demonstrate margin expansion beyond 7%. Within general staffing, at this stage, we are targeting roughly about 5 to 10 basis points quarter on quarter.
Right. And in terms of your headcount, 9 months FY23, around 35,000 were added. Going forward, by the end of FY25, what kind of headcount additions are you expecting? And would you be expecting the same number of additions? Will it be better, or how do you see it panning out to be?
Yeah. Q4 typically is not a very highly seasonal number in terms of temp staffing headcount addition. Q3 used to be, but surprisingly this Q3 we had a higher attrition mainly led by weak festive season and BFSI also. There were certain guidelines issued by RBI regarding unsecured loans under 50,000 value and all. So that led to a slightly higher attrition. And we are seeing those numbers getting deferred into Q4. So overall for this year, we should be maintaining close to 20% volume growth. And for next year also, we should be able to maintain that run rate of 20% on headcount growth, on a base of headcount growth. This in absolute numbers will be higher than what we have added this year.
Right. Okay. So 20% minimum we can expect, right?
Yeah, that's right.
Right. Also, you've secured 4 strategic accounts. Which sectors are these accounts from? One, and when do you anticipate the boost in revenue from these sectors, and are these margin accretive?
Yeah. As far as general staffing is concerned, 2 industry segments at this stage are driving us the highest volumes for us. So one is BFSI with almost 21% share, and same with consumer vertical. FMCG, FMCD, those 2 put together also give us about 20% volume. Rest all other industries are in the range of 5 to 6%, be it retail, pharma, e-commerce, all other industries are around that 5 to 6%. However, in addition to BFSI and consumer, in the coming years, we believe that there'll be a good amount of hiring that we can do in blue collar staffing because manufacturing, EVs and other new age companies, especially in the manufacturing space. So we are seeing a good amount of demand for temp staff in the blue collar segment. And so far our exposure in that segment is only 1.5%. And that will be a focus area for us in the coming years. And we would like to take that number to at least 5 to 6% in the next coming quarters.
Right. At present, as you mentioned, BFSI and consumer segments are driving the demand. However, going ahead, which sectors do you think will pick up? And FY25, which sectors do you think will perform better?
Even FY25, we believe BFSI and consumer will continue to give us good numbers because even right now, in terms of the number of open positions, we have the highest share coming from these 2 segments. And that demand will continue not just for FY25, even for next 2 to 3 years, we believe these 2 sectors will continue to drive good amount of entry-level jobs in the country. Along with these 2, telecom and pharma, engineering. So these are the other segments which will give us more volumes in FY25.
Right. Thank you so much for speaking with us at NDTV Profit. Let's cut across to the NDTV Defence Summit 2024, where Defence Minister Rajnath Singh is in conversation with Sanjay Pugalia, Editor-in-Chief, NDTV Network. Listen in.
और दूसरा एक बहुत ही बड़ा टर्निंग पॉइंट है भारत की रक्षा नीति में, वो ये है कि लैंड सेंट्रिक के बजाय सी सेंट्रिक यानी नेवी की भूमिका बढ़ी और इंडो पैसिफिक में भारत का रोल, इस पर मैं आपसे कुछ सुनना चाहूँगा।
सी सेंट्रिक एंड एरोसेंट्रिक दोनों।
तो उसमें भारत की क्या पूछा आपने?
कि भारत की भूमिका इंडो पैसिफिक स्ट्रेटजी को लेके ग्लोबल केंद्रीय भूमिका में है।
हाँ, तो इंडो पैसिफिक में भारत की भूमिका मैं कह सकता हूँ पहले से कहीं अधिक प्रभावी हुई है। और आपने हाल में ही जो एक घटना हुई थी, शायद उस घटना की आपको जानकारी होगी, उसमें हमारी इंडियन नेवी ने जिस प्रकार का रोल प्ले किया है वो बहुत ही सराहनीय है, और उसके लिए अपने इंडियन नेवी को मैंने कांग्रेचुलेट भी किया था। अब यदि भारत की तरफ चाहे नेवी, चाहे जिसे समुद्र के माध्यम से, जल के माध्यम से, वायु के माध्यम से, थल के माध्यम से कोई भी यदि कोई नापाक हरकत भारत के साथ करने की कोशिश करेगा, तो भारत के अंदर इस समय वह इतना स्ट्रांग विल पावर है हमारी सेना के पास भी कि हम उसका मुंहतोड़ जवाब देने की ताकत रखते हैं।
एक बहुत बड़ा बदलाव और हम देखते हैं, और वो ये है कि पहले चीन की बात करते थे तो देश के स्तर पर एक एंग्जाइटी और एक चुनौती का भाव रहता था। अब जो भाव है पूरे देश में, पब्लिक का जो मूड है कि ठीक है चाइना को भी देख लेंगे, ये क्यों बदला है?
स्ट्रांग विल पावर की लीडरशिप चाहिए, और लीडरशिप मजबूत होगी तो स्वाभाविक रूप से जनता का कॉन्फिडेंस उस लीडरशिप के प्रति होगा। और मैं समझता हूँ सबसे बड़ी बात यही है, और सदैव हम लोगों ने अपनी जो भी हमारी फोर्सेस हैं उनके मोरल को हाई रखने के लिए जो भी स्टेप्स लिए जा सकते हैं वो सारे स्टेप्स हम लोगों ने लिए हैं।
जी। एक सवाल और इसी से जुड़ा हुआ है, जो चीन कहें या जो बॉर्डर की ज़रूरतें थीं, इंफ्रास्ट्रक्चर जो बनाया, और ख़रीदारी में, रक्षा सामग्री की ख़रीदारी में पहले भारत हिचक के बात करता था, उसको इस सरकार ने तेज़ गति से काम किया कि ख़रीदना है तो ख़रीदेंगे और अपना भी बनाएंगे। इस परिवर्तन के पीछे भी एक ये थॉट रहा होगा कि किस तरीके से भारत को मजबूत बना।
देखिए, किसी देश के, हमारे पड़ोसी देश के साथ अथवा किसी देश के साथ वार की संभावना हो अथवा न हो, बराबर हमारे फोर्स के लोग भी यहाँ कुछ बैठे होंगे, आप उनसे भी जानकारी हासिल कर सकते हैं, हमारे तीनों सर्विसेज के चीफ से भी पूछ सकते हैं। बराबर मैंने यह कहा कि हर समय वार के लिए हमको तैयार रहना चाहिए, हर समय, चाहे बिल्कुल शांति का काल क्यों न हो, लेकिन हमें हमारी तैयारी बराबर होनी चाहिए। भारत का चरित्र यह है, भारत के पिछले इतिहास के पन्नों को उठाकर भी कोई देखे तो भारत का इतिहास यही है कि भारत ने आज तक न तो दुनिया के किसी देश पर कभी आक्रमण किया है, न दुनिया के किसी भी देश की 1 इंच जमीन पर कभी भारत ने कब्जा किया है।
जी बिल्कुल।
लेकिन भारत को यदि कोई आंख दिखाएगा तो भारत अब ऐसी स्थिति में है कि उसका जैसा जवाब देना चाहिए वैसा जवाब दे सकता है।
बिल्कुल। मुझे लगता है कि रक्षा से जुड़े हुए जो एजेंडा और कार्यक्रम हैं, और आपने एम्बिशंस बताए अभी कि कितनी बड़ी चीज़ हो सकती है, उसके लिए भारत का निजी क्षेत्र बहुत ज़्यादा काम आप लोगों ने किया है, उसको सहयोग देने के लिए, चीज़ों को सुगम बनाने के लिए, अप्रूवल्स के लिए, परमिशंस के लिए। लेकिन हमको लगता है कि वहाँ और काम करने की ज़रूरत है ताकि प्राइवेट सेक्टर और कॉन्फिडेंट हो कि हमको पूरा सपोर्ट मिलेगा।
देखिए, कॉन्फिडेंस लेवल तो हमारे प्राइवेट सेक्टर का बढ़ा है, इसमें कहीं इस सच्चाई को कोई नकार नहीं सकता है। और जो भी प्राइवेट सेक्टर से जो सुझाव आते हैं उस अनुरूप सोच समझकर जो भी आवश्यक होता है वह स्टेप्स गवर्नमेंट लेने में रंच मात्र भी हेजिटेट नहीं करती है। क्योंकि जब भी SIDM वगैरह की कोई कॉन्फ्रेंस होती है, SIDM की कॉन्फ्रेंस में मैं जाता हूँ, अलग अलग जो हमारे इंडस्ट्रीज से लोग जुड़े हुए स्टालवर्ड्स हैं उन सब सारे लोगों से बातचीत होती है। मैं देखता हूँ कि मेरे सामने तो सभी अपनी खुशी का इजहार करते हैं, अपनी प्रसन्नता का इजहार करते हैं, लेकिन इसी के साथ साथ उन लोगों को मैं यह भी कहता हूँ कोई नए सुझाव हों अथवा कुछ ऐसे ताकि आप अपनी इंडस्ट्रीज को प्रमोट कर सकते हैं या जो कुछ भी रिक्वायरमेंट्स भारत की हैं उसको पूरी कर सकते हैं, भारत का आप एक्सपोर्ट बढ़ा सकते हैं, उसके लिए और यदि कुछ रिक्वायरमेंट्स हों तो मैं आप सभी का सुझाव यदि प्राप्त होगा तो उसका मैं स्वागत करूंगा।
बिल्कुल। अब आपकी इजाज़त हो और चुनाव के पहले आपसे बात करने का मौका मिला है। आमतौर पर आप की नोट एड्रेस के बाद इंटरव्यू देते नहीं हैं, लेकिन NDTV के लिए आपने समय थोड़ा और निकाल लिया है, आपका बहुत शुक्रिया। तो मेरा पहला सवाल ये होगा कि रक्षा मंत्री के नाते बड़ा ज़रूरी है कि आपका निशाना अचूक बैठना चाहिए। तो मैं 4 नंबर आपके सामने रखता हूँ, उसमें से एक चुनिएगा आप। 273, 304, 370 या 400।
एनडीए 400 पार।
एनडीए 400 पार में थोड़ा ये पता करना है हमको।
बीजेपी 370 पार।
बीजेपी 370 पार। 273 और 370 में फर्क क्या है?
370 को तो अच्छी तरह समझते होंगे आप। 370 पार कर गए हैं।
एक्चुअली ऑन अ सीरियस नोट, हम लोग बहुत हिसाब लगाते हैं चुनाव के पहले और गलत भी होते हैं अपने अनुमानों को लेकर के कि बीजेपी हमेशा हम लोग अंडर एस्टिमेट करते हैं और उस एक्सपेक्टेशन को एक्सीड करती है। तो इसका गणित हम समझना चाहते हैं, क्योंकि एक नैरेटिव ये है कि बंगाल, महाराष्ट्र, दक्षिण और बिहार ये कठिन डगर है आप लोगों के लिए।
बिल्कुल कठिन नहीं है। आपने देखा होगा कि 2014 के पहले हमारी स्थिति वेस्ट बंगाल में कैसी रहती थी। एक भी सीट हमको नहीं मिलती थी। 5 वर्ष के बाद 2019 में जब चुनाव हुआ, हमको 18 to 19 सीटों पर विजय हासिल हुई पार्लियामेंट्री कॉन्स्टिट्यूंसी में। और इस बार देखिएगा, इस पॉसिबिलिटी को भी रूल आउट नहीं किया जा सकता कि वेस्ट बंगाल में भारतीय जनता पार्टी इन बिटवीन 25 to 30 होगी। और सभी जगह, इवन सदर्न स्टेट में भी भारतीय जनता पार्टी और हमारे प्राइम मिनिस्टर की लीडरशिप को लेकर एक लोगों का विश्वास, एक भरोसा बढ़ा है। हाँ, और आप देखते होंगे कि किस तरीके से कॉमन मासेस का रिस्पांस इस समय हमारे प्राइम मिनिस्टर को मिल रहा है। प्राइम मिनिस्टर की बात छोड़िए, हम लोग जाते हैं तो रिस्पांस जो देखते हैं उससे हमारा कॉन्फिडेंस लेवल हाई होता है कि हम जो टारगेट हम लोगों ने तय किया है उस टारगेट को अचीव करना ये हमारे लिए कठिन नहीं है।
बिल्कुल। आपने लोकतंत्र और विपक्ष की भूमिका के बारे में, और जो कि एक निराशाजनक सी भूमिका है, ऐसा बहुत लोग मानते हैं, आपने जिक्र किया उसका। लेकिन मैं आप पर ये इल्ज़ाम लगा सकता हूं कि आपकी पार्टी तो लार्जेस्ट इंपोर्टर है विपक्षी नेताओं की। विपक्षी नेताओं का इंपोर्ट बीजेपी बहुत ज़्यादा कर रही है।
नहीं, विपक्षी नेताओं में भी बहुत सारे ऐसे लोग हैं जो चाहते हैं कि देश आगे बढ़ना चाहिए, और उनको लगता है कि उनकी पार्टी इस समय देश को आगे ले जाने की स्थिति में नहीं है, और अकेले यदि कोई पार्टी है तो भारतीय जनता पार्टी ही देश को आगे ले जा सकती है, एनडीए ही देश को आगे ले जा सकती है, और अंडर द लीडरशिप ऑफ द प्राइम मिनिस्टर नरेंद्र मोदी ही यह देश आगे जा सकता है। इसलिए वो स्वाभाविक रूप से चल कर आ रहे हैं। ऐसे लोगों का स्वागत है।
एक राजनीतिक कार्यकर्ता के रूप में मैं जानना चाहूँगा आपसे कि विपक्ष इस तरह से फेल क्यों हो रहा है? मजबूत विपक्ष सबको चाहिए।
नहीं, ये बहुत चिंता का विषय है। हेल्दी डेमोक्रेसी में विपक्ष भी सशक्त होना चाहिए, हमारी ये निश्चित धारणा है। लेकिन विपक्ष जिस तरीके से कमज़ोर हो रहा है उसके लिए अन्य कोई जिम्मेदार नहीं है, विपक्ष स्वयं इसके लिए जिम्मेदार है।
जी, एक और जिज्ञासा है, वो ये कि बीजेपी हर चुनाव में बिल्कुल आखिरी वोटर, आखिरी बूथ तक जो मेहनत करती है उसमें बहुत कुछ इनोवेट करती है। चुनाव प्रचार से लेकर के वोटर को लाने तक, और जिन सीटों को नहीं जीत पाए अभी तक उनको जीतने तक। उस बारे में क्या नया इस बार आप लोगों से हम लोग अपेक्षा करें?
देखिए, हम लोगों का अपने जो भी ग्रास रूट पर काम करने वाले कार्यकर्ता हैं उनसे भी यही आग्रह रहता है कि आम जन तक पहुंचने की आपकी कोशिश होनी चाहिए, उनसे बातचीत लगातार चलती रहनी चाहिए। हम लोग यहाँ तक सबसे निचली इकाई में पन्ना प्रमुख हमारा होता है, पन्ना प्रमुख बोलते हैं, माने उसके पास 10-15 ऐसे घर होते हैं, केवल 10-15 घरों में रहने वाले परिवार के सदस्यों से उसको संपर्क करना है, उससे डायलॉग बनाकर रखना है, उससे बातचीत करके रखना है, वह काम करता है। माने टॉप टू बॉटम जो हमारा सिस्टम है वो बहुत ही स्मूथ है, बहुत ही इफेक्टिव है।
बिल्कुल। एक चीज़ और, आपने कहा पन्ना प्रमुख, उसके आगे हमने तो ये सुना कि अब लाभार्थी प्रमुख तक कि जो बेनिफिशियरीज हैं, और ये एक प्रकार का सेक्युलराइजेशन हो गया है वोटर का।
नहीं, जो बेनिफिशियरीज हैं, जो लाभार्थी हैं, उन तक भी वही पहुंचता है उन तक।
जी।
और इस हद तक हम लोगों ने चिंता की है, जिनको गवर्नमेंट की स्कीम की बेनिफिट मिलनी चाहिए वह बेनिफिट मिलने से कोई छूट न जाए, इसलिए एक संकल्प यात्रा हम लोगों की प्रारंभ हुई थी, आपने देखा होगा। और जगह जगह जाकर सभी लोगों से ये पूछ रहे हैं, आप तो कहीं छूट नहीं गए? जिसको प्राप्त होना चाहिए लाभ सरकार की योजनाओं का, ऐसा तो नहीं है उससे कोई वंचित रह गया, कोई छूट गया। इस हद तक चिंता कर, कोई वंचित रह गया तो तुरंत वहीं पर उसको वो असिस्टेंस प्रोवाइड की जाती है।
जी बिल्कुल। आपने आज एक बहुत इम्पॉर्टेंट बात कही और बहुत डिटेल में आपने मीडिया आलोचना और देश का जो सोशल कंसेंसस होता है उसके बारे में बहुत रोशनी डाली है, और मुझे लगता है एक नई चर्चा देश में शुरू करेगा। इस
जानबूझ के किया है मैंने,
आई कैन सी दैट।
मैं जानता हूँ डिफेंस समिट में आप लोगों ने एक्सपेक्ट नहीं किया होगा, लेकिन जानबूझ कर किया है मैंने।
बिल्कुल, और शायद वो जाना बुझा कारण ये है कि भारत में बहुत लोगों को, जो आज आपने बहुत ढंग से आर्टिकुलेट किया, इस बात का रियलाइजेशन नहीं है कि कंसेंसस में बदला क्या है, पुराने एलिट किस तरीके से बेदखल हो गए हैं और इसको पचाने में दिक्कत हो रही है। एक प्रश्न आपकी कंस्टिट्यूएंसी के बारे में भी मैं पूछना चाहूँगा, बल्कि उसके पहले जो मैंने विपक्ष का और आलोचना का जिक्र किया, वो आप लोग कितने सेंसिटिव हैं, कितने रिस्पॉन्सिव हैं। इसका एक उदाहरण ये है कि आसनसोल से एक कैंडिडेट दिया और उसके बाद 48 घंटे के अंदर आप लोगों ने बदल दिया, इसके पीछे क्या सोच रहती है?
सोच तो यही है कि हेल्दी डेमोक्रेसी में कोई हमारा कार्यकर्ता हो, कोई व्यक्ति हो, ऐसा कुछ उसके द्वारा न किया जाना चाहिए, न बोला जाना चाहिए जो कि डेरिगेटरी हो, अपमानजनक हो, अथवा किसी को हर्ट करने वाला हो, किसी इंडिविजुअल को अथवा किसी सोसाइटी को अथवा किसी सेक्शन को हर्ट करने वाला न हो। यह प्रिकॉशन लेना चाहिए, और इसमें हमको करने की जरूरत नहीं पड़ी, उस व्यक्ति ने स्वयं ही फैसला कर लिया।
बिल्कुल,
स्वयं ही कर दिया जी।
क्योंकि बीजेपी की छवि ये है कि माय वे और हाईवे, तो उसमें पब्लिक का अगर क्रिटिसिज्म आया तो उस पर आप रिस्पॉन्ड करते हैं। ये बात लोगों को लगती नहीं है, लेकिन एक्चुअली मैंने देखा है हमेशा कि फीडबैक आप लोग बहुत ज़्यादा लेते हैं।
हाँ, बिल्कुल फीडबैक लेते हैं।
बिल्कुल
सही बात।
अब लखनऊ के बारे में, चूँकि आप सचमुच हेल्दी लोकतंत्र चाहते हैं, तो वहाँ हम लोग सपा और कांग्रेस की मदद करें कैंडिडेट ढूंढने में।
नहीं, कैंडिडेट मिलेंगे लोगों को, मिलेंगे।
और आपका वहाँ का जो रिकॉर्ड रहा है वो है 54% वोट शेयर था आपका 14 में, 57% था 19 में, 24 का 60% मैं टारगेट दे दूँ आपको।
टारगेट क्या थे, तो जनता के हाथों में फैसला है। मैं कोई बहुत धरती पर ही रहकर बराबर कोई काम करता हूँ और सोचता हूँ, जो जनता को मंजूर होगा वो।
एज कैंपेनर आपको पूरे देश में घूमना है, तो लखनऊ में भी आप समय देंगे या जरूरत नहीं है?
अभी तक 2009 से लेकर अपनी पार्लियामेंट्री कॉन्स्टिट्यूंसी में इलेक्शन के दौरान जितना समय देना चाहिए मैं कभी नहीं दे पाया। मैं कभी अपनी पार्लियामेंट्री कॉन्स्टिट्यूंसी में इलेक्शन पीरियड में 2 दिन रह पाता हूँ, या कभी कंट्री के किसी पार्ट से कोई कैंपेन करने के बाद रात को लौटा तो एक कोई पब्लिक मीटिंग वगैरह एड्रेस कर लिया। मैं अपने को बहुत सौभाग्यशाली मानता हूँ कि जिस संसदीय क्षेत्र से मैं लड़ता हूँ, जनता का मुझे बहुत प्यार मिलता है, बहुत प्यार मिलता है।
जी बिल्कुल। एक आखिरी सवाल और आपसे पूछना चाहूँगा मैं, वो ये कि दक्षिण भारत को लेकर के प्रधानमंत्री मोदी से लेकर के बाकी सारे नेताओं की जो सक्रियता है वो कमाल की है। पहले हम लोग जिस ज़ुबान में बात करते थे वो था कि साउथ वर्सेस नॉर्थ या साउथ एंड नॉर्थ। अब ये साउथ और नॉर्थ का एक अजीब सा इंटीग्रेशन प्लान में देख रहा हूँ बीजेपी की तरफ से, थोड़ा इसके बारे में अगर आप बताएं तो।
देखिए, बहुत सारी पॉलिटिकल पार्टी नॉर्थ और साउथ डिवाइड की बात पहले भी करती रही हैं, लेकिन मैं समझता हूं कि अब यह डिवाइड की बात बोलने की हिम्मत कोई नहीं कर पाएगा। और मैंने ऐसा महसूस किया था पहले, साउथ में कुछ लोगों के दिमाग में ये बातें कुछ बैठी भी रहती थी कि है ऐसा कुछ, लेकिन हमारे प्राइम मिनिस्टर की, मोदी जी की जिस प्रकार की अप्रोच रही है, काम करने का जो उनका तौर तरीका है, तो यह डिवाइड की जो फीलिंग वह रहती थी वो लगभग क्या मैं पूरी तरह से अब समाप्त हो चुकी है। हमारे प्राइम मिनिस्टर के प्रति, हमारी पार्टी के प्रति अब साउथ में बड़ी तेजी के साथ लोगों की रुझान बढ़ी है।
और ज़्यादा मेहनत हो रही है उन 2 स्टेट्स में जहां आप लोगों के लिए बहुत बड़ा कठिन रास्ता है, वो है तमिलनाडु और केरल।
मेहनत तो हम लोग सभी जगह करते हैं, चाहे वहाँ एक भी सीट आती हो या ना आती हो, वहाँ भी मेहनत करते हैं। यहाँ 100% रिजल्ट हासिल होता है, वहाँ भी मेहनत करते हैं।
बिल्कुल। और दूसरा ये है कि अलायंसेस इतने आपके पास हैं, इतने सारे अलाइज हैं, उसके बाद भी आप लोग रुक नहीं रहे हैं। अब पहले नीतीश, फिर नवीन बाबू, और हमको लगता है फिर दक्षिण से भी कुछ ले आएंगे। कितना ग्रैंड से कितना ग्रैंड अलायंस चाहिए?
नंबर ऑफ एलाइज उसी के साथ बढ़ेंगे जिसका दिल बड़ा होगा। छोटे दिल के पास इतने लोग नहीं जा सकते।
तो विपक्ष में बचेगा क्या, और कांग्रेस का सीट टारगेट क्या रखा जाए? कांग्रेस का भी एक सीट टारगेट तय कर लें।
नहीं, तो उनको तय करना है। ये तो विपक्षी तय करेगा उनको कितना हासिल करना है। हम तो बिल्कुल एक अपनी पॉजिटिव अप्रोच हमारी रहती है, नंबर ऑफ सीट्स हमारी अधिक से अधिक बढ़ सके।
जी बिल्कुल।
अधिक से अधिक हम जनता का विश्वास हासिल कर सके। अपना प्रयत्न तो यही रहता है।
बिल्कुल। मतलब हम लोगों को डर ये है कि आप लोग कहते थे कांग्रेस मुक्त भारत, लेकिन आप लोग करीब करीब विपक्ष मुक्त भारत बनाने पर लगे हुए हैं।
नहीं, हम लोगों ने कहा कभी नहीं। हम चाहते हैं विपक्ष रहे।
जी,
ये तो उन लोगों की जिम्मेदारी है।
बिल्कुल।
वो कैसे रहते हैं। हमको 100% सीटें मिल जाएं, तब भी हम इस बात की बराबर चिंता करें कि भारत की जो हेल्दी डेमोक्रेसी है उस पर किसी भी सूरत में कोई क्वेश्चन मार्क न लगने पाए। यही हमारी कोशिश होगी।
बिल्कुल। आपने आज इस बातचीत के लिए अलग से समय दिया, हमको बहुत धन्यवाद आपका।
बहुत बहुत
थैंक यू।
बहुत बहुत धन्यवाद।
Hello. Good morning, ma'am. I'm speaking from XYZ company. Are you looking for a job or a job change? Have you been receiving unwanted calls from spam numbers? Are you tired of being offered new jobs, insurance schemes, or free health checkups? Well, today we will look at an interesting survey report by local circles on pesky calls that received 60,000 responses. Most unwanted calls are related to financial services, 54%, and real estate, 22%. In fact, the report has taken names. 40% mobile subscribers have identified Bajaj Finance as a top offender, HDFC Group as the second biggest pesky caller. The report reveals that 60% of people received 3 or more spam calls on an average day every day, and 92% of people registered on the Do Not Disturb list still get pesky calls. So is being listed on DND working? Clearly not. But the report also recorded a minute relief, as per which 6% people don't get any such phone calls. This relief comes after the TRAI directive to banks, insurance companies, and other commercial entities. TRAI is the Telecom Regulatory Authority of India. In fact, the Department of Consumer Affairs has constituted a committee comprising members of different regulatory authorities, telemarketing companies, and cellular industry to draft the guidelines to address the issue of pesky calls. So yes, pesky calls are still a worry, but there is a little relief too. Can you ignore them though? Toll-free numbers are identifiable, so institutions have found a new way. According to the report, calls from different mobile phone numbers that seem to belong to companies or brands have risen from 29% in February 2023 to 36% now. And look at the change in trend. Real estate selling has risen from 18% last year to 22% now. However, job offerings have decreased from 10% to 4%, and in the case of those selling financial services, the calls have slipped from 60% to 54%. So the bigger question is, will the nuisance of pesky calls end anytime soon? There should be a system where pesky callers are blacklisted at the Aadhaar level, so they have the risk of not getting a new SIM. Also, brands on whose behalf the contracted callers are calling also need to be held accountable by the Department of Consumer Affairs, so brands institute the right consumer outreach practices both with employees as well as third-party contractors. For more such updates, stay tuned to NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my...
Good morning. This is a special programming on the occasion of International Women's Day, that's tomorrow. And today at NDTV Profit Studios, we aim to recognize contribution of women from all walks of life. In today's Women's Day special, we throw light on the gender gap between male and female fund managers in the industry. Did you know out of 473 fund managers, only 42 are women managing funds? Take a look.
The fund management industry has plenty of opportunities. Despite that, women fund managers are drastically underrepresented. The latest findings of Morningstar report shows that of the 473 fund managers, 42 are women who are managing funds either as primary or secondary managers. While there has been a steady increase in the number of fund managers as compared with 428 seen last year, the number of women fund managers has been static. Given that there was no increase in the number of female fund managers since last year, the representation marginally declined to 8.88% from 9.18%. The total open and closed-end assets managed or co-managed by female fund managers was approximately Rs 6.66 lakh crore or 12.63% of the total mutual fund assets. The assets managed by women saw a sharp uptick compared with last year when women managed about Rs 4.44 lakh crore, a growth of 50%. Women in finance are no longer an oddity, with some fund management companies even led by women. However, the percentage of women fund managers in the country still remain exciting. We spoke to a few female fund managers at top AMCs, with some of them having 25 plus years of experience in the field of finance and understand their growth and challenges.
When I started off, there were people who were joining and gradually getting into it, but wherever they had family support, the number of girls who were coming were much lesser. But today it is almost every family, at least to start with, people target to get into career, have that thought process.
The journey has been quite challenging as well as quite a learning perspective, and I guess on the curve of learning I am still there and learning every day. That's the best part of my field, I can say. The problem of representation of females being less is not particular just to the finance industry. It's overall, because the overall pie itself, right? The labor force participation, if you look at females, has been quite low in India. I mean, it's even lower than what our neighboring countries have. So the problem is everywhere. But as you mentioned, yes, in our field of finance, it has been even much more. Maybe one reason would have been the lack of confidence.
Gender or pay scale has not been an issue anymore, and opportunities have also been the same and equal for all in this highly competitive industry. So what could lead to more participation and representation of women in the fund management industry?
Organizations start prioritizing the fact, look at women diversity, and not only for namesake, because women diversity, gender diversity is a big fad today.
Better flexible hours of working, work from home if possible on few days, a hybrid model, and the proximity to the workplace. These are some things which can reduce the burden on females, and the participation rate would increase.
Well, you heard from the fund managers. Now my colleague Tamanna also spoke to the Metro woman Ashwini Bhire, who is the MD at Mumbai Metro Corporation and Additional Municipal Commissioner of BMC, about the future projects and what goes in making Mumbai the city of dreams.
I think uncertain or uncharted challenges is something which is, I think I would term is at the biggest challenge. Because the project of this size, they already come with some inherent challenges. The size is huge. You have to implement these projects in a very, very crowded city like Mumbai. You need land, you need money, you need to convince people, and you need to actually take the risk related to construction and deliver the project safely. But these challenges are chartered challenges. You know what exactly this is going to be and you plan for it. But in these kinds of projects, there are many uncharted challenges which you have not anticipated. And dealing with them is one of the most difficult things, I would say. And we have faced many such challenges in this project. And that is something which, you have to decide on the spot what you need to do about it. And sometimes they get dragged. So how to come up with a solution, that becomes the most challenging thing.
RA Metro car shed was the biggest one. It became, I think, a cause for environmentalists.
Yes, that I would put it in this uncertainty box,
but
that kind of challenge.
You became sort of painted as the person who wanted to push it through and didn't care for the environment. How tough was that?
It was absolutely tough. But once you know what your goal is, then probably it is easy to deal with that. Because having a car depot at RA for this metro line is what makes that metro line really efficient and which can provide real service to the city. If you remove the depot from that area or that end of the metro, then the project completely loses its significance and importance. So if that is the importance of that location at that of that depot, then it was my duty to fight for it and ensure that the project is delivered to the city in the manner it was planned for. And that is why, but that time we had never thought that we will have that kind of an opposition from those sections of the society, because the procedure was already followed. Everything was laid down. So this was some kind of an uncertainty which we faced, and we had to deal with it, and I had to take that tough stand, even at the cost of my personal kind of the problems which I had to face.
So you paid the price for that stand. For some time you were removed from the metro project, then you were brought back. All those uncertainties continue. How challenging then is it to now get back on track and ensure that this project, which is very, very crucial to Mumbai's transportation structure, is delivered on time?
There has already been a delay of almost 2.5 years to 3 years.
Because of RA?
Because of RA. Because that decision was pending. There was a stay for that location. And unless you have the depot location fixed and start working on the depot, it becomes very difficult for the rest of the project to get completed and get delivered. So my challenge when I went back was how to reduce that time within which we could complete the depot and deliver the project. Normally depot would take 2 to 2.5 years to complete, the depot of this size. But we had to reduce it. We have to reduce the number of months which were required for the depot and ensure that the mainland and depot are connected. Because the depot was not there, our trains were partly ready at some other location, but they were not able to be brought here. So all those issues were there. All problems were revolving around the depot. So my job was to minimize those projects, push the depot in the maximum possible manner, which we have tried to do, and now the depot is almost ready. Depot connected, the depot charging is happening as we speak. The main line is getting connected to depot. Our trial testing has started, And we are hopeful that in another 3 months, when we complete all our testing and certification, RDSO certification, ISA certification and CMRS, so by end of May or early June, the project will be ready for commissioning and it will be offered in the service of the citizens.
Okay, so by June, July, maybe
Yes.
we can, actually see this come to life. Now, why is this Metro Line 3 important in the larger picture?
This Metro Line 3 is one of the most important corridors of the overall Mumbai's Metro Master Plan. But the more importance of this project is this is the only corridor which connects the northern and central suburbs of Mumbai to the island city. This is the only corridor which comes to island city. All other metro corridors like line 2, line 6, even line 7, they get connected to this corridor. Similarly, other public transport modes like the Central Suburban Railway, Western Railway, as well as both the airports, they get connected to this corridor. And that is why this is the corridor which goes into the areas which are today largely unconnected by any public transport. And these are the areas where there are multiple business districts and employment centers, educational hubs and even health hubs. The medical hubs are situated and people need to take this route, but by using multiple modes of transport, which takes longer time for their journey. And most of the times they have to travel on roads which are extremely congested. So their journey time is not only more, but the comfort and safety is also compromised. So this corridor provides the safer, more comfortable and more modern kind of connectivity to all these congested areas of Mumbai.
Electoral bonds have been deemed unconstitutional by the 5-judge Supreme Court bench headed by Chief Justice D.Y. Chandrachud. They were first introduced in 2018. An electoral bond is a means to fund a political party in India while maintaining anonymity. These bonds are available in multiple denominations ranging from 1,000 rupees to 1 crore in specified branches of the State Bank of India. This was introduced in the system to maintain transparency in political funding via a banking network and reduce black money. But on the flip side of this intention, questions have been raised on the basis of an important fundamental right of democracy. That's right to information. Is it constitutionally right to keep the source of political funding discreet? Why shouldn't the public know who is funding how much money to different political parties? As per the findings of Political Party Watch, a program under Association for Democratic Reforms, 28,030 electoral bonds worth Rs 16,618 crore were sold between March 2018 and January 2024. The Supreme Court's unanimous decision follows a petition filed in September 2017 challenging the Finance Act 2017, which introduced the electoral bond scheme for the purpose of electoral funding. The Act has also removed the previous limit of 7.5% of the company's average 3-year net profit for political donations. The Supreme Court has asked the following corrective actions to be taken immediately. State Bank of India will need to stop issuing electoral bonds immediately. SBI will have to submit the details of the purchase of electoral bonds and their encashment by political parties since the interim order of the court, which is April 12, 2019, to the Election Commission in 3 weeks by March 6th. The Election Commission will have to publish all these details on its website 1 week after, that is on March 13th, after it has received all the information. Electoral bonds that have not been encashed yet by the political parties will need to be refunded. For more such updates, stay tuned to NDTV Profit.
Different people believe in different things.
Markets trade in the green with marginal gains. Mid-cap and small caps gain strength after 2 days of profit booking. Sensex is above 74,100 while the Nifty trades above 22,500. Most sectors trade in the green, led by media and metals. On the other hand, banks and auto and oil and gas buck the trend. Shares of Mahindra fall over 4% as promoter group sells 0.9% equity at 1,913 rupees per share. And Bharti Airtel is in focus as Singtel sells 0.8% direct stake worth over 5,800 crores to GQG Partners. And a stellar debut for Mukka Proteins. Stock lists at a premium of 57% to its issue price on the BSE. Hello and welcome. This is Hot Money. I am Agam Vakil, and in this show we take you through all the stocks which are buzzing in trade and have been the flavor of the season. But before that, a quick look at how markets are faring, and well, they've been fairly stable at the moment. It does seem like the Nifty is making a habit of making a new life high every single day, and today is no different, even though it's largely flattish. So it's been a quiet morning so far, quiet first half of the day at least. It's the same for the Bank Nifty. Not too much to speak for. In fact, currently trying to make its headway towards its own life high, but the Bank Nifty has not done much at the moment, and that's also been fairly quiet. Currently marginally in the red. What about the broader markets? So how are the mid-cap and the small-cap indices trending? Is there an outperformance? There has been a little bit, but remember that we've seen sharp cuts in both these key indices over the course of the last 2 days. Well, we have seen advance for today, and they're certainly outperforming the benchmarks at the moment. To take a look at the Nifty and its contributors, let's see where there is a pull and a push there. So TCS up and about. We're going to talk about TCS in today's edition of Hot Money. L&T, Tata Motors and Bajaj Auto, all of them advancing in trade and providing a little bit of support to the Nifty. And what's weighing on the Nifty is Reliance Industries for the second straight day perhaps. M&M, ICICI Bank and ITC. What about broader markets? Let's take a look at some of those counters which are in fact buzzing right now. And there are plenty out there, where we have seen a lot of traction, at least as far as the mid-cap, index is concerned, as you mentioned, and as you've seen, that we are looking at some amount of gains, and a lot of that will be on account of some of your relatively smaller names, which are in fact doing well in today's day of trade. Of course, your AB Group financial stocks are doing well. So you have AB Capital up around 1.7%, as well as ABFRL, which is also up around 1.8%, by just as much. But Tata Chemicals is clearly the stock of the day in the broader markets, and that's up as much as a whopping 14% at the moment as we speak. So a very strong day of trade coming in there. Tata Tele follows suit. Tata Tele is also up around 6% at the moment, and we have started seeing gains in hospital stocks like Fortis Healthcare as well. That's up and about, and that's up as much as 4.4% at the moment. So that's how things are panning out as far as your broader markets are concerned. What are we talking on Hot Money today? Well, we are addressing M&M. Because of the stake sale. We are also addressing Bharti Airtel, also because of a dilution in stake there by one of the investors. Then, of course, we have Infosys and TCS. We have a Morgan Stanley note playing a little bit of a contra bet there. And JSW Steel on production numbers, also addressing Phoenix Mills. Again, a broken note. And Bharat Electronics on account of a UBS increase in its price target. Let's start off right at the top with Mahindra & Mahindra. Now this one is in focus, and the stock has dipped right now. It's down as much as about 4%, and we have the promoter entity selling stake here. Let's get in Smriti to give us more details here. Smriti, what do you have for us?
Hi, yes, Mahindra & Mahindra's promoter, which is Prudential Management and Services, is today going to sell about 0.75% of stake today in the market. That's about 93 lakh shares, and from the price will be from up to 3% from yesterday's closing. So on an upper end, the deal is about over 1800 crore rupees. Now Prudential held 11.6% stake as on December 2023, but it came out with a statement last night as well, Mahindra and Mahindra, on the exchanges, where it said that shares of Prudential held by the former chairperson Keshav Mahindra, who passed away last year, were given to his family, and they have liquidated a proportion of this stake to meet their needs, and they promised that they will continue to retain the status of promoter in the group company, and there is no intention to sell further stake in the company in the foreseeable future. So that's the statement from the promoter group as well, that they're gonna continue to retain the promoter position and won't sell stake. Now all the details about the price and the stake, NDTV Profit saw the term sheet last night and were put out, and that's why we're seeing a sharp reaction in the market today as well on this.
Okay, Smriti, thank you so much for getting us those updates on that specific stake sale from the promoter group in M&M. We know that it has seen a lot of strength of late, about a consolidation, and now today we're looking at a decline coming through. But to talk to us about all the stocks that we want to discuss, well, we are in conversation with Sharmila Joshi of sharmilajoshi.com. Sharmila, good morning. Thanks so much for joining in. Also, a happy Women's Day to you in advance. Well, I'm going to naturally ask you about Mahindra & Mahindra. How are you, based on this particular counter, we've seen strength. Do you still see good long-term advances for this company?
I think it's precisely as you said, that the stake sale has been announced at a price which is fairly elevated, and it was elevated for a good reason. We've been seeing very good numbers from Mahindra & Mahindra, and it has been the kind of product lineup that they've had, and the kind of all their strategies seem to have worked in their favor in the last couple of years, and we've been seeing this stock sort of making headway even in the bourses, and we've seen the kind of appreciation it has given. So all that said, I think when you see a stake sale at this price, it definitely I think it's not viewed very positively. Also, there will be an overhang, because if there had been any interested buyers, their requirement would now be met because such a large block has been offered. So I think that if you were to do a fresh buy in Mahindra & Mahindra, your waiting period would be much longer than what I would have said maybe a couple of weeks back. Having said that, I'm still positive on the stock. I like the stock. I think that you could be looking at levels of around 2100 to 2200 on the stock. But as I said, that now you need to give some time for this overhang to sort of get absorbed.
Fair enough. That also makes sense, considering it is trading near its life highs. It's off life highs, but it was somewhere near there. But the other stock that we want to address, that's Bharti Airtel. Now here we understand that Singtel has also sold around 0.8% stake in the company, in Bharti Airtel, and has in fact sold the stake to GQG Partners, which actually is not so much of bad news, because it's just going from one marquee investor to another. The total value of this particular stake sale naturally comes to around a little less than about 5,900 crores. And Singtel has sold about 4.9 crore shares at a price of about 1,193 rupees per share, which is just a tad below where Bharti Airtel is currently trading at. That's around 1,200 rupees per share. And of course, the gain from the stake sale in Bharti is estimated to be around 0.7%. That's not as relevant for investors here. But on the whole, Sharmila, how have you placed on Bharti Airtel?
So, I think completely, as you said, the big difference here is that it's not the promoter selling. So that is, that always puts a different spin on things. And secondly, as you said, it is one marquee name exiting and another marquee name entering. So it doesn't really disturb the overall how you would view the stock in any way. And honestly, I think Bharti Airtel I'm fairly positive on at this point in time, because things are changing for Bharti Airtel in the sense that you've seen that they've hike their tariffs and the kind of effect that it's had on ARPU. And it's expected that this enhancement that they've seen in ARPU will continue. So given all that, I think what you're simply saying is that telecom is as a sector I like. I do see increased use of this entire space from where we are today in terms of the kind of data that we consume and etc. etc. So I think this is a stock that I would continue to be positive on, and here again my levels would be closer to 1400 to 1500. And even at this level, I think, meaning as of today also, it's a buy for me. I would not wait here, but I would continue to be positive on Bharti Airtel.
Right. Let's not forget that just about a week ago, we had Sunil Bharti Mittal, who's the chairperson of Bharti Enterprises, suggest that they do have the intention to lead tariff hikes and thereby, of course, leading to higher ARPUs as suggested by Sharmila here. But Sharmila, stay with us. We'll slip into a short break, and on the other side, we'll get you more on that list of stocks we want to address. Stay tuned in. We'll be back in just a bit.
The farmers' protests have been making headlines. Indian farmers have demands such as legal guarantee on MSP, pension and debt waiver, no hike in electricity tariff, reinstatement of Land Acquisition Act 2013 and more. But while the protest becomes important from the point of view of elections and politics, it's not just India that has its farmers agitated. The streets of Spain, Belgium, Hungary and Poland have been roaring with protests by farmers too. Around 1,400 tractors took part in a protest in Poland and roads were blocked across the country. What do they have a problem with? Rising production costs, falling sale price, stringent regulations. They say that the European Union is not doing enough to stop cheap imports from Ukraine, which is affecting the demand for local produce. They are also not happy with the European Union's Green Deal that's designed to zero out pollution by 2050 because it limits the use of pesticides, which in turn affects yield. In Greece, farmers have demanded lower electricity prices, tax-free diesel and subsidized animal feed. In France, farmers have been fighting for improved pay and protection from foreign competition. The French government offered 400 million euros, that's $436 million, in various measures in reciprocation to their problems over low earnings, heavy regulation, and unfair competition from abroad. In Germany, farmers are against the government's decision to phase out tax concessions on agricultural diesel. Their argument is that this will lead them to bankruptcy. In Romania, the protests stemmed from anger about low prices for produce, rising costs, imports of cheap foodstuffs, and constraints imposed by the European Union's drive to fight climate change. In the United Kingdom, farmers are struggling to keep up with weather changes and war-related supply chain disruptions. The whole of Europe seems to have the agricultural sector in pain as climate change becomes a central focus and production prices increase. And no, it doesn't end there. As per Down to Earth, since 2023, farmers have protested in 67% of countries in South America region for a variety of reasons, such as wanting better export exchange rates and reduced taxes amid an extended economic downturn and Argentina's devastating drought, which have severely damaged crops and agricultural output. And look at this data. Farmers' protests have happened in 12 countries in Africa, 11 countries in Asia, 24 countries in Europe, 8 countries in North and Central America, and 2 countries in Oceania in just a year's time. So let's boil down all this worry to 5 main reasons, India included. Pricing of produce, delayed compensation or subsidy, unfair effects of climate change, policies and regulations, import and export duties, and supply chain discrepancies. What does this say about the world of agriculture? Does it just question politics and governance, or does it hint at a bigger problem, a potential global food crisis?
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Welcome back to Hot Money, and we shift focus now to the information technology sector, where we have an interesting note this morning from Morgan Stanley, and they suggest that, well, firstly, they are bullish on IT stocks. Then their top picks remain TCS and Infosys, where, of course, the bellwethers in the sector. They are of the opinion that the sector looks good despite heady valuation multiples. We all know that they've run up significantly, at least in the calendar year, in the last 2 months, even as we start seeing some indications from the Fed suggesting rate cuts, which could mean an improvement in business environment, and that could consequently lead to more business for TCS and Infosys, who have a substantial amount of business coming in from the United States. That's it. Well, of course, Morgan Stanley has suggested that they stick with TCS and Infosys because of the visibility, which is highest, and margins expectations being reasonable. Moreover, they suggest that investors' positioning is still underweight IT at the moment, and DII positioning in IT is at the lowest that they've seen in the recent future. They also say that revenue growth has bottomed out in the previous few quarters, and there could potentially be an opportunity here to see an improvement in revenues, and which is why, of course, they are overweight names like TCS as well as Infosys, along with something like a Coforge as well. But Sharmila, I'll come to you on TCS and Infosys. They're not exactly cheap, and they're nowhere close to their 52-week low. Or they haven't seen a substantial correction, in fact, consolidation over the last 2 to 3 weeks. How would you place your bets on TCS and Infosys right now?
Ever since the start of this year, really, I think all of us have been positive on IT, simply because more of what we heard sort of last evening from the US Fed is that when are we likely to see interest rate cuts? Because I think that will sort of put the sort of reverse that cycle that we've been seeing, where what you've been hearing, that large ticket clients have been delaying deals or not closing deals as they were earlier. So a lot of people have already started sort of pre-positioning themselves in IT, and I would broadly agree with this outline that you're still sort of underweight, and there is still an upside left in most of the space. My only thing would be that I would probably be more leaning towards mid-cap names. While I do think that there is value in the TCS and an Infosys, I just think that mid-cap IT, especially niche plays, have over the last couple of years actually made more money for investors than the large caps. So I think they did have a Coforge in their list, so that could be a name you could go with. LTI Mindtree, that's another name that I like. So possibly names like that. But yes, I think I broadly agree with the view that this is a time to be incrementally positive on IT as a space.
Of course, the advantage with some of your relatively smaller names is, well, better growth rates, but that also comes with, higher risk coming through. That said, of course, the prospects for the information technology sector at the moment looking good. We move on to the steel sector then, and this is another sector which has been on the rise of late. We have an update from JSW Steel where we have production numbers coming in, and in fact the production has jumped as much as 4.9% on a year-on-year basis for the month gone by, and we are looking at production of around 2.15 million tons. Capacity utilization at Indian operations stands at 92%, which is also, of course, always a positive. The question really is that what do you do with steel stocks? This is a very commoditized business, and a lot does depend on steel demand supply globally, which also makes things just a tad bit more challenging to deal with. But Sharmila, your view on JSW Steel?
So, view, yes, I agree with all that you did say about commodities as a space, and that you are closely linked globally to what is happening with prices, data coming from China, etc. Having said all that, I think JSW Steel has sort of held its own. You can see it in the numbers, you can see it in the valuations that the street is giving it. So, that would actually be my only sort of negative, that valuations aren't cheap. So whether you want to buy fresh at this point remains a question. But overall, it's definitely a stock that I like, and overall I'm positive on metals as a space, and within that I think JSW is a great name.
Okay, and on to another very interesting, company, that's Phoenix Mills. Now, again, we have another broking note here. This time it's HSBC, and they say that, they have a buy rating on Phoenix Mills and a target of around 3,130, which roughly translates to about maybe about a 10 to 15% up move from current market levels. They say that they have successfully executed their new strategy, and there are 5 more malls which are added in 2020, expect at least 2 more in the next 3 years, and it's done well to keep its leverage low. These are some of the factors which are playing in favor of Phoenix Mills. And of course, they are also saying that they expect high double-digit earnings growth over the next 3 years. Now, that perhaps is something that could turn the tide for Phoenix Mills going forward. Sharmila, what is your view here? Phoenix Mills, of course, is a very interesting proposition because it's not just a real estate play, it is also a retail and mall play. What would you do with this one?
Well, honestly, I think that they're as a company, they're doing a great job because, the way they are expanding across tier 1, tier 2 cities, and, the kind of malls that they're building, the size and the variety that they're bringing to consumers is really quite commendable. And I think, there are mall management, and, there are malls, and then there are malls. And I think the way they have, proven that how things need to be managed, how you need to keep the brands moving, etc., is definitely a very, very strong point in their favor. And again, I think that I'm very positive on real estate as a sector. And I do see in the coming years great growth, especially in the tier 2, tier 3 towns. And then again, I think this ties up, if you are positive on the kind of buildings that are coming up, then obviously I think malls play a very important role in the scheme of things. So yes, I think I broadly agree with this note, and I too am quite positive on real estate as a space, and within that Phoenix Mills. My targets would probably be higher than what the note says. But then, the holding period would also be that much longer, because as I'm saying, the view that I have on real estate is like a 3 or 4 year view. So that is the same view that would extend to Phoenix Mills. But yes, I think in terms of mall management, they're doing a great job.
Okay, and the final stock that we want to address today is Bharat Heavy, not Bharat Heavy, just Bharat Electronics Limited. That's BEL, that's the defense company. And this, of course, is making a new life high right now. It's made a little bit of a habit of doing this very often of late. Still, we have a note this morning where then this one is from UBS. They have also reiterated their buy, and they've also put a price target of 257 rupees per share. It's currently trading at 215 rupees, which means that there is still a little bit of an upside left, about 15 to 16, 17% from here on. UBS, of course, suggests that the slower order book accretion is a concern for investors, or it has been over the past 2 years. A new order run rate is more important, and that is the catalyst in this case. And we all know the kind of order flow that BELS has won over the course of the last 1 year, which has given it substantial visibility. And because of that visibility, a lot of investors have jumped onto the bandwagon, leading the stock to where it is right now at the moment. It's been in fact, it has been a multi-bagger over the course of the last 12 months as well. So good gains coming in has rewarded all investors very handsomely. There you have it, about 123% gains over the last 12 months. Sharmila, do you think it's a little bit late to get into Bharat Electronics at the moment, or do you still think there is some legs to this rally?
That could be, but I broadly agree with you that it's a little late, because I think this is a story that market has discounted very honestly, because you've seen this huge run up in defense stocks, in PSU stocks, whether it is banking, you name it, railway stocks, and pretty much everybody has sort of jumped onto that bandwagon, and which is sort of what has led to the kind of rise that we've seen in BL. And my concern comes from the fact that while having a great healthy order book is really good, what happens typically, if you have been in the market long enough, you realize that while the government orders are very large, for them to actually translate into profits and show up in your balance sheet takes a while, because these are all very long gestation period orders.
Right.
And then in the interim, if you see anything sort of slightly off, then the stock can take a bit of a beating. So yes, I think I would it is neutral.
All right. All right, well, that is a long and exhaustive list of all the stocks that we want to talk about. But on that note, Sharmila, thank you so much for joining us and taking us through your views on these stocks. And with that, we've also run out of time on this show. So we slip into a short break, but don't go anywhere. Lots more lined up on the other side. Stay tuned to NDTV Profit.
Hello and welcome to NDTV Profit. Today we will talk about tattoos and the worth of this market. The history of tattoos in India can be traced back to prehistoric times when tribal people were captivated by drawings on stone or wood walls. Their attempt to replicate these figures through needles gave birth to the practice of inking skin. Over the course of time, tattoos were embraced by tribals as a mark of bravery, war, religious beliefs, customs, marital status, protection from the male gaze, and so on and so forth. Today, in 2024, tattoos have become a means to express thoughts, individuality, personal experiences, and sentimental designs. The industry is estimated to generate over 20,000 crore rupees per year. What is driving this growth? One of the key drivers behind the growth of the tattoo market is the rising demand for customized and unique designs. Improved technological equipment for making advanced, safer, and painless tattoos have boosted the market. The laser technology for removal or modification of tattoos have also added to the surge. Increased exposure and promotion of tattoo designs on social media have led to widespread influence of tattoo culture on the youth. Take a look at these figures now. As per Fortune Business Insights, the global tattoo market is projected to grow from $2.04 billion in 2023 to $3.93 billion by 2030 at a compound annual growth rate of 9.87%. This is a sharp rise from 3.8% year-on-year growth between 2017 and 2022. As per Custom Market Insights, the diamond jewelry market is expected to grow at a compound annual growth rate of 5.5% by 2032, while the luxury jewelry market at a rate of 8.9%, but the tattoo market is estimated to grow at 9.5%. Is the tattoo business lucrative? According to an article by Opportunity India, tattoo kits are now easily available for less than Rs 10,000, while high-end kits range from Rs 20 to 35,000. Now, in a city like Mumbai, the average cost per inch is Rs 2,000 to 2,500. In Delhi and Bangalore, the cost per inch is between rupees 1000 to 2000, and in Goa it is about rupees 500. We spoke to a couple of tattoo artists in Mumbai and found that at an average, the business earns them a profit of rupees 75,000 to 1 lakh per month. In fact, as per an article by India Today, a person can earn a minimum of 20,000 rupees to rupees 2 lakhs per month depending upon one's work and creativity, with an initial investment of 1.5 to 2 lakh rupees. A beginner level tattoo artist can earn a minimum of 20,000 rupees per month, which gradually increases to a couple of lakhs or more depending upon the caliber of the artist and the uniqueness of their artwork. And I'd like to leave you with an interesting data. By Advanced Dermatology,
the last time that Trin Nguyen was with us, 2 or 3 days before that, her LinkedIn post about what India, the metamorphosis, if I can use that term, that India was going through and will go through, created quite a stir in India. So on Women's Day, or just a penultimate day of Women's Day, but we are celebrating it here today on NDTV Profit, it's just apt that we get her views. She's senior economist covering emerging Asia at Natixis. Trin, so good having you again. Thanks for taking the time out.
Absolutely. Thank you for having me.
And happy Women's Day to you and your all the lovely women in your team and around you. Okay, just thinking of this, Trin, how do you see the landscape for risk assets currently? Because one thing that has happened slightly differently of late is that while everybody entered into 2024 thinking there will be a year of rate cuts and the only debate will be timing, I think now the question of whether rate cuts happen or no as well is coming under question mark.
Well, yesterday with the testimony of Jerome Powell, that became again very clear that we're going to cut. It's a question of timing and data dependency, right? This is one of the reasons why the dollar lost its strength and the euro gained against the dollar. And today we got wage gain also in Japan that pushed the JPY higher. So risk appetites are still very strong. If you look at equities performance, right? And that has a lot to do with, we're quite clear on the direction travel that we have a soft landing in the US, but at the same time, we also have easing of financial conditions coming to help us.
Interesting. Trin, okay, the reason why I kind of thought about that was two-faced. One, if you look at the inflation data in the US, not exactly soft per se, right? And I was looking at the latest PMI data across wherever it is available, and the manufacturing numbers led by India, yes, but some of the other economies as well, are not looking too bad. Could it well happen that while we're waiting for a rate cut, and the question is only when, this when might get pushed away from 2024 into 2025? Is that possible at all, or not quite, you think?
Well, I think the gain of the manufacturing PMI has to be taken into perspective of where it is, right? So it's actually very weak regionally. It's very weak in the US because in 2023 was contracting quite sharply. So now it's the underlyings are improving, which means that as we draw down on inventories, and as we have rebound of demand, the rebound of the IC tie cycle, then we should have an improvement of import demand. So today we have China's data that show that exports are improving and also imports from China are improving. So we have a global slowdown of demand, but the trade cycle is improving. What that means is that we're having a somewhat what we want, what we wish for, right? Because we do not want a too hot US economy. In that way, the rates would continue to need to go higher because it leads to appreciation pressure of the service sector, which is the last mile for the central bank. And at the same time, we have higher demand. So we have the softening of the service sector, which we should find out more this Friday of non-farm payroll, right? Non-farm payroll is coming out and people will look for the fact that jobs in the US have already peaked. And I think the job gains are going to be quite important for the US economy. Because as job gain slow, it means that the economy is going to soften, which means there's less pressure on wages as firms, particularly the smaller firms, hire less, and maybe they even have to let go of some employees. And that means that the non-tradable sector inflation, which is what is quite key for the US at the moment, because tradable sector inflation is actually what's coming down. The firming of inflation across the region is really about idiosyncratic food inflation, right? So look at South Korea for inflation, for example. It's really about this Lunar New Year effect. If you look at India also, so that factor will fade as the seasonality of it fade, right? Should harvest improve? Should the short-term impact demand improve? And especially if oil continue to stabilize. So in other words, we do see inflation coming down. It's not coming down very quickly, but it's going to come down enough for the US to actually push its raw nominal rates down. And what that means is that if real rates in the US, because the nominal policy rate is 5.5 and inflation should continue to fall, pushes real rates in the US higher. When real rates in the US higher, it means that investment prospect in the US is actually quite attractive from a rates perspective. That puts a lot on the EM, low yielder, which India is not one of them, right? And then India is actually a bright spot in the past year on this Fed story. And I think this is one of the things I want to emphasize from this interview is that if you look at the recent crisis in India, whether or not it's a Fed hike, whether or not it's a fuel crisis, and also COVID, India has done relatively well. And I think that transition from being a fragile country in 2013 to now a country that people pay attention to, it is actually the resilience of it during this Fed episode is actually what investors have taken notice about. And that has a lot to do with a lot of the progress that has been made. A lot of progress is made on the fiscal side, right? Which means that they are able to trim down the subsidy spending as a share of GDP over time, raise the revenue share of GDP through GST, the introduction of GST. But not only that, it's the income tax as a share of GDP that also has increased over time, which allows the revenue share to rise over time. So this rise of revenue, decline of subsidies will lead India to free up some space for some capex. And that freeing up of capex has actually translated into a gradual broadening of the investment landscape in India. And that will continue to happen. And when you think about Women's Day, and when you think about India and growth, we have to then talk about jobs, right? And I think this fiscal reform, the rise of investment and the rise all these things translate to the fact that more women today are participating in the labor market in India than before, right? The latest survey shows that the participation rate is now at 37%, up from 31% in 2011, and actually it reached an all-time low at 21% in 2018. So this increase of participation is quite important because we need to generate jobs in India to absorb the labor force. And of the 113 million or so that was generated during the Modi's years, women, actually 50-something million women participate in the labor force. So we continue to need to have that increase, right? Because although we're talking about this progress of the rise of the participation of the women to 37%, it actually is still much lower what APAC has, right? The average at APAC is about 63% and very high in countries like Vietnam was 70%. So we need to have that in the next 5 years. So when you mention the elections, Modi, should he win the third term, he will need to continue to focus this. How do we get more women to participate in the labor force? And that requires supportive policy. The second aspect, I think, that's not really talked about a lot for India, because we talk a lot about fiscal reforms, talk about manufacturing and so on and so forth in the stock market. But we don't really talk about the fact that India is undergoing what we call the formalization of the labor market, right? So on one end, we need to have an increase of women participation in the labor force, which is rising, but still more is needed. The second aspect is that the formalization of the labor market is necessary because the formalization of the labor market leads to higher income gain because those jobs pay more. They also pay taxes, so more income taxes. So there has been gains in income taxes, but we could have more income taxes, and that generally is very, very positive. And of course, the formalization of the institutionalization of investments in pension funds and mutual funds, right? When you have a more formal job, you pay into a pension. Now, that process has increased quite substantially since the payroll data was released. We look at that since 2017 data, for example. We have roughly about 64 million increase of formal jobs, right? So that's sizable. And that is a significant increase and has transformed the landscape of India from income tax to also the purchasing power. So the latest survey, you saw that the consumption power in the rural area has gone up, and so has the urban areas. But that formalization process took a step forward, but it needs to take a march forward, right? Because we're still only at 12% of the economy.
No, please continue. Please finish your point.
So we're still only at 12% of the labor force. So we need to continue to increase that. The second aspect, when the twin issue that I want to talk about, which is the women participation and the formalization, they both have to go in hand. Because once you formalize, when you increase women participation, we have to ask the question of what do they do when they join the labor force, right? Well, the reality is that most of these women work in the informal sector.
Right. Okay, I think I've lost that feed from Trin Nguyen. Maybe we can just get her back if we can for a split second and just round off this point, because she's made multiple points here. Sorry, Trin, just before we thank you, would you want to finish this point? You mentioned this twin aspects and what to do once they join the labor force. We lost your audio post that.
Well, my point is that India has made a lot of progress in the increase of women participation and the formalization of the economy. But I do think that there's a lot of room for both of those to take place, right? Because you need to further increase formalization for both men and women, right? Even if men absorb more of it, you need a lot more jobs because 88% is still informal. And the women are joining more in the workforce, but they also need to join more in the formal sector. One encouraging fact of India is that the graduates of women in STEMs are quite high. So how do we get them to represent in this the employment aspect of it will be quite important moving forward.
Got it. Well, Trin, there are so many cross questions that I can do. We're out of time, unfortunately, but I think the points that you raised are material, and I'm sure people will take notice. I'm sure we will write a story around this and put it out on our website for people to read and think this through as well. But I'm enthused by some of the positives that you're seeing, and I'm inquisitive about the impact that some of the measures that you've spoken about can have over the medium to the long term in India. Thank you so much for joining us and speaking to us today. And once again, from all of us at NDTV Profit, to you and your fellow colleagues at Natixis, wishing you a very happy Women's Day.
To you as well. Thanks for having us.
The pleasure was ours. Well, viewers, that's the view from Natixis and some fairly interesting comments around India. We need to slip into a break, though, on that note. On the other side, though, one more special woman, Dipali Goenka of Wellspun Living, talks about, well, everything related to a woman leading a business and leading a business in India. Stay tuned.
Amul has completed 50 years in India. PM Modi will attend the Silver Jubilee celebrations of the Gujarat Cooperative Milk Marketing Federation, the owner of Amul. At one point of time or the other, we've all grown up with Amul butter or milk for sure. The famous Amul girl created in 1967 is family. We all recognize her. But as the brand grows 50 years old today, do you remember the full form of Amul? It is Anand Milk Union Limited. From producing 250 liters of milk per day since the time Amul was formed back in the mid-90s to today, where Amul has over 36 lakh dairy farmers and produces nearly 300 lakh liters of milk per day, the brand has had a long journey. The story goes way back in time. In the 1940s, dairy farmers were worried. The middlemen exploited their ways of profitable income and a poor milk production system made their living difficult. Tribhuvan Das Patel and Verghese Kurian identified these issues and helped in the formation of the first milk union called Kaira District Cooperative Milk Producers Union in 1946. The cooperative model gave farmers direct ownership of the dairy industry. The union helped them process, market and sell milk and milk products without the interruption of intermediaries. And it was in 1955 that this union chose a brand name for itself called Amul, which means priceless in Sanskrit. And then in 1973, Amul Dairy along with 16 other district cooperatives formed the Gujarat Cooperative Milk Marketing Federation, which has now completed 50 years in India. Amul also started India's white revolution that made our country the world's biggest maker of milk and milk products. The brand follows an umbrella marketing technique which has helped GCMMF prevent association clashes and keep an open door for the patrons to coordinate in creating items. As per a report by Statista, the annual sales turnover of Amul from 2011 to 2023 has consistently risen, recording about 55,000 crore rupees of turnover in 2022-2023 alone. And did you know, Amul has also held a Guinness World Record for having the longest continuous run of any advertising campaign that has ever taken place anywhere in the universe. Amul Doodh Peeta Hai India and Utterly Butterly Delicious will always strike a chord. Let us know which famous advertising phases of Amul do you remember?
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right.
Hello and welcome. Today we have a very special guest joining us on the show. She started as CEO with a soul. I'm talking about none other than the very beautiful, intelligent, successful Dipali Goenka of Wellspun Living. Thank you, Dipali, for joining us today. Dipali, I'm going to start with the usual, right? I want you to go back in time. You've been at the helm of Wellspun for over 2 decades. But from what I hear and what I read, you didn't always start off as an entrepreneur. You were a homemaker. Was it a eureka moment that happened? Was it something you dwelled upon for many years? Was it your mother? Was it your husband? Or was it just you?
I started working when my girls were 10 and 7. And I was a homemaker before that. Yes, you're right on that. The thing that actually led me to do that was that a couple of things. One is that, coming in from a patriarchal Marwari community, I really wanted to set an example for my daughters, and that's where I wanted to really take that on. And as a human being, as an individual, I continue to evolve, and I want to evolve constantly and constantly learn. I think that's where it also was the curiosity that got me to get into this. So yeah, that's where it is, and here I am today.
It's been a long and commendable journey, but I still want to dwell a little bit more upon what do you think happened, right? It's not as if the kids got older, you wanted to set an example and you're like, hey, I'm going to go and join my husband. It clearly wasn't that. Your DNA, you're probably made of something else. Was it your mom? Do you think you attribute a little bit of that success to your upbringing in some sense?
So I'm inspired totally by my mom, because she used to work then as well, and coming in from a conservative community as well. But she used to work, and that actually inspired me. And that has always been my inspiration. And more so, I think for me, it wasn't that one fine day I just joined in the business. It never was. It was made clear to me that if you come in as an employee of Wellspun, and you need to do what needs to be, what everybody else does in the way and the kind of protocols that are there. So yes, I didn't come in as the wife of the chairman of the group at all. And that wasn't the way I have been, actually. I started with my brand Spaces in 2003, understood the kind of buying behavior of the consumers and learned the whole patterns in India. And gradually, as I was doing this, comes 2009 and 10 is the time I've been told that yes, you can join, you need to join the Welspun Textile Group, but that wasn't a bed of roses either, because this has been a very dominant, clearly male dominant industry. Very few women, I think, in the leadership position. And there were a lot of doubts that is Welspun even serious about, doing business in textiles. And I think, and that's where it gave me more resolve and a determination to do what I could do.
It's interesting because it's either you're a homemaker or an entrepreneur or a businesswoman. You must have done both, because at 10 and 7, your girls still needed you.
Yeah.
So you were pulling, 18 hours a day? Because unlike most employees who have, sure, they have to prove themselves, but you had a lot more to carry. I mean, you were the head that wore the crown in that sense.
My girls were very young. I had to take up their work, get them to school when that was needed. But I also had to work. But I think it was well worth it when I look back. And when I even ask my girls, and they tell me that, this is what actually Mommy set up an example for us. And we wouldn't have had it any other way. It was difficult, but I think, when is it easy when you want to learn and evolve? And I think evolutions are, difficult. But I think that's the only way I can have it ever, because I always believe that, if you got to learn, you got to really put in your hard work and, and your toil. So, yeah.
Did you study any of this that you actually practice? And when I ask you that, is what I want to understand is, did you study design? Did you study textiles? Did you go away to college and study finance? Or was it just part of the course? Part of the course?
The interesting thing is, I got married at the age of 18.
Oh, wow.
Yeah. And when I took on Spaces is the time when I realized that I need to just ramp up and understand more and delve into, the kind of, an upskill myself, right? And I think upskill is something that you constantly have to do. And I took a giant leap and went to Harvard and did the OPM. And, and that's where I just took that leap. And I always believe that you constantly have to upskill. So like you're talking about today, when the world's talking about AI, we're talking about so many other things, aren't we? So I think constantly, as the world at the pace that the world is evolving, we also got to evolve. And I think that's what I continue to do as well today. You have to upskill yourselves. Could be a reason there that I was upskilling in some other things, but today I have to upskill in digitization, artificial intelligence, and something more,
And you still have the same fire you did 20 years ago? Are you still as excited?
Because if I didn't, I wouldn't work.
You'd put your shoes up, huh?
Yeah. Because if I'm not excited about what I do and I don't have a spring in my feet when I wake up in the morning, that means I'm done.
Wow. Let's start with what Dipali's day looks like. From the get-go in the morning to by the time you go to bed. And I want to know about what happens when you go home, right? I'm still guessing you still have these conversations and they're always work-related. More often than not, I'm guessing, with your husband. Your daughters, what does a boardroom look like from the minute you go to office?
No, I wake up at, early in the morning at around 6 and I have my workout. And then before leaving for work, I just do my home chores and the other things that are needed for the day.
So you're still setting menus in the house?
I do that sometimes.
Okay.
I do that because I think that's the way it is, and I like doing that.
Yeah.
And then at work, I'm at work around 9:30. And for me, I think it's important to check in with my factories and my businesses, on retail. And during the day, it's also about my global businesses like America, UK, or the other parts. So it is the constant, because morning till evening, there's a different scale of work that you're talking about. And of course, about, technology and upskilling of, of our team, our people, culture, because we're evolving very fast. And as we are growing, I think the important things that most conversations are about leadership as well, and culture. I think these are very, very interesting things that we are continuing to talk and discuss as well.
Do you have time to socialize outside work? Oh, that's a big pause.
I think I'm an introvert at that. I love, for me, I think it ends, when I go back home, it's getting my feet up, watching Netflix or something, and chilling, and because I get to bed early, because then
you're going to start early, right?
Start early, and because there's so much to do. Plus, I actually also go to my factories very often. So every 15 days, one factory or the other is something, or I'm traveling out of the country.
Clients, yeah.
So it's a lot of things to do, and a lot to learn as well. Weekends, sometimes I do socialize.
Sometimes, okay. Do you micromanage or do you empower?
I love to create leaders, and I love to empower people on that bit. And I think it's about, because I always feel leaders create leaders. And I think that's what it is all about. I think my job is to inspire people, show them the vision, and then take that forward. And that's where you can really create not only leadership, but also create an organization that is very accountable.
Beyond you as well, right?
Yeah.
Hello. Good morning, ma'am. I'm speaking from XYZ company. Are you looking for a job or a job change? Have you been receiving unwanted calls from spam numbers? Are you tired of being offered new jobs, insurance schemes, or free health checkups? Well, today we will look at an interesting survey report by local circles on pesky calls that received 60,000 responses. Most unwanted calls are related to financial services, 54%, and real estate, 22%. In fact, the report has taken names. 40% mobile subscribers have identified Bajaj Finance as a top offender, HDFC Group as the second biggest pesky caller. The report reveals that 60% of people received 3 or more spam calls on an average day every day, and 92% of people registered on the Do Not Disturb list still get pesky calls. So is being listed on DND working? Clearly not. But the report also recorded a minute relief, as per which 6% people don't get any such phone calls. This relief comes after the TRAI directive to banks, insurance companies, and other commercial entities. TRAI is the Telecom Regulatory Authority of India. In fact, the Department of Consumer Affairs has constituted a committee comprising members of different regulatory authorities, telemarketing companies, and cellular industry to draft the guidelines to address the issue of pesky calls. So yes, pesky calls are still a worry, but there is a little relief too. Can you ignore them though? Toll-free numbers are identifiable, so institutions have found a new way. According to the report, calls from different mobile phone numbers that seem to belong to companies or brands have risen from 29% in February 2023 to 36% now. And look at the change in trend. Real estate selling has risen from 18% last year to 22% now. However, job offerings have decreased from 10% to 4%, and in the case of those selling financial services, the calls have slipped from 60% to 54%. So the bigger question is, will the nuisance of pesky calls end anytime soon? There should be a system where pesky callers are blacklisted at the Aadhaar level, so they have the risk of not getting a new SIM. Also, brands on whose behalf the contracted callers are calling also need to be held accountable by the Department of Consumer Affairs, so brands institute the right consumer outreach practices both with employees as well as third-party contractors. For more such updates, stay tuned to NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit.
Markets trade in the green with marginal gains. Mid and small caps gain strength after 2 days of profit booking. Sensex above 74,100 while Nifty is at about 22,500. Most sectors trade in the green, led by media and metals. On the other hand, banks, auto, oil and gas buck the trend. Shares of Mahindra fall almost 4% as the promoter group sells 0.9% equity at 1,913 rupees a share. Bharti Airtel is in focus as Singtel sells 0.8% direct stake worth over 5,800 crores to GQG partners. A stellar Dalal Street debut for Muka Proteins. Stock lists at a premium of 57% to its issue price on the BSE.
One honor.
Couple of seconds to go. It's fantastic. We're on top of the world. We're leading the change, and we have the support of all our colleagues.
Talented, supportive, happy. They empower men and women combined in the newsroom.
They are driving it, not just changing it.
Smart,
Fun yet intellectual.
radiating confidence.
Vibrant, effervescent, and stunningly intelligent.
Innovative, hardworking.
Multitasking, versatile, enigmatic, and very cheerful.
Tenacious, humble, and wanting to get to the depth.
They are much more talented. They are much more creative and innovative. And they are bringing a sanity in overall discourse that we are currently creating and consuming.
Well, happy International Women's Day from all of us at NDTV Profit. We have a lot of specials lined up over the course of today's show. But before we can delve into those, let's take a quick look at where the markets are at first. So the Nifty is clearly making it a little bit of a habit to scale fresh highs. We're off the day's highs today, but we're still currently at about the 22,500 mark. We're currently up by about 0.1% in today's day of trade. The Sensex too up by about that much. Let's have a look at where some of the key sectoral indices are. The Nifty Media is leading the pack. It's up by over 2.5%. The Nifty Metal up by about 1.5%. Nifty Consumption, Nifty FMCG, Nifty Pharma, some of the sectors which are in the green. Let's have a look at what's in the red though. The key drag, not too many sectors actually in the red, but Nifty Bank, Nifty Energy and Nifty Finance in the red, but very marginally. Moving on to the broader sectors, they're actually outperforming even the key indices. The Nifty Mid Cap 150 is up by nearly 0.5%, while the Nifty Small Cap 250 is up by almost 1% in today's day of trade. But let's have a very quick look look at some of the key constituents of the Nifty 50. Bajaj Auto is the key gainer in today's day of trade so far. It's up by almost about over 3.5%, actually closer to almost about 4%. Tata Steel, JSW Steel, Tata Motors, all having a good day in today's day of trade. Where is the key drag? M&M in the red. The stock is down by almost 3.5%, as is SBI Life, down by about 1.5%, and that's the case with BPCL as well. Now, M&M, in fact, as we mentioned, is the top loser in the Nifty 50. The stock has dipped to close to 4% on the back of promoter selling 0.8% equity. Smriti joins us with more details. Hi, Smriti.
Hi, yes, you rightly mentioned one of the promoter group has sold about 0.8% equity in the company today. Now, the price, we don't know the exact price, but the discount on yesterday's closing will be up to 3%. That's what we have. So, on the upper end, the stake is worth over 1,800 crore rupees that's being sold in the market. This is being sold by Prudential Management and Services that held 11.6% stake as of December 2023. Now, last night, Mahindra & Mahindra also, in an exchange filing, filed Prudential Management's response in about the sale, and they say that the shares of PMSL held by former Mahindra & Mahindra chairperson Keshav Mahindra, which was then given to the family members of Keshav Mahindra, are now selling only a little bit of stake to look after some of their specific needs. However, they also said that the family will continue to retain the status of promoter group in the company and have no intention in the forthcoming future to sell any more stake in the company.
Right, stay on, Smriti. Now, Singtel sold about 0.8% stake in Bharti Airtel to GQG partners. Tell us a bit about that too, please.
Well, yes, there also the promoter group sold 0.8% stake for 5,849 crore rupees. So this one's a big number in terms of the value of the stake. Now, this is through its subsidiary Pastel Limited, and they sold 4.9 crore shares in the market today itself. Now, Pastel held 10.4% stake as of December 2023, and the stock, according to Bloomberg, is bought by GQG partners.
Thanks a lot for that. Moving on, an important update coming on the Zee versus Bloomberg case. The Delhi High Court has now reserved order on Bloomberg's appeal against the trial court's directive on Zee Entertainment. Charu joins us to tell us more. Charu?
Hi, Pallavi. So on March 1st, there was a directive to take down an order. There was a directive to take down an article that was published on Bloomberg's website. The article said that Security and Exchange Board of India has found accounting irregularities worth $240 million on part of Zee Entertainment. Now, what has happened is the trial court found it to be defamatory and passed an ex parte order. Ex parte order is an order where the other party is not given an opportunity to be heard, and that is why Bloomberg, aggrieved by that order, approached the Delhi High Court yesterday, and now the matter was heard for the first time today. They said that how can an order be passed without giving them any notice, without giving them a chance to be heard. However, Zee said that first, the information was not a publicly accessible information. It was an allegation of a sort, and then with a headline which said that a finding of such an irregularity has been undiscovered, kind of defames the organization like Zee, which will be aggrieved for a very long time because of a report like that. Now, the Delhi High Court heard both the parties and has asked for more time to give its ruling, and that is why it has reserved its order for now.
Thanks a lot for that, Charu. Now, we brought to you exclusive news that mutual funds will soon need to conduct stress tests for mid and small cap schemes. NDTV Profit is now learning exclusively that the results of the first test will be out in just a few days. Sajit Manghat joins us to explain what this stress test will contain. Sajit?
We understand from our sources that AMFI in its circular to all the AMCs has indicated that all the mutual funds which have small and mid-cap schemes will have to undertake a stress test, and the results of the stress test will have to come by the 15th of the month for the preceding month. So the starting February portfolio, the results will come on or before March 15th, and these results will have to be disclosed on the website of the schemes of the mutual fund and of AMFI, and it will be on a monthly basis that these stress tests will be undertaken.
Right. The method to calculate portfolio liquidity is going to be a critical part of the stress test. Sajid, how will mutual funds calculate this?
There is a standard format which has been arrived in consultation with SEBI and which AMFI has shared with all the mutual funds. The stress test disclosure will have columns or data with respect to the portfolio liquidity, beta of the portfolio, annualized standard deviation with respect to the index which is a benchmark for that scheme, and also data like the 12-month trailing PE and the portfolio turnover of the scheme. In addition to that, the method for testing the liquidity is a little complicated, but let me explain it in a very simple term. So if you have a portfolio of say 100 stocks, the method is to first determine how many days it will take to liquidate each and every stock, and based on that you calculate the liquidation for 25% of the portfolio and the 50% of the portfolio. As part of this liquidation process, the bottom 20% of the portfolio, which has the maximum number of days for liquidation, will not be touched upon. So the balance 80% is the portfolio, or 80 stocks. The top 80 stocks in your portfolio with respect to liquidity will be touched as a criteria for liquidation purposes, and then you have to calculate the stocks on a pro rata basis and how it is for 25% and 50% there. There is a volume methodology which also been implied here, which basically means that the mutual fund or the asset management company will have to assume that the volume that it may be able to sell on a daily basis will not be more than 10% of the volume in the market, which has been calculated as 3 months average volume for that particular stock, and you multiply it by 3 times of that. So you take 10% of that volume as the volume that you can liquidate on a daily basis till you fully liquidate the stock. And once you're fully liquidated, you are able to calculate the full number of days you need to liquidate the stock. You calculate that by 2 to get 50% portfolio liquidation, and by 4 to get 25% portfolio liquidation. So it's a pretty comprehensive criteria to look at the stress test coming of each of the portfolio. The good thing is that many of the portfolios have up to 15 to 20% of the large caps, so they are highly liquid, and so it brings in also a risk, saying that if there is a run on small and mid cap, you may see the first stocks to go out or to be sold will be the highly liquid stocks which are large cap stocks.
We'll continue to bring you the latest on that. But moving on, NDTV is hosting its first ever defense summit with attendance from some top defense companies. The summit has commenced with Defense Minister Rajnath Singh acknowledging the role of the media in highlighting shortcomings of the government, which helps in taking corrective steps, he said. Here are some more key highlights from all the top companies attending the summit.
I think we also have to go back to the whiteboard and see how the future is going to look like. One is around miniaturization and the use of some of these technologies, which is a combination of drones plus short-range air defense plus ammunitions. And the second more important part is the use of data, because end of the day, we are going to move from the kinetic war to information warfare. And what we as a country, what we as a company are also trying to do is how do we continue to transition, because every platform is a carrier of information. And if I have to go back to my customer, Air Force or Army, I cannot be talking about just, let me give you this platform or that platform. I need to give him insights which are going to help him take the right decisions. So talk about drones, talk about PGMs, talk about short-range air defense, talk about data analytics and AI ML. I think this is working along with DRDO, which is going to define the future of the warfare rather than the legacy systems.
At the naval level, at one end, we are looking at our fleet expansion, because when we compare ourselves with some of our neighbors, there is a need for, expanding with the next generation fleet, and a lot of work is going on in that direction. At the other end, there is the emerging technologies that we need to look at, and we have our eye on that. We are looking at how that can be deployed, the manned, unmanned teaming, the autonomous systems, the directed energy weapons which can be deployed on platforms. All of these technologies are sharply on focus, and in some places we work with DRDO on that, some places we work with the user. We are experimenting on our own on some of these technologies.
We have done so far 1700 plus TOTs, both to private sector as well as public sector. Our patents are open to both private sector and public sector. And in fact, I can say that out of our 1700 TOTs, 80 to 90% are to the private sector. So I don't see any, in fact, I can say I agree with what Marshal Dixit said, that the private sector is now contributing fully to the defense ecosystem, but we need to bring in more startups where the nimbleness will come. See, the larger companies can play a role in integrating larger systems, but the nimbleness will come from smaller companies. So we have to get more MSMEs and startups to look at these changing technologies. And later that can be acquired by the larger companies and provide support over the entire life cycle.
See, the nimbleness which is required to get the newest technologies into armed forces, in our services and their operationalization. That can only happen if private sector comes in. They will have to find a niche area where they can work. They will have to invest upfront so that means, like you are saying, everybody can see in what manner, in what path the technology is going. So they have to just analyze that, and means to answer a question in a simple manner, we are very confident, and we are showing the way. Like Raksha Mantri had said in the morning that if they walk 100 steps, we will walk 1,000 steps.
Brought to you by बनेगा तो बढ़ेगा इंडिया, अल्ट्राटेक, देश का नंबर 1 सीमेंट.
The farmers' protests have been making headlines. Indian farmers have demands such as legal guarantee on MSP, pension and debt waiver, no hike in electricity tariff, reinstatement of Land Acquisition Act 2013 and more. But while the protest becomes important from the point of view of elections and politics, it's not just India that has its farmers agitated. The streets of Spain, Belgium, Hungary and Poland have been roaring with protests by farmers too. Around 1,400 tractors took part in a protest in Poland and roads were blocked across the country. What do they have a problem with? Rising production costs, falling sale price, stringent regulations. They say that the European Union is not doing enough to stop cheap imports from Ukraine, which is affecting the demand for local produce. They are also not happy with the European Union's Green Deal that's designed to zero out pollution by 2050 because it limits the use of pesticides, which in turn affects yield. In Greece, farmers have demanded lower electricity prices, tax-free diesel and subsidized animal feed. In France, farmers have been fighting for improved pay and protection from foreign competition. The French government offered 400 million euros, that's $436 million, in various measures in reciprocation to their problems over low earnings, heavy regulation and unfair competition from abroad. In Germany, farmers are against the government's decision to phase out tax concessions on agricultural diesel. Their argument is that this will lead them to bankruptcy. In Romania, the protests stem from anger about low prices for produce, rising costs, imports of cheap foodstuffs, and constraints imposed by the European Union's drive to fight climate change. In the United Kingdom, farmers are struggling to keep up with weather changes and war-related supply chain disruptions. The whole of Europe seems to have the agricultural sector in pain as climate change becomes a central focus and production prices increase. And no, it doesn't end there. As per Down to Earth, since 2023, farmers have protested in 67% of countries in South America region for a variety of reasons, such as wanting better export exchange rates and reduced taxes amid an extended economic downturn and Argentina's devastating drought, which have severely damaged crops and agricultural output. And look at this data. Farmers' protests have happened in 12 countries in Africa, 11 countries in Asia, 24 countries in Europe, 8 countries in North and Central America, and 2 countries in Oceania in just a year's time. So let's boil down all this worry to 5 main reasons, India included. Pricing of produce, delayed compensation or subsidy, unfair effects of climate change, policies and regulations, import and export duties, and supply chain discrepancies. What does this say about the world of agriculture? Does it just question politics and governance, or does it hint at a bigger problem, a potential global food crisis?
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with.
Hello and welcome back. You're watching Market IQ on NDTV Profit. Now, here at NDTV Profit, we aim to recognize contribution of women from across all walks of life. And in today's Women's Day special, we're throwing light on the gender gap between male and female fund managers in the industry. Did you know that out of 473 fund managers, only about 42 are women managing funds? Have a look.
The fund management industry has plenty of opportunities. Despite that, women fund managers are drastically underrepresented. The latest findings of Morningstar report shows that of the 473 fund managers, 42 are women who are managing funds either as primary or secondary managers. While there has been a steady increase in the number of fund managers as compared with 428 seen last year, the number of women fund managers has been static. Given that there was no increase in the number of female fund managers since last year, the representation marginally declined to 8.88% from 9.18%. The total open and closed-end assets managed or co-managed by female fund managers was approximately Rs 6.66 lakh crore or 12.63% of the total mutual fund assets. The assets managed by women saw a sharp uptick compared with last year when women managed about Rs 4.44 lakh crore, a growth of 50%. Women in finance are no longer an oddity, with some fund management companies even led by women. However, the percentage of women fund managers in the country still remain exciting. We spoke to a few female fund managers at top AMCs, with some of them having 25 plus years of experience in the field of finance and understand their growth and challenges.
When I started off, there were people who were joining and gradually getting into it, but wherever they had family support, the number of girls who were coming were much lesser. But today it is almost every family, at least to start with, people target to get into career, have that thought process.
This journey has been quite challenging as well as quite a learning perspective, and I guess on the curve of learning I am still there and learning every day. That's the best part of my field, I can say. The problem of representation of females being less is not particular just to the finance industry. It's overall, because the overall pie itself, right? The labor force participation, if you look at females, has been quite low in India. I mean, it's even lower than what our neighboring countries have. So the problem is everywhere. But as you mentioned, yes, in our field of finance, it has been even much more. Maybe one reason would have been the lack of confidence.
Gender or pay scale has not been an issue anymore, and opportunities have also been the same and equal for all in this highly competitive industry. So what could lead to more participation and representation of women in the fund management industry?
Organizations start prioritizing the fact, look at women diversity, and not only for namesake, because women diversity, gender diversity is a big fad today.
Better flexible hours of working, work from home if possible on few days, a hybrid model, and the proximity to the workplace. These are some things which can reduce the burden on females, and the participation rate would increase.
Now, speaking of the gender gap, targeted policy making remains critical to bridge challenges like these for women in India and globally. That's where gender budgeting comes in. Now, a budget, as we know, is one of the most comprehensive documents by the government, which lays out what its economic plans and its priorities are. A gender budget presents an entry point for integrating a gender perspective in all stages of public financial management. Now, gender budgeting is concerned with gender responsive formulation of policies and schemes, resource allocation, implementation, audit, and impact assessment. Now, just to be clear, a gender budget is not a separate budget for women. It does not imply that funds are being divided into half and half for men and women. But the more important question, moving on, is how has India been performing on this aspect? How has it been performing in terms of gender budgeting? Here's a look. In FY25, in the interim budget, the gender budget has increased by 38.6%. Now that sounds like a really large number, right? Just for perspective, even after that, the share of gender budget in the total union budget has increased to just about 6.5% in this fiscal for FY25 from about 5% in FY24. About 43 ministries or departments have reported a total of about 3 lakh crore rupees in gender budgeting statement for FY25. This is compared to a figure of about 2.2 lakh crore rupees the last year. Well, that's all we have on this show for today, but stay tuned to NDTV Profit. We have a lot more lined up over the course of the day, including our many specials on Women's Day.
Brought to you by बनेगा तो बढ़ेगा इंडिया, अल्ट्राटेक, देश का नंबर 1 सीमेंट.
Hello and welcome to NDTV Profit. Today we will talk about tattoos and the worth of this market. The history of tattoos in India can be traced back to prehistoric times when tribal people were captivated by drawings on stone or wood walls. Their attempt to replicate these figures through needles gave birth to the practice of inking skin. Over the course of time, tattoos were embraced by tribals as a mark of bravery, war, religious beliefs, customs, marital status, protection from the male gaze, and so on and so forth. Today, in 2024, tattoos have become a means to express thoughts, individuality, personal experiences, and sentimental designs. The industry is estimated to generate over 20,000 crore rupees per year. What is driving this growth? One of the key drivers behind the growth of the tattoo market is the rising demand for customized and unique designs. Improved technological equipment for making advanced, safer, and painless tattoos have boosted the market. The laser technology for removal or modification of tattoos have also added to the surge. Increased exposure and promotion of tattoo designs on social media have led to widespread influence of tattoo culture on the youth. Take a look at these figures now. As per Fortune Business Insights, the global tattoo market is projected to grow from $2.04 billion in 2023 to $3.93 billion by 2030 at a compound annual growth rate of 9.87%. This is a sharp rise from 3.8% year-on-year growth between 2017 and 2022. As per Custom Market Insights, the diamond jewelry market is expected to grow at a compound annual growth rate of 5.5% by 2032, while the luxury jewelry market at a rate of 8.9%, but the tattoo market is estimated to grow at 9.5%. Is the tattoo business lucrative? According to an article by Opportunity India, tattoo kits are now easily available for less than Rs 10,000, while high-end kits range from Rs 20 to 35,000. Now, in a city like Mumbai, the average cost per inch is Rs 2,000 to 2,500. In Delhi and Bangalore, the cost per inch is between Rs 1,000 to 2,000, and in Goa, it is about Rs 500. We spoke to a couple of tattoo artists in Mumbai and found that at an average, the business earns them a profit of Rs 75,000 to 1 lakh per month. In fact, as per an article by India Today, a person can earn a minimum of 20,000 rupees to Rs 2 lakhs per month depending upon one's work and creativity with an initial investment of 1.5 to 2 lakh rupees. A beginner level tattoo artist can earn a minimum of 20,000 rupees per month, which gradually increases to a couple of lakhs or more depending upon the caliber of the artist and the uniqueness of their artwork. And I'd like to leave you with an interesting data by Advanced Dermatology that revealed that 63% of people with a tattoo smaller than the palm of their hand regret it. The reasons being impulsive decisions, 35%, significant meaning, 29%, or the idea that it would make them look cool, 18%. Thank you for watching and stay tuned to NDTV Profit for more.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam.
Welcome, you're watching the Mutual Fund Show. I'm Tamanna Inamdar, and today we are highlighting and wishing our viewers a very happy Women's Day. We're celebrating this day by also focusing on the financial health of women all over the country. Now, mutual funds have become a very important vehicle for women to achieve financial independence, no matter what their circumstances are. But when we're talking about financial health and women, it's also important to understand the outlook women have towards their investment. So an interesting study we came across by FinEdge, which says there is a growing trend of financial awareness among women. Many of them are engaged in goal-based investing, and as much as 44% of those surveyed prioritize retirement planning, while 34% allocate funds for their children's education. 39% start investing in their 20s and 41% in their 30s. Now, we wanted to start off the show, and we must tell you, we have a very special guest today on the show. We're going to be speaking with Radhika Gupta of Edelweiss. But I wanted to start off with the basics. We assume that everyone knows it's a no-brainer of how you should invest in mutual funds. That's not necessarily the case. So my colleague Tanvi Dhote has put together this report to guide you on how to start your mutual fund journey.
Financial independence. These two words can fulfill the dreams of so many women across the globe. And one of the easiest ways to achieve financial independence is by investing in mutual funds. This Women's Day, why not begin our journey towards financial independence? Without further ado, let's get started. Step 1. Figure out your financial goals, whether you wish to buy a house by the time you're 38 or wish to create a retirement fund. Step 2. Understanding your risk appetite. Investment advisors usually suggest people who are 35 years or younger to invest in more equity-based mutual funds and less in debt funds or fixed income sources, since this age group has lesser liabilities and a higher risk appetite. As you grow older, or if you're in your late 50s, then it's better to stick to more debt funds and fixed deposit strategies and reduce equity in your portfolio. Step 3. Offline or online investing. You need to choose whether you plan to invest online or offline. You can find plenty of platforms like Grow or Zerodha, or even mutual fund house platforms that will help you invest in mere minutes. Or you can reach out to a SEBI registered investment advisor offline. Both online and offline require you to submit scanned documents like your PAN card and Aadhaar card along with your bank statements. Next, you need to link your bank account to the platform. Initiate the investment process by selecting a mutual fund, transfer the amount you wish to invest as a one-time payment or SIP, and then keep track of your investments online. As you gain more understanding about mutual funds, you can make changes to your portfolio. Do make a note that investing offline is time-consuming, since offline investing will require you to fill out physical forms each time you invest in a new mutual fund or change any other details. There you go, you are now all set to start your mutual fund investment journey. And if you still have some doubts running in your head, don't forget to send us your queries to the Mutual Fund Show only on NDTV Profit.
All right, so that was your ABC of how to begin your investment journey, and frankly that advice is for you whether you're a man, woman, for everyone. But to speak more on this, and because today we also want to focus on women's participation in the markets, in mutual funds and in the industry, I'm speaking with Radhika Gupta, MD and CEO of Edelweiss Mutual Fund. Radhika, thank you so much for joining us. Always a pleasure to speak with you. I want to understand whether this has now become more of a norm, women mutual fund managers, more women participating in the mutual fund boom, or is this something just in our perception? What's the ground reality in your view?
I think it's a little mixed, and you have to separate the two issues. One is women participating in capital markets and funds, and one is women being employees and being fund managers and CEOs and all of that in the industry. I think on the first one, which is women investing, we have made a lot of progress. I agree with a lot of the introductory comments. Today's young millennial or Gen Z female investor is part of a lot more of an aspirational India. She is increasingly working. This whole concept of Atmanirbharta and financial independence is important. And there are both women financial advisors, platforms, women-focused conversations. So increasingly, even if you look at the data that AMFI is releasing, young women investors are a very fast-growing lot. And I think that is very encouraging data. And from all the data I see, they also tend to be a pretty responsible lot in terms of their investing patterns. And I can share some data with you. So I think on that front, we are making progress, and we will continue to make progress. On the second front, I think we've made a little less progress. I always quote the number that if you look at 45 asset management companies, between the core leadership roles of CEO, CIO, COO, all these 5-6 roles, you should have about 300 positions in leadership. I doubt even 10-15 of them are filled by women. So on that front, I don't think we've made as much progress as we should have. It's ironic because if you look at the banking industry in our country, at some point, a lot of the country's banking assets were run by women. That hasn't translated as well to women fund managers and women in the asset management industry.
In fact, I was just looking at this data, and we'll play out a report by my colleague Saloni Kothari in a bit. But this Morningstar report says that among total managers of 473, this is the Women Fund Managers Report 2024, out of 473 managers in all, 42 are women, while 431 are men. Only 8.88% all right, let me just round it off to 9% of fund managers are women. Total assets managed by women is 6.66 lakh crores, which is only about 13% of overall assets. I want to understand the whys of it, Radhika, because it's not as if there are too few women going into the pipeline of the financial industry. Or those who are graduating from colleges, etc. Those numbers aren't that skewed. And you're talking about the CIO, CXO level, but even at the fund manager level, there is such a huge gap.
It is, but I mean, I'll come to the why of it, but I should make a point here that every year on Women's Day, I see these reports about women fund managers. When you do reports on the asset management industry, I would encourage everyone to do reports on asset management companies as a whole, because with due regard to fund managers, an asset management company is not just made by investment professionals. It's made by the people who sell on the ground. It's made by the people who manage money, the people who go crazy to service that money, the people who launch products, and women are unrepresented across the spectrum. So I don't know why we call out only fund managers every year. I find it a little bit bizarre. Now, as far as why, I think there are a few reasons. One is, if you look at the origins of fund management, it was largely capital markets, and Dalal Street and the popular perception tends to be a little alpha male. So I think that it just is. You go watch a movie called Bazaar in Hindi or a movie called Wolf of Wall Street in English, and you'll start to see half the problem. Because where do fund managers come from, right? They come from capital markets. And I think that is the difference. Women bankers still are represented very differently, but capital markets is just presented in a very, very different way. I don't think the pipeline's as good as you make it out to be. I mean, even when we try and hire, and we are an AMC with 4 women CXOs and 32% women overall. So, we hit the mark on many stats. Even when we try and go out and hire women fund managers, the pipeline is not very large. It's probably better at an analyst level, but there's a lot of dropout in the 30s and 40s. So even just the pipeline to choose at the fund management level is not that high.
That's unfortunate if the pipeline is not that high, because I think, I don't know if you need an alpha kind of a personality, or the assumption that women can't have that alpha personality. It's all very skewed. So I'm sure it will change soon. But since I have you here, Radhika Gupta, I must ask you about what's happening in the industry right now. Yeah. And for the entire space, it's a time of flux, I would say, in a sense. AMFI is coming down, of course, guided by SEBI, on the kinds of investments going into small and mid-cap. The idea broadly is to protect investors. How do you see these developments? And are we seeing a situation now that AMCs have to rejig their investments to stay in line with what the directions are? Is there a lack of clarity, or are you clear now on what comes next?
So I think we're clear on what we have to do. In fact, before this conversation, I was reviewing the mid and small cap disclosures for our own AMC in a meeting, because they have to be out on 15th March, if I'm not wrong. Look, I think what AMFI and SEBI are doing is prudent. A lot of money has come into a certain category. It is a higher risk category. And the last thing you want is that all this money comes into the category and you have an unforeseen situation around liquidity. We actually welcome this move, because we've always believed in our own funds that liquidity is of prime importance. In fact, we publish this information in our presentations and fact sheets. And there is nothing wrong with taking any kind of risk, as long as you're taking that risk with your eyes open. I've increasingly worried that so much money that comes into the industry and into mid and small caps is 1 year performance chasing. Literally, you'll have the top performing small cap fund in the charts and people will just flock to it. And the reality is 50-60% returns in 1 year don't repeat themselves. It's not sustainable. So I think the best thing, and SEBI on AMFI is not coming out and saying stop flows into small cap funds, don't invest. They're just saying this is the data, invest with your eyes open, buyer beware. And I think the data is not going to, I looked at the data for our own fund house and it doesn't look scary at all. There's no rejigging that we need to do. So it is business as usual. And if you paid attention to liquidity, I don't think the disclosures and the action is going to require anything. If you didn't, then I think it will require some attention, but that's not necessarily a bad thing.
Yeah. So just to get your view on this, Radhika, we put out a story about the circular that AMFI has sent to mutual fund trustees to conduct stress tests, like you said, for the 15th of March. And the parameters there were MFs to assume peak traded volume at 3 times daily average, to assume 10% participation of peak daily volumes, liquidity based on days taken to sell stocks at 10% participation, and mutual funds to calculate liquidity based on top 80 most liquid stocks. You also have to disclose liquidity of 25% and 50% of the portfolio. Is this on the lines of what you have received? Can we confirm that with you? And is this doable?
It's fairly accurate, and it's, as I said, I just saw the disclosures for our own fund house about half an hour ago. In fact, I would argue the disclosure is a tad generous, because it's not 80, it's 80% of the portfolio it lets you see. So it lets you exclude 20% of the most illiquid part of the portfolio. So it's actually quite generous in a disclosure.
Okay. Just one more take on this before we take a very short break, Radhika, is for investors who are watching this and who have bet on small and mid cap funds, obviously because you have seen far superior returns, what is the messaging going out for them? Because many are perhaps wondering whether you're going to see a bit of a downturn. You're seeing pain points in the markets as well. What would you say to them?
So it's a great question, because I don't think the messaging also of this movement should be mid caps and small caps are overvalued, have a sense of panic. I don't think that should be the messaging. That's not the intent of the messaging. The messaging should be one, if you have put money into these categories, and they are great categories. A lot of our portfolio is mid and small cap as well. They're great categories for the future. Have realistic expectations when you put money. I repeat, the last 1 year number of any category on the website these days looks like 50-60%, not sustainable. Second is, within the gambit of mid and small cap funds, there is a certain degree of nuance. It's like when you are looking at fixed income, credit risk, liquidity risk matter. When you're looking at mid cap funds, there is something called concentration. There is something called liquidity. These are things that matter. There is something called redemption risk. So I think the idea is for people to become more aware investors, and I think it's good. The more questions we ask before investing, the less questions we'll have to ask after investing. And that's a better investing experience. So I think that's the message. It's not mid caps are overvalued. Don't invest in mid caps, go redeem your mid caps. That should not be the message at all.
Yeah, absolutely. And that's important, because, that's where you're going to see the growth coming in, or, in well-managed funds, at least you definitely will. Please stay on with us, Radhika. Viewers, it's time for a very short break, but we're coming right back with, Radhika Gupta's outlook for what are going to be the best performing categories, how she sees the markets going, and a lot more.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Amul has completed 50 years in India. PM Modi will attend the Silver Jubilee celebrations of the Gujarat Cooperative Milk Marketing Federation, the owner of Amul. At one point of time or the other, we've all grown up with Amul butter or milk for sure. The famous Amul girl created in 1967 is family. We all recognize her. But as the brand grows 50 years old today, do you remember the full form of Amul? It is Anand Milk Union Limited. From producing 250 liters of milk per day since the time Amul was formed back in the mid-90s to today, where Amul has over 36 lakh dairy farmers and produces nearly 300 lakh liters of milk per day, the brand has had a long journey. The story goes way back in time. In the 1940s, dairy farmers were worried. The middlemen exploited their ways of profitable income, and a poor milk production system made their living difficult. Tribhuvan Das Patel and Verghese Kurian identified these issues and helped in the formation of the first milk union called Kaira District Cooperative Milk Producers Union in 1946. The cooperative model gave farmers direct ownership of the dairy industry. The union helped them process, market and sell milk and milk products without the interruption of intermediaries. And it was in 1955 that this union chose a brand name for itself called Amul, which means priceless in Sanskrit. And then in 1973, Amul Dairy along with 16 other district cooperatives formed the Gujarat Cooperative Milk Marketing Federation, which has now completed 50 years in India. Amul also started India's white revolution that made our country the world's biggest maker of milk and milk products. The brand follows an umbrella marketing technique which has helped GCMMF prevent association clashes and keep an open door for the patrons to coordinate in creating items. As per a report by Statista, the annual sales turnover of Amul from 2011 to 2023 has consistently risen, recording about 55,000 crore rupees of turnover in 2022-2023 alone. And did you know, Amul has also held a Guinness World Record for having the longest continuous run of any advertising campaign that has ever taken place anywhere in the universe. Amul Doodh Peeta Hai India and Utterly Butterly Delicious will always strike a chord. Let us know which famous advertising phases of Amul do you remember.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies, for others, kids.
Welcome back. You're watching the Mutual Fund Show, and we have a very special guest today, Radhika Gupta, MD and CEO of Edelweiss Mutual Fund. Radhika, of course, we're talking, in our Women's Day special, but I want to bring the focus on the sector, the industry, and also what's happening in the markets right now. With a slew of action that we've seen from regulators, whether it's IFL, it's JM Financial, Paytm before that, a lot of focus on two things. One, whether any of these stocks are in mutual fund portfolios from the investor point of view. And also, what is the outlook on the financial sector? Is the regulator going overboard, or is there really some things which need to be cleaned up? I just wanted you to weigh in.
Look, so I think whether the stocks are in mutual fund portfolios, I mean, the data is well known and people will take individual stances on individual companies. And I think as far as mutual fund portfolios, there often is too much scrutiny because most mutual funds run extremely diversified portfolios where even if these stocks, and I'm not talking about us, were there, they're 2-3% weight. So, in financial services, regulatory action is a big one. In pharma or in healthcare, FDA action is a big one. So I think that risk exists. And, you can't scrutinize mutual fund portfolios with every stock. So unless there's a really systemic problem. As far as I think, and I won't go into companies, but some of the regulatory action that you named, I think that it has been a practice in financial service. I mean, this sounds very obvious to say, but the reality of running a financial services business is that it is going to be highly regulated. And the fact is, world over in financial services, regulatory intensity has only increased, not decreased post 2008. So I think that is the reality that we operate in, and all of us will have to up our standards of compliance, whether we are an exchange, whether we are a asset management company, whether we are an NBFC or whether we are a fintech. And I also think from a startup point of view, seeing startups in another role at Shark Tank, I always say that if you're a startup in the financial services space, regulatory compliance is something that you don't take risks with. You don't even call it hygiene. You always say, I want to ace regulation. So that is my take on it. It's part of doing business in this industry, and world over in financial services, compliance will increase.
Compliance will increase. Then the natural question is that why are there so many companies, large storied companies and brands being found falling short of compliance?
It's a question that is difficult to answer. It's a question that is difficult to answer. I think one of the things that has happened is that the quality of technology in our regulatory systems, whether SEBI, RBI, has really gone up. And I mean, this is praise to our regulators. And perhaps it's a signal to industry that we have to do as good a job. You know, our regulators have not only caught up, they're ahead of us in terms of the work on technology. I know our SEBI chief keeps talking about the power of data and the role of technology. And I think the work, some of the work they've done on algos has been outstanding. And so perhaps that's why you're seeing that now, you know, before regulatory compliance was something you caught in an inspection. Now I think their access to data, their algos makes the ability to catch things far quicker, almost live, and with a lot of data to back up those answers. So I think that is something that as an ecosystem, we have to be increasingly more prepared for.
Absolutely. Thank you so much, Radhika Gupta, for joining us today. Fantastic having a conversation with you, as always, on all days, and not just on Women's Day. But great to speak with you and hope to have you back soon. That's all the time we have on this edition of the Mutual Fund Show. But stay tuned, a lot more coming up on NDTV Profit.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Hello. Good morning, ma'am. I'm speaking from XYZ company. Are you looking for a job or a job change? Have you been receiving unwanted calls from spam numbers? Are you tired of being offered new jobs, insurance schemes, or free health checkups? Well, today we will look at an interesting survey report by local circles on pesky calls that received 60,000 responses. Most unwanted calls are related to financial services, 54%, and real estate, 22%. In fact, the report has taken names. 40% mobile subscribers have identified Bajaj Finance as a top offender, HDFC Group as the second biggest pesky caller. The report reveals that 60% of people received 3 or more spam calls on an average day every day, and 92% of people registered on the Do Not Disturb list still get pesky calls. So is being listed on DND working? Clearly not. But the report also recorded a minute relief, as per which 6% people don't get any such phone calls. This relief comes after the TRAI directive to banks, insurance companies, and other commercial entities. TRAI is the Telecom Regulatory Authority of India. In fact, the Department of Consumer Affairs has constituted a committee comprising members of different regulatory authorities, telemarketing companies, and cellular industry to draft the guidelines to address the issue of pesky calls. So yes, pesky calls are still a worry, but there is a little relief too. Can you ignore them though? Toll-free numbers are identifiable, so institutions have found a new way. According to the report, calls from different mobile phone numbers that seem to belong to companies or brands have risen from 29% in February 2023 to 36% now. And look at the change in trend. Real estate selling has risen from 18% last year to 22% now. However, job offerings have decreased from 10% to 4%, and in the case of those selling financial services, the calls have slipped from 60% to 54%. So the bigger question is, will the nuisance of pesky calls end anytime soon? There should be a system where pesky callers are blacklisted at the Aadhaar level, so they have the risk of not getting a new SIM. Also, brands on whose behalf the contracted callers are calling also need to be held accountable by the Department of Consumer Affairs, so brands institute the right consumer outreach practices both with employees as well as third-party contractors. For more such updates, stay tuned to NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, Profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future,
as we've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you?
Couple of seconds to go. It's fantastic. We're on top of the world. We're leading the change, and we have the support of all our colleagues.
Talented, supportive, happy. They empower men and women combined in the newsroom.
They are driving it, not just changing it.
Smart,
fun yet intellectual,
radiating confidence,
vibrant, effervescent, and stunningly intelligent.
Innovative, hardworking,
Multitasking, versatile, enigmatic, and very cheerful.
Tenacious, humble, and wanting to get to the depth.
They are much more talented. They are much more creative and innovative. And they are bringing a sanity in overall discourse that we are currently creating and consuming.
Hello and welcome back to NDTV Profit. You're watching Large Trades, a show where we talk to you about all kinds of bulk and block deals, large trades and all kinds of buzzing stocks. I'm your host Mika Barve, and with me is Agam Vakil. But before we talk about, all the kind of buzzing stocks today, Agam, how have the markets fared today?
The markets are looking good at the moment. We are seeing new life highs being built as far as the Nifty is concerned, and at the moment we are also looking at the Nifty hanging around the 22,500 mark, playing around there, and the real question is whether or not we close above it. It does seem like there's a likelihood that we won't give up these gains. It's currently marginally in the green. What about the Bank Nifty? Let's take a look at that as well. And there we have seen a little bit of an underperformance, but it's just an ever so slight underperformance. I would call this a relatively quiet day of trade through the course. We haven't seen very sharp moves on the upside or the downside for that matter. And even in terms of the key contributors, we haven't seen too much change there either. And in terms of the push or the pull, let's pull that list as far as the key contributors to the Nifty go and see where there is in fact some traction. So L&T, ITC, TCS on the positive end, and on the other hand we have Reliance Industries, M&M and ICICI Bank weighing on the indices. Even in terms of the broader markets, perhaps we can pull that list up of all that is buzzing in trade. So the broader markets are of course once again outperforming the benchmarks. The mid-cap index is up around 0.4%. The small-cap index is gaining a bit higher. It's up around 1%. And in the broader markets, we are now keeping an eye on a whole host of Tata companies. Of course, Tata Chemicals is right at the top. It's given away some of its gains from earlier on, but it's still up as much as 11% at the moment. Tata Tele is the other one, up around 6.3%. And then we have names like Z Entertainment, which have once again seen a little bit of resurgence. It's down, it's up around 4.4%. On the losing end, what do we have weakness in? Apollo Tyres, that's down 3%. Along with that, something like a CG Power and Motherson Wiring is down around 2% as well. But more gainers than losers overall in the markets at the moment, looking good, and also likely a positive note to end this week on, Mihika.
Yes. So moving on to the first stock of the day, we do have Tata Chemicals, and its subsidiary Rallis India as well, which are buzzing in trade today. Let's bring in Varsha for more details on the same.
If you see, Tata Chemicals have seen an intraday high of almost 14%. Now, in last 5 days, the stock is up almost 40%. Now, volumes are at over 18x its 30-day average. Now, the recent rally has come on the back of two things. One being Fitch Ratings have revised the outlook of Tata Chemicals long-term foreign currency issuer default ratings to stable from positive and affirmed the rating at BB+. Also, the second reason being Spark Capital note on 4th March, which states that Tata Sons, the parent company of Tata Group, is going to list within 18 months. Now, this is because the RBI has classified the company as upper layer NBFC, which should, as per the mandate, it should list within 3 years. That means Tata Sons could list by September 2025. But why are the shares of Tata Chemicals rallying up? Now, because if you see Tata Motors, Tata Chemicals, Tata Power and Indian Hotels have ownership in Tata Sons. However, the only realistic way to get exposure to this potential value unlocking opportunities via Tata Chemicals, as company amounts to nearly 80% of Tata Sons overall market cap. Now, we have seen pressure in Tata Chemicals in beginning of 2024 due to soda ash pricing pressure and industry-wide headwinds, which led to falling realization. Now, we do have other stock which is buzzing, led by Tata Chemicals, is Rallis India, which is a subsidiary of Tata Chemicals. Tata Chemicals hold almost 55% stake in this company. Now, because of rise in Tata Chemicals, we are seeing surge in Rallis India stock as well.
Okay. All right, Varsha, thank you so much for joining us and taking us through all those details. And it's, some of the factors that Varsha has mentioned, it doesn't necessarily only stay with, and it's valid for Tata Chemicals and Rallis, but several other Tata Group companies as well, because of the kind of cross-holding and the potential unlocking of value that can come through if Tata Sons is mandated to list in the bourses perhaps later on in the year. But that's a question that perhaps will be answered through the course of the several upcoming months. Let's move on and talk about GR Infra then. That's the other stock which is reacting on the back of a stake sale announcement. We've seen volume surge here, and it is also gaining today. Let's get in Anushi to give us more details here. Anushi.
Right, Agam. Quite some excitement over this counter, about 58 times the volumes if you are comparing it with a 30-day average. Now, the stock did see an intraday high of about 7%. Well, this is on the back of the promoters announcing that they're going to sell about 5% of their stake to meet the minimum shareholding requirement. So, if you have to look at the current shareholders, so that shareholding of the company, that stands at about 79%, whereas SEBI requires it to be in the range of 75%. So, just to get in that guideline, the company has announced about 5% of their stake, which has to take place in the period of this 1 month itself. Now, coming to the other key shareholders of the business, the mutual funds stand at about 15 to 16% over a year, while the FPIs have a little bit about 0.5% of equity stake in the company. Overall, if you have to look at the stock performance of the company, not much of a gain that we are seeing. About 1 month is down about 4% now, while the 6 months is almost, it is flat exactly like that, and 1 year gains about 25%. So this is the overall picture that is building for GR Infra projects for today.
Thank you so much, Anushi, for those details. We now shift focus to Carousel. The shares are buzzing in today's trade and it's reacting on high volumes. Let's bring in Mahima with more on this.
Right, Mehika. So just to brief you about what Carousel does, what is the business exactly? Well, the company is engaged in manufacturing, trading of quartz kitchen sinks, stainless steel kitchen sinks, bath products, tiles, etc. Well, the Q3 earnings, if we talk about, have been pretty good. The numbers, revenue were up 37%, net profit was up over 26%. If we talk about the revenue geography-wise, well, 78% of the revenue comes from their exports and only 22 comes from domestic. And if you talk about revenue mix product wise, well, 50% of the revenues come from the quartz sink side and 28% comes from the surfaces side. Well, their con call recently took place, and a few highlights from the con call suggest that they're trying to increase the capacity utilization in quad sinks to 70% by the end of FY24. The expansion of stainless steel sink capacity to 1,80,000 units is what is expected, and this will be around 67% of their current utilization. And they have established, in terms of their markets other than Indian markets, well, they've established a new subsidiary in Turkey. They've experienced a strong performance from US and UK markets with the destocking process that has concluded. Talking about their debt, well, the debt in their balance sheet is approximately 270 crores and net debt stands at 260 crores. They've also entered into partnership and new products. They've entered into partnership with Kalo for wine chiller buckets in the UK market, and they have tapped new businesses in India for hot water taps, which will be launched in Q1 FY25. Now, they've also guided for FY25, the revenues, they plan to achieve around 1,000 crores of revenue by the end of FY25. They've also said that they want a sustained growth in the sink volume, and they want to achieve a target of 6 lakh units by the end of FY24. And lastly, talking about the stock performance, well, the stock has touched an intraday high of around 8.5% today. 1 month, the stock was down by 4%. However, 6 months, the stock has been up 46%, and 1 year, the stock has been up over 74%. So this is all we have for Carousel.
Thank you so much, Mahima, for those details. I now want to shift focus to a railway counter, which is Jupiter Wagon. Now, it did reach an intraday high of 9.9%. However, it has paired gains now. It's about 2% higher. Now, in terms of stock performance in the past month, it's shown a little bit of weakness. It's down about 3%, if I'm not wrong. But in the past year, there's been a lot of strength. It's up 3.7 times. Now, volumes today were over 3.2 times its 30-day average, with total volumes are 35.53 lakh equity shares, but sellers were 3 times the buyers. Now, the buzz was around an order win that the company did receive. It received an order win from the Ministry of Railways, and the order value was at 956.87 crores, and the company is set to manufacture and supply 2,237 BOSM wagons. Now, when you talk about Q4, now the total order flow, from what I gathered, was around 1,056 crores. The company also received an order from leading auto manufacturers earlier in this quarter to build and supply 4 rakes of double-decker automobile wagons. In terms of Q3 earnings, their revenues were up 39%. EBITDA did see 55% uptick, with margins expanding 144 basis points, and net profit was also up 82.7%. And lastly, I want to talk about the earnings visibility. There are several factors that do provide a healthy earnings visibility for Jupiter Wagons. One is the recent order of 4,000 BOXN NS wagons from the Indian Railways. They also have a strong amount of contracts from the Defence Ministry for BOM wagons, and also private orders for the double-decker automobile carriers. Now, as of Q3, their braking systems division also had 112 crores of order wins, and their order backlog now stands at 7,073.61 crores. Well, that's what we had for Jupiter Wagons. And the next stock in focus is Mahindra & Mahindra. Now, the stock has dipped over 4% on the back of the promoter selling 0.8% equity in the company. Smriti joins us with more details. Smriti.
Mahindra & Mahindra's promoter, which is Prudential Management and Services, is today going to sell about 0.75% of stake today in the market. That's about 93 lakh shares, and from the price will be from up to 3% from yesterday's closing. So on an upper end, the deal is about over 1,800 crore rupees. Now, Prudential held 11.6% stake as on December 2023, but it came out with a statement last night as well, Mahindra & Mahindra, on the exchanges, where it said that shares of Prudential held by the former chairperson Keshav Mahindra, who passed away last year were given to his family, and they have liquidated a proportion of this stake to meet their needs. And they promised that they will continue to retain the status of promoter in the group company, and there is no intention to sell further stake in the company in the foreseeable future. So that's the statement from the promoter group as well, that they're gonna continue to retain the promoter position and won't sell stake. Now all the details about the price and the stake, NDTV Profit saw the term sheet last night and were put out, and that's why we're seeing a sharp reaction in the market today as well on this.
A sharp reaction, certainly, and this is on big volumes too, and that is also perhaps for obvious reasons. In fact, while as we stand, the volumes stand at around 16.7 million, and the last time we've seen volumes higher was back in October of 2021, so a little over 2 years, and that's where the intraday volumes are. That's the highest that we've seen in a little over 2 years. And of course, we've also had analyst views, and they're saying that it's not a fundamentally shifting event. Still, that's something to keep an eye on. But on that note, we slip into a short break, and on the other side, we get you a lot more in terms of sectors. Stay tuned in.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Electoral bonds have been deemed unconstitutional by the 5-judge Supreme Court bench headed by Chief Justice D.Y. Chandrachud. They were first introduced in 2018. An electoral bond is a means to fund a political party in India while maintaining anonymity. These bonds are available in multiple denominations ranging from 1,000 rupees to 1 crore in specified branches of the State Bank of India. This was introduced in the system to maintain transparency in political funding via a banking network and reduce black money. But on the flip side of this intention, questions have been raised on the basis of an important fundamental right of democracy. That's right to information. Is it constitutionally right to keep the source of political funding discreet? Why shouldn't the public know who is funding how much money to different political parties? As per the findings of Political Party Watch, a program under Association for Democratic Reforms, 28,030 electoral bonds worth Rs 16,618 crore were sold between March 2018 and January 2024. The Supreme Court's unanimous decision follows a petition filed in September 2017 challenging the Finance Act 2017, which introduced the electoral bond scheme for the purpose of electoral funding. The Act has also removed the previous limit of 7.5% of the company's average 3-year net profit for political donations. The Supreme Court has asked the following corrective actions to be taken immediately. State Bank of India will need to stop issuing electoral bonds immediately. SBI will have to submit the details of the purchase of electoral bonds and their encashment by political parties since the interim order of the court, which is April 12, 2019, to the Election Commission in 3 weeks by March 6th. The Election Commission will have to publish all these details on its website 1 week after, that is on March 13th, after it has received all the information. Electoral bonds that have not been encashed yet by the political parties will need to be refunded. For more such updates, stay tuned to NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back to Large Trades, and on to a special story that we have for you. The Indian specialty chemicals companies are trying to reach a new frontier by entering the battery chemicals manufacturing space, from Ami Organics to Ether Industries, and from Neogen Chemicals to Gujarat Fluorochemicals. Battery chemical manufacturing is the talk of the town. To take us through all the details, we have Varsha once again joining us to give us more details about the latest updates. Varsha, good afternoon. What do you have for us in this case?
Well, thank you, Egam, for that. So we are hearing this, the specialty chemical companies are entering into battery chemicals. Now let's see what's the rationale behind that. Which are those companies that are entering into battery chemicals? So if you see, we have Ami Organics, we have Neogen Chemicals, then we have Ether Industries, Himadri Specialty, and Gujarat Fluorochemicals. Now note that these companies are not going to make lithium ion batteries, but these companies are going to make components which are used to make lithium ion batteries. So for example, Ami Organics is going to make electrolyte additives. Neogen Chemicals is going to make electrolytes, which is a component which is used to make lithium ion batteries. Even Ether Industries is going to make electrolyte additives, which is used as a raw material for making electrolytes. Then we have Himadri Specialty, which is going to make cathode, which is again a component and forms almost 31% of overall lithium battery. And lastly, we have Gujarat Fluorochemical, which is going to enter into electrolytes and cathode. Now let's see the rationale behind these companies entering into battery chemical space. So first, if you see market size, so battery market globally is going to expand over 6 terawatt hours, and global demand to grow at a CAGR of 25 to 30% over next 5 to 6 years. Also, if you see, lithium ion battery demand is expected to grow at 33% annually to reach 4,700 gigawatts by 2030. Now the main reason is India's growing EV market. So if you see, the Indian electric vehicle market is expected to grow at almost 66% CAGR from 2022 to 2030. Now, taking consideration of all these things, we do have guidance which are given by the company. So for example, if you see Ami Organics is expecting a revenue of 888 crore by FY25. Tattva Chintan, which is again into electrolyte, is expecting a revenue of 680 crore in FY25. Also, Neogen Chemicals is expecting 1000 crores from its base business and 2500 crores of battery chemicals at peak utilization. Also, Himadri Specialty Chemical is expecting 20,000 crores of revenue at peak utilization. Now this is considering the battery chemical segment also. So this is the reason why these companies are entering into battery chemicals.
Thank you so much, Varsha, for those details. Shifting focus to the primary markets, Popular Vehicles and Services to open their initial public offering on March 12th. We caught up with the management to understand their growth plans. Let's listen to that conversation.
This will be obviously pushed higher, and we have been enhancing this in the past also. The focus has been primarily on our service pie. As you know, in our dealership, there are two major pies. One is the sales of vehicles and pre-owned cars, and the other one is the service portion. So typically for a service portion, the entire EBITDA of the group, nearly about 55% of the EBITDA comes from the service portion, even though service contributes to hardly 14 or 15% of the top line. But when it comes to EBITDA, it's the service pie which gives us the most of the profitability. So our focus has been on enhancing the service pie of it. So for the last few years, both the organic and inorganic growth that we have had, our focus is on enhancing the service centers. So normally if you have one showroom that we procure or we install, maybe about 6 or 7 service workshops is what we put across to cover the market, because that is where our focus has been. And more importantly, since we've been in this business for so many years, and as you know, we were the first dealership for Maruti way back in '84. So we have built up a moat in terms of providing the service, in terms of the skills that we require to service vehicles. So whether it's a painter, tinker, mechanic, or service advisors. So we do have a training institute which builds up this technical skill, which cannot be replicated by other dealerships. In fact, in most of the OEMs, when they do have these skill competitions, more often than not, it's our people who get the awards for the skill competition. So our focus is on enhancing the service pie of it, and which will enhance our margins as we move forward.
I'll just add to that in terms of your EBITDA margins, where we are around 5% odd and 5.2, 5.3 as such. If you look at the sale of the vehicle and the turnover that comes in, that skews the EBITDA. But if you look at actual PAT, so FY22 we were at a 34 crore PAT, FY23 we were at a 64 crore PAT, and this year first half we are already at a 40 crore PAT. So I think in the automobile dealership thing, we should probably, the more focus should be in terms of profit after tax rather than EBITDA numbers, which gets a bit skewed in terms of, because the bottom line being the vehicles that we sell and the turnover of the vehicles, which skews it a little bit.
Just to add to what Naveen said, as you are aware that there's a lot of premiumization happening in this industry, both in terms of the vehicle sales, where you have the Nexa vehicles, the SUVs being predominant compared to the earlier period. Similarly, when it comes to service, these also percolate down to the service, where the service per car also, the premiumization is happening. So, and that is why you find that the last few years, the net asset value per share, the NAV per share of ours, which is hovering around 5 rupees per share, about a year or two, in FY 2022, has come over to nearly over 10.22 per share in FY 23. And in the middle of the year, that is halfway in September, that has further increased to 6 rupees, 6 point something rupees, 6.38 rupees as we speak in September. So this is how we are improving our profitabilities as we move along.
And we also have some, latest news that's coming in. The Director General of Foreign Trade has made amendments to the import policy conditions of raw pet coke and calcined pet coke. Now, under the existing policy, the aluminium industry can import calcined pet coke but not exceed 0.5 million ton per annum, and calcined pet coke manufacturing units can import raw pet coke that does not exceed 1.4 million tons per annum. Now, under the revised policy, the total import of 1.9 million metric tons of raw petroleum coke for the manufacturing units and calcined petroleum coke and 0.5 million metric tons of CPC for the aluminum industry will be permissible during 2024 and 2025. Additionally, 1.9 million tons of RPC for the manufacturing CPC manufacturing and 0.8 million metric tons of CPC, which is calcined pet coke for the aluminum industry, will be permissible from 2025 onwards. And with that, should we do a quick market check, Agam?
Well, in terms of markets, we aren't seeing it as much change. The Nifty has moved above the mark of 22,500 and it stays above that. And it's a wait and watch, because the last final hour could result in some choppiness, only because of the fact that it's a truncated week. Tomorrow's a holiday, and also it's the weekly options expiry. So on that note, this is the end to this edition of Last Trades. But on the other side of the break, we get you India markets close. So stay tuned to NDTV Profit. I'm back in just a bit.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
The farmers' protests have been making headlines. Indian farmers have demands such as legal guarantee on MSP, pension and debt waiver, no hike in electricity tariff, reinstatement of Land Acquisition Act 2013 and more. But while the protest becomes important from the point of view of elections and politics, it's not just India that has its farmers agitated. The streets of Spain, Belgium, Hungary and Poland have been roaring with protests by farmers too. Around 1,400 tractors took part in a protest in Poland and roads were blocked across the country. What do they have a problem with? Rising production costs, falling sale price, stringent regulations. They say that the European Union is not doing enough to stop cheap imports from Ukraine, which is affecting the demand for local produce. They are also not happy with the European Union's Green Deal that's designed to zero out pollution by 2050 because it limits the use of pesticides, which in turn affects yield. In Greece, farmers have demanded lower electricity prices, tax-free diesel and subsidized animal feed. In France, farmers have been fighting for improved pay and protection from foreign competition. The French government offered 400 million euros, that's $436 million, in various measures in reciprocation to their problems over low earnings, heavy regulation, and unfair competition from abroad. In Germany, farmers are against the government's decision to phase out tax concessions on agricultural diesel. Their argument is that this will lead them to bankruptcy. In Romania, the protests stem from anger about low prices for produce, rising costs, imports of cheap foodstuffs, and constraints imposed by the European Union's drive to fight climate change. In the United Kingdom, farmers are struggling to keep up with weather changes and war-related supply chain disruptions. The whole of Europe seems to have the agricultural sector in pain as climate change becomes a central focus and production prices increase. And no, it doesn't end there. As per Down to Earth, since 2023, farmers have protested in 67% of countries in South America region for a variety of reasons, such as wanting better export exchange rates and reduced taxes amid an extended economic downturn and Argentina's devastating drought, which have severely damaged crops and agricultural output. And look at this data. Farmers' protests have happened in 12 countries in Africa, 11 countries in Asia, 24 countries in Europe, 8 countries in North and Central America, and 2 countries in Oceania in just a year's time. So let's boil down all this worry to 5 main reasons, India included. Pricing of produce, delayed compensation or subsidy, unfair effects of climate change, policies and regulations, import and export duties, and supply chain discrepancies. What does it say about the world of agriculture? Does it just question politics and governance, or does it hint at a bigger problem, a potential global food crisis?
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others...
Thanks for tuning in to India Market Close, and must say it's a significant shift from the kind of mood that existed in the market for the last couple of days. And don't look at the Nifty for that. The Nifty is okay, and the Nifty is about 0.25% higher. It was higher in trade yesterday, so no surprises there. Banks must be, they started off quiet and must be quiet, so no changes there. Mid caps and small caps, and we'll get the market breadth up as well. But the Nifty mid cap index up 0.5%. The small cap index, I haven't looked at the index in the last many hours, but I was sure that it'll be good, because when you see some of the moves that we've seen in an IFL Finance, in an Inox Wind, in a Suzlon, etc., you know, in the Network 18, you know that the texture has just changed a little bit. Just bring the market breadth once before you get to the heat map and show you what the advance decline ratio is looking like. It stayed steady throughout the trading day and it's not buckling down. Ahead of the long weekend, it's not buckling down, which is a good sign. Very quickly, the heat map up on the screen, and let's see the winners and the losers. So steel has come back, courtesy maybe a brokerage note, because I don't think anything happened in China for this to happen, but Tata Steel, JSW Steel and a few others have done okay. Actually, the Tata Group stocks are really making it count. So between the Tata Steel, Consumer, Tata Motors, we seriously have some good gains out there for the Tata Group stocks. More green than red, which is the other good sign. And save for M&M and to an extent the oil and gas names. And I reckon this is on account of the GRMs coming off. BPCL, Reliance, at least on the Nifty, these two, and the broader end of the spectrum, some of the others might be a bit corrective in the session today. But Tamanna, what is the broader end of the spectrum saying?
You know, if I was looking for 2 themes to talk about today, Neeraj, one would definitely be the Tata Group moves. It's just spectacular around the board, across the board. And the other would be the recovery in two specific stocks. I'll come to it. Let's start with what's happening with Tata Group stocks, and Tata Chemicals has been a complete champion for the last several sessions, continues to be. What's happening here is the hope that a Tata Sons IPO, and if you want to ride that wave, this is the best way to do it. We'll tell you ahead in the show in a detailed way why Tata Chemicals is being seen as the best bet, but even subsidiary Rallis, a Tata Tele, a Tata Power, all of them saying a great day today in the markets, and we'll play out some of those for you. Look at that. Rallis about 12.5%, Tata Tele 8%, even a Tata Power up about 9%. I was talking about the comeback kings or the comeback queens, since we're celebrating Women's Day on the channel today. And IIFL and JM Financial are those stocks because of regulatory concerns and what the RBI has been saying over the last couple of days, actually all of this week. You saw the stocks lose steam. IIFL Finance up 10% today. JM Financial is also up about 3%. Just a couple of others on the losing side, and also because of stake sales, etc. So M&M is one that Neeraj spoke about. I'll also mention NLC, where the government will sell up to 9 crore shares via an offer for sale, and 5% stake will be sold at a price of 212. So you've seen that stock come off to some extent. Some big moves over there, Neeraj, but definitely the market also readying itself ahead of a long weekend in a positive mood, I would say. Quite a recovery in the last 24 hours.
Recovery, and frankly, if just the point about some of the stocks, the telltale signs were when the Inox Wind, when IIFL Finance, and when in Network 18 and others, all of which were clobbered for different reasons for the last 3 or 4 sessions, came up in trade. I think that was maybe a bit of a giveaway. Look at Inox Wind, it's up 5% today. And look at the others. So some very strong moves out there for some of the stocks. Now, let's get in a very special guest. She's made it a habit of not coming on media, and therefore on Women's Day, when we have Anu Jain, she's President of Equity Advisory, NDPMS 361 Wealth, joining us on the show in our studios. It is a special occasion. Anu, great having you. Thanks for taking the time out.
Thank you so much for having me here, both of you.
The pleasure was entirely ours. And to both you and Tamanna once again, a happy Women's Day in advance.
So Neeraj has been doing this all morning, which is excellent.
Playing it safe.
We've made it a point that no one can forget that it's Women's Day. And, isi bahane, Anu Jain, great to have you here with us.
Thank you so much.
Yeah, most certainly. So Anu, what's your sense? What does the texture of the market tell you?
Well, the texture of the market, the way we are holding on to these levels of 22,500, I think I've been seeing the FI figure for the last couple of days has also changed from a negative to a positive, and a decent number. The Bank Nifty, which was kind of in comatose, has kind of now started moving. You are close to about the 52-week high. You've not yet crossed it. So I think I would keep my eyes open for 2 sectors. I like the Bank Nifty formation. I like the metals formation, which you were just mentioning. Now, there's nothing fundamental on the metal side, but the formations which are there on Nalco, Tisco, SAIL, they're all looking promising, but they've not yet given a breakout. So I'd keep my eyes open for that and for banking, because while the rest of the sectors have really moved, banking has not moved. And if that was to move another couple of percent, a 3-4% move, Nifty would be close to about, 23,500. So while we are saying it's expensive, while we are saying mid caps look steep, I think there is still legs for this rally. And given that you're about a month away from election and it's a more or less given result, even the FIs which have refrained from entering the market would probably now say that we know that the result's going to be this. Let's kind of start making our inroads into the market, maybe large capish. So Nifty still has legs.
Yeah. And it's interesting that this is happening because on the banks piece, the thing that we mentioned yesterday about why whenever the Bank Nifty's valuations have been below 2%, there has been buying, I mean, it would have given you benefits, is turned out to be true. Anu, banks, I mean, large private banks or others as well?
I think, the PSU small caps have done their bit, and I think that's moved a lot. I'm not saying they will not, but I think the catch-up trade is now in the private banks. And you've seen ICICI do it smartly. I think it moved about 10% last month. Axis hadn't fallen much, but I think Axis, SBI, so it's agnostic to public and private. I think even an HDFC giving another 5-6% is very much on the card. Plus, HDFC will get some FTSE allocation also later, in this month. So all these things can prop it up definitely by about 2 to 3%.
Yeah. I know that you will not want to talk about any specific companies in terms of what's happening, and I won't ask you to talk obviously about an IFL or a JM Financials or a Paytm, but I just want to understand what the view is within the capital markets on this space from the perspective of, is regulatory action really being seen as such an overhang, or was that a bit of a blip? Because you've seen a fantastic recovery today. The sense now coming in that companies are quick to respond, and that overall financials as a space is a strong bet for investors.
So that's one pocket which is still cheap, because we saw that starting with Bajaj Finance in November, where it, from about 8,000, it is today at about 6,200. You've seen that follow through with every one of them. Now, actually, the litmus test would be, I think Bajaj has called for an analyst meet on 12th or 13th. I'm not very sure whether it's 12th or 13th. My assumption is that they're going to come. It's been a quarter that we are ready with the changes. I would really watch, because yesterday the RBI governor came and said we are not out to control growth, we are not out to get people. So how the first correction is, the remedial measures are taken by the RBI and what kind of action they take would actually be a test. So suppose on 12th or 13th Bajaj Finance comes and says, okay, I've sorted this out. And then I would look at how long does RBI take to revert back on that. And what kind of action happens then. And if that happens quickly, believe me, the others will follow suit. So I think that would be the first mover thing that you should keep an eye on around that time. And that would honestly make a difference to the entire sector. I would keep my eyes open for that.
That's a very interesting insight. And, at the end of it, on the other end of this entire story, in terms of what the regulators are trying to do, is, this concern about retail investors, froth in small and mid-cap companies, huge valuations growing up, and sort of breaking a cycle of more investments flowing in and hence more money coming in. Do you think that that is also sort of overplayed, because real value can be built into this, or are you also circumspect about some of these small cap counters?
Well, honestly, I was reading, something which Mr. Uday Kotak said at the same days when all this happened, and he was saying that regulation is always good. But the fact is, you can't go on I wouldn't say it was a witch hunt, but people felt it was a witch hunt.
Exactly.
And that always will put the investor on the back foot, money won't flow, all those things will happen. So I think everything which is taken by, and I think we are the best regulated on the financial sector, because our RBI is someone who has been very woke about the whole thing, and so I think it's not bad, but only it has to be done in a way that the regulation comes before a person kind of is reprimanded for it. So I think regulation change, regulation tightening is always good for the small investor, and that's going to be good. It's just that there is more clarity, there is a time frame in which the remedies are taken care of. So I think over a longer period of time, this will be looked back as a period which worked for the industry rather than didn't work for the industry.
Long term, absolutely. But just on the specific point of valuations of small cap and mid cap stocks and the run up that they've seen.
So that does
some of it make you uncomfortable?
Yes, obviously. I mean, we have started moving our flows where we invest into the mid caps to the large caps.
Oh.
We have done that. But if you look, we've been saying that for 6 months, and 6 months mid-caps have still been doing very well. So you can't say that where is enough. Yeah. But you just like you get a SIP into a sector, you can do an SIP out of the sector also. So you can do it slowly.
That's true. Anu, some pockets which are taking a bit of a breather currently. I'm just trying to, because you look at long-term trends as well. So for example, defense. A sector of the year for 2023 maybe. You could argue even PSU banks could be there, but defense, let's say. And currently undergoing a kind of a sideways move for the last quarter or thereabouts. What happens in spaces like this? When do you see the trend changing, if it does, or if at all?
So, you'll see that not everyone is. So, BEL is on a complete breakout.
Sure.
Okay, so things which hadn't moved, people are just saying, okay, I like the sector, I just think the others are expensive. So, let me, kind of reroute the whole thing.
Right.
So, that's happening. So, overall, the sector for a 5-year point of view, I think is extremely good. It's just that this has been a very momentum-driven market. So I think momentum has found better pockets to move on to, and I think it will be a matter of time before they come out. Wherever there are good orders coming, wherever there is, we saw that with Data Pattern about 2 weeks back, right? So it just blasted out. So I think this is a process where consolidation will happen, and then the next move will happen. And I think it's here for a time being. And if you, as I just said, if you look at BEL, that's on a move despite the sector being on a consolidation. So it's just, I would say it's like a step formation, which consolidates and moves up.
Okay, but I would take it from whatever little we've spoken thus far, and we'd love to talk to you about autos, because the stock of the day that we've chosen is also an auto name, and we'll just get that going. But I would reckon that you believe banks are the ones which people should keep a keen eye out for.
See, the fact remains that if I'm looking for value right now, okay,
very little places.
There's very little places. Even autos are fully valued. So if I have to deploy money, where do I deploy money right now? Or if today, as I'm saying, the FIs are probably going to come back in a bigger way, where the hell are they going to put that money? They want where they are sure that over the next 1 year at least, they're carrying back something home. So I think that's the place, and given that we are the most well-regulated financial sector in the world, I think that's the first place where money will come in.
Okay. Well, autos, and let's talk about that for a bit.
Stock of the day is M&M. Now, the shares have, of course, slipped, but that's because promoter Prudential Management and Services is selling about 93 lakh shares. So, not really a fundamental hit, but a large trade. Smriti joins us with more details.
Hi, yes, Mahindra & Mahindra's promoter, which is Prudential Management and Services, is today going to sell about 0.75% of stake today in the market. That's about 93 lakh shares, and from the price will be from up to 3% from yesterday's closing. So on an upper end, the deal is about over 1800 crore rupees. Now Prudential held 11.6% stake as on December 2023, but it came out with a statement last night as well, Mahindra & Mahindra, on the exchanges, where it said that shares of Prudential held by the former chairperson Keshav Mahindra, who passed away last year, were given to his family, and they have liquidated a proportion of this stake to meet their needs, and they promised that they will continue to retain the status of promoter in the group company, and there is no intention to sell further stake in the company in the foreseeable future. So that's the statement from the promoter group as well, that they're gonna continue to retain the promoter position and won't sell stake. Now all the details about the price and the stake, NDTV Profit saw the term sheet last night and were put out, and that's why we're seeing a sharp reaction in the market today as well on this.
Thank you for that, Smriti, there with all of the details. Now, I know you spoke about how autos are quite well valued, but I want to talk to you about a Tata Motors right now, because what's happening with the entire Tata group, the Tata Sons sort of excitement, the demerger news, and also from the angle of, are you now looking at which of these companies are best placed in terms of the EV switch or the EV wave? And does Tata Motors hence stand out for you, or is there a different view?
Yes, absolutely. There is no one else in the, passenger car. There's nobody else which is meeting the middle class EV background compared to them. However, I think at the current price, it's almost fully valued. So it may go on a sideways spree after some time, probably after the Tata Sons IPO probably. But for now, yes, it's good to hold. It's good to hold for 5-year portfolios. But if it's a trading portfolio, I would probably book profits. But yeah, you have this whole party going on, so you ride the party.
Are you dancing close to the exit gate right now, or no? Not really.
I think I am close to it, but I generally run the long-term portfolios, so there it doesn't make a difference. But for people who have a shorter bend of time, I think it's time.
How closely are you looking at election dates, post-election, and what happens then? Is the next 3 or 4 months a sort of a wait and watch?
I continue to be positive on the market, unlike a lot of people who are suspect that this is fully valued. I don't think we are yet fully, we've not discounted the next 5 years. So you are in a phase where everything's being discounted for 3 years. And given that, we've generally peaked out much ahead in terms of multiples as to where we are trading now, I think there is a potential that you could still do, if not 10%, at least 5 to 6% more before you go into a pause or correction. And the fact is, everybody is saying it's expensive. That itself is a fact that this is very different from previous time where everybody was in the same basket that let's chase stocks. So there is a differentiation, and I would give a lot of credit to all the channels because they have been putting valuations out for people much last 6 months that this is expensive. So people have started. It's difficult, in fact, nowadays to tell people to buy stocks because clients say it's expensive.
So we're informing them as we should.
Yes.
Anu Jain, thank you so much for coming in. And I know you told us about how NDTV Profit is special for you. So we're happy that you came in.
Thank you so much. It was the first channel I ever came to. So yes, thank you so much.
And let's not wait for a Women's Day to have you back in.
Anytime.
Can we get you to promise to come back very, very soon?
Sure, absolutely.
Fantastic. Anu Jain there are talking about markets and more. We'll take a very quick break, but we're coming back with the key volume buzzers at this hour and a lot more on what's happening in the markets.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Hello and welcome to NDTV Profit. Today we will talk about tattoos and the worth of this market. The history of tattoos in India can be traced back to prehistoric times when tribal people were captivated by drawings on stone or wood walls. Their attempt to replicate these figures through needles gave birth to the practice of inking skin. Over the course of time, tattoos were embraced by tribals as a mark of bravery, war, religious beliefs, customs, marital status, protection from the male gaze, and so on and so forth. Today, in 2024, tattoos have become a means to express thoughts, individuality, personal experiences, and sentimental designs. The industry is estimated to generate over 20,000 crore rupees per year. What is driving this growth? One of the key drivers behind the growth of the tattoo market is the rising demand for customized and unique designs. Improved technological equipment for making advanced, safer, and painless tattoos have boosted the market. The laser technology for removal or modification of tattoos have also added to the surge. Increased exposure and promotion of tattoo designs on social media have led to widespread influence of tattoo culture on the youth. Take a look at these figures now. As per Fortune Business Insights, the global tattoo market is projected to grow from $2.04 billion in 2023 to $3.93 billion by 2030 at a compound annual growth rate of 9.87%. This is a sharp rise from 3.8% year-on-year growth between 2017 and 2022. As per Custom Market Insights, the diamond jewelry market is expected to grow at a compound annual growth rate of 5.5% by 2032, while the luxury jewelry market at a rate of 8.9%, but the tattoo market is estimated to grow at 9.5%. Is the tattoo business lucrative? According to an article by Opportunity India, tattoo kits are now easily available for less than Rs 10,000. While high-end kits range from Rs 20 to 35,000. Now, in a city like Mumbai, the average cost per inch is Rs 2,000 to 2,500. In Delhi and Bangalore, the cost per inch is between Rs 1,000 to 2,000, and in Goa, it is about Rs 500. We spoke to a couple of tattoo artists in Mumbai and found that at an average, the business earns them a profit of Rs 75,000 to 1 lakh per month. In fact, as per an article by India Today, a person can earn a minimum of 20,000 rupees to Rs 2 lakhs per month depending upon one's work and creativity, with an initial investment of 1.5 to 2 lakh rupees. A beginner level tattoo artist can earn a minimum of 20,000 rupees per month, which gradually increases to a couple of lakhs or more depending upon the caliber of the artist and the uniqueness of their artwork. And I'd like to leave you with an interesting data by Advanced Dermatology that revealed that 63% of people with a tattoo smaller than the palm of their hand regret it. The reasons being impulsive decisions, 35%, significant meaning, 29%, or the idea that it would make them look cool, 18%.
Welcome back. You're watching India Market Close, and the markets are, let's not look at what's happening to the Nifty and Sensex because very, very flat. The story today is in the broader market. So you need to look at what's happening with your mid-cap index, with your small-cap index, and the kind of recovery that we have seen through the day. Mid-cap 100, off that highest peak, but the small cap 250 almost 1% up, and it's being led by, of course, the Tata Group stocks like we said, but also an IFL, a JM Financial, and sort of change in mood with the kind of stress that we saw over the last few days. I'm going now to Shibani Sarkar Kurian of Kotak Mahindra AMC for her take on the markets and what's next. Shivani, thank you so much for speaking with us on NDTV Profit, especially on the day when we are celebrating Women's Day. So we're, doubly glad to have you on. I just wanted to start by getting your take on what's happened in the last 24 hours. Have those concerns of a quote-unquote, very carefully in quotation marks, witch hunt by the regulator now eased? Or is there a realization that there may have been an overreaction?
Hi, a pleasure to be here, and a happy Women's Day, a day in advance to all your viewers as well. So when you look at the markets and, especially in concern to your question on what was happening on the NBFC side and some of the regulatory steps that have been taken, clearly what the regulator seems to be stating is that wherever there have been shortcomings in terms of following the regulatory norms, the regulator has stepped in. However, the regulator has also, in many cases, as has been discussed on public forum, given adequate and ample time for these entities to make the corrective action. So the way we look at the entire NBFC space is, one, NBFCs do play an important role in terms of credit growth and also dissemination of credit to the broader country and reaching out to customers where possibly banks don't reach out to. Having said that, when you look at NBFCs today, and you look at it from a more fundamental perspective, you have to realize that NBFCs have also gone through fair amount of turbulence, specifically with tight liquidity and margin pressure. Incrementally, the way we have focused on NBFCs is a few key factors. One is look at NBFCs which have dominance or have market share in their segment in which they are operating in, preference for the secured segments over the unsecured segments, NBFCs which have strong parentage, and more importantly, NBFCs which have adequate liquidity as well as capital. And therefore, while we do believe that NBFCs, especially if interest rates do come off in the second half of the year, will have better margin trajectory, one needs to be slightly more choosy in terms of the kind of NBFCs that you own in your portfolio. And even within the entire finance basket, these are some of the key factors that we are looking at while picking and choosing plays in this segment.
Shibani, loved your note. Thanks for joining in. Happy Women's Day to you. Just a quick thought about whether you are overly skeptical of the broader end of the spectrum, or are you comfortable adding in strong growth stories even if the market capitalizations are a lot lower than what would fit an average mid-cap?
No, so hi Neeraj, again pleasure to be on your show. So I think what we have been typically saying is that if you look at the last 2 years, earnings trajectory clearly has improved significantly. both for large caps, but more so for mid and small caps. However, the re-rating that you have seen, specifically where small caps are concerned, has been extremely sharp. So today, if you look at vis-a-vis its own history, large caps are trading at about a 6% premium. Mid caps would be trading at about 20 to 22% premium to their history, while small caps are trading at almost a 40-45% premium to their own historic average multiples. And therefore, while we do expect that going forward over the next 2 years, mid and small cap earnings growth is likely to remain stronger than large caps, valuation specifically at small caps also leave less room for comfort. And hence, we have been advising that you start tilting portfolio slightly more towards large cap, where earnings growth still remains fairly strong in mid to high teens, but valuations are clearly in your favor. So that's the stance that we have been taking. And we believe that from a risk reward perspective, in the near term, large caps are possibly better placed.
Yeah. And Shibani, if Chak De was the favorite movie, what would be the favorite cast out of this ensemble of large cap spaces? If you had to choose one favorite player, would it be banking? Would it be energy, which has lost its weightage over the last 15, 20 years? Or would it be something else?
So I think you asked the right question. So if you look at today, the cast specifically within large caps, where on one hand you do have valuation comfort, and you also see a fairly strong earnings as well as return ratio trajectory over the next couple of years. I think banking, specifically the larger private sector banks, which seem to have underperformed the markets in a big way, do stand out in that context. Now, I agree that there are concerns today on margins. There are concerns today on loan growth coming off, given the fact that CD ratios or credit deposit ratios are elevated. However, if you look at over slightly longer term, we do continue to believe that the banking space, specifically the larger private banks, will continue to gain market share on loans and deposits. They are better placed on technology, and capital seems to be fairly comfortable. And margins, while there is a hiccup on margins, but if you look at margins vis-a-vis, where the cycle started, margins are still higher. And therefore, the entire return ratio profile change over the last few years has not been reflected in valuations. And therefore, risk reward again in this segment continues to be favorable. And I think if you have a slightly longer term view, may not be the next few months, this is an interesting space to watch out for.
Okay. Shibani, great having you. Thanks for taking the time out. Lovely note that you wrote yesterday. And to you and your team at Kotak MF and family, happy Women's Day.
Thank you so much, and a great talking to you. Thank you so much, and happy Women's Day to all your viewers once again.
Yeah. I'm realizing, Neeraj, that because we've been focusing on Women's Day and getting all of these fantastic speakers on, we've got such a superb variety of experts today.
Yep. And there is one more coming up.
And there's one more coming up. Shivangi Sarda, Analyst Equity Derivatives and Technical at MOFSL, with us now on the show. Shivangi, great to have you on. Thank you so much for joining us today. Let's just start by getting your take on what we're seeing in the markets in terms of the Nifty and the Bank Nifty to start with, and then of course we'll move to the broader markets.
Thank you, Neeraj and Tamanna, for having me on the show. So we have seen that the markets are cheering at lifetime high zones, and there has been a very strong comeback of the bulls with support-based buying, especially in the Bank Nifty. Talking about the broader market, the India VIX, the volatility index, has cooled off and has been cooling off from the last 1 week, which indicates that the bulls have a comfortable position in the market. Now, talking about the levels per se for Nifty, we are, standing now above 22,500 zones very comfortably. And we are heading towards 22,750 for the next levels to watch out for, with a crucial support of 22,350 zones. So this would be the take on the index, with buying to be done at any small declines. Now, talking about Bank Nifty, in the last 3 sessions, we have seen that over 85% longs have been added in the index, and the PSU banks are now supporting the entire pack right now. After a slack of the last few series, now finally Bank Nifty is outperforming, and we are seeing that it is heading towards its recent lifetime high zones as well. So overall buy on declines on the Bank Nifty as well. The chart structure looks quite positive and promising from here onwards, and we are looking at 48,250 and then the lifetime high zones for the Bank Nifty with a support of 47,500 zone.
All right. Shivangi, we'll take a very short break. Please stay on with us as our coverage continues. On the other side, we'll get top picks from Shivangi, all of our other guests as well, as we look at what's happening with the markets. A muted kind of a day ahead of a long weekend. Definitely the story in the broader markets. What should you pick at a time like this? All of that on the other side.
Amul has completed 50 years in India. PM Modi will attend the Silver Jubilee celebrations of the Gujarat Cooperative Milk Marketing Federation, the owner of Amul. At one point of time or the other, we've all grown up with Amul butter or milk for sure. The famous Amul girl created in 1967 is family. We all recognize her. But as the brand grows 50 years old today, do you remember the full form of Amul? It is Anand Milk Union Limited. From producing 250 liters of milk per day since the time Amul was formed back in the mid-90s to today, where Amul has over 36 lakh dairy farmers and produces nearly 300 lakh liters of milk per day, the brand has had a long journey. The story goes way back in time. In the 1940s, dairy farmers were worried. The middlemen exploited their ways of profitable income and a poor milk production system made their living difficult. Tribhuvan Das Patel and Verghese Kurian identified these issues and helped in the formation of the first milk union called Kaira District Cooperative Milk Producers Union in 1946. The cooperative model gave farmers direct ownership of the dairy industry. The union helped them process, market and sell milk and milk products without the interruption of intermediaries. And it was in 1955 that this union chose a brand name for itself called Amul, which means priceless in Sanskrit. And then in 1973, Amul Dairy along with 16 other district cooperatives formed the Gujarat Cooperative Milk Marketing Federation, which has now completed 50 years in India. Amul also started India's white revolution that made our country the world's biggest maker of milk and milk products. The brand follows an umbrella marketing technique which has helped GCMMF prevent association clashes and keep an open door for the patrons to coordinate in creating items. As per a report by Statista, the annual sales turnover of Amul from 2011 to 2023 has consistently risen, recording about 55,000 crore rupees of turnover in 2022-2023 alone. And did you know, Amul has also held a Guinness World Record for having the longest continuous run of any advertising campaign that has ever taken place anywhere in the universe. Amul Doodh Pita Hai India and Utterly Butterly Delicious will always strike a chord. Let us know which famous advertising phases of Amul do you remember?
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk.
Couple of seconds to go. It's fantastic. We're on top of the world. We're leading the change and we have the support of all our colleagues.
Talented, supportive, happy. They empower men and women combined in the newsroom.
They are driving it.
not just changing it.
Smart,
Fun yet intellectual.
radiating confidence.
Vibrant, effervescent, and stunningly intelligent.
Innovative, hardworking.
Multitasking, versatile, enigmatic, and very cheerful.
Tenacious, humble, and wanting to get to the depth.
They are much more talented. They are much more creative and innovative. And they are bringing a sanity in overall discourse that we are currently creating and consuming.
Well, it is certainly true, all of that and more. And we are in conversation with Shivangi Sarda. She is Equity Derivatives and Technical Analyst at MOFSL. In a bit, we'll be joined by Mayuresh Joshi as well. Shivangi, to you, Happy Women's Day to you and everybody at Team Motilal Oswal. And I would love to understand, you sounded constructive on banks when you gave off your first response. Is that the only bucket that looks strong, or do you believe something else could lead the markets higher as well?
Well, thank you for the wishes, and wishing, your team and all our women viewers a very happy Women's Day. And of course, it's not just today, but every day that we should celebrate ourselves. Of course, banking index is quite strong, and we are looking at PSU banks specifically over here, which is looking quite strong at these levels as well. Now, apart from this, auto space is looking quite attractive. Some of the stocks like Bajaj Auto, TVS Motor is, on the radar. And we've seen that Bajaj Auto has been consistently moving upwards and onwards from the last round about 12 months now. And it has been a outperformer from the last 2 years after a long consolidation. So definitely this stock is one stock on the radar. And we are, for the targets, if we talk about, then we are looking at 92.50 levels over here with a stop near 87.10. Now, the next pick on my radar is HAL. This stock has given a price volume breakout and is holding on to its exponential average quite, resiliently. And we've seen that weekly basis, it has given a breakout from its pole and flag pattern formation. And RSI is also turning positive for the stock, which is, adding to the next upward target, which is around about 34.50 odd levels, and 32.50 would be a support to watch out for.
I just want to pull up UCO Bank for a second and those flashes on your screen. Remember the IMPS scam where about 800 odd crores went into random bank accounts? So there is a CBI case that has been registered and searches are going on right now. So you've seen a bit of a dip in UCO Bank and then a recovery as well. Let's refresh those rates and look at what's happening with UCO Bank. Mayuresh Joshi also with us. He is Head of Research, Market Smith India. Mayuresh, welcome to NDTV Profit and this Women's Day party we're having here, but everyone's invited. So great to have you on as well. Tell us about what you think in terms of the recovery we've seen in the broader markets today. After 2 days, I would say about 48 hours of uncertainty, a bit of nervousness, regulatory action, etc. Is this now short covering, or are you seeing a realization coming in that perhaps it isn't that harsh?
Afternoon, Tamanna. Afternoon, Neeraj. Wishing you, the entire team at NDTV, all viewers and women all across the world, a very happy Women's Day. You guys literally rock. Coming back to the markets, I think the entire perspective about the broader markets having run up a little bit too much, that probably leaves very little room in terms of any error or omissions that the broader market stocks can deliver. So if there is any miss in terms of any earnings estimates going forward, I think the correction can be equally brutal and sharp. And therefore, I think the entire perspective in terms of the risk reward probably staying with the large caps at this juncture, as we are hitting all-time highs almost every day, probably looks to be a better scenario. Looking at various optionalities in terms of the earnings trajectory, the expectations of macro and micro developments, where key pivot levels lie as per Market Smith India, and where the overall valuations probably are positioned as well. I think large caps at the current juncture probably offer a better risk reward in our opinion. And therefore, I think selectively within the mid-cap universe, one can probably look at spaces like road companies as an example on your watch list within the entire Camcode manufacturing infra theme. Hospital ancillary stocks as an example, or even auto ancillaries very, very selectively. I think that is where our expectation is that the EPS growth might continue over the next few quarters. Financials generally have held up pretty well, specifically the large cap names at this juncture. And obviously the premise and the underlying pinnings that probably happen for this sector with the expectations of a rate cut at some time in the second half, a strong recovery that can come through, both in terms of advances, deposit growth, and therefore maintenance of NIMs coming back to normalization levels and earnings trajectory improving in FY25 is probably keeping the large cap financials in better stead compared to the smaller names at this juncture. So a little bit skewed towards large caps, Tamanna, to answer your question, and very, very selective on the product.
So which are those selective large caps? I'm going to come back and ask Mayuresh about it. But meanwhile, we have to talk a bit about, I would say, one section of stocks that are really in focus. That's the Tata Group companies. Why is that happening? Well, the short answer to that is because there's so much of a buzz about a Tata Sons IPO coming up and investors possibly trying to look at the best options to ride that wave. For the longer answer, let's go across to Harsh Saita, who's standing by. Harsh, so two questions in a sense. One, what's happening in Tata Group stocks? And second, why is Tata Chemicals seeing the most action?
Well, thanks for that, Tamanna. First, let me take it to Tata Sons itself and the basis of what's causing this buzz. It's largely because of a possible listing on Tata Sons. Let's first look at the valuation. Let's look at the numbers first. Tata Sons, roughly the valuation is pegged at 8 lakh crore. It's got 16 lakh crore worth of listed stocks in its portfolio, in its book, of which Spark Capital, which has actually sparked this this question of whether Tata Sons will list or not, pegs a 60% discount to that value as the holding company discount. After adding unlisted assets as well as adjusting for liabilities, 8 lakh crore is the market cap for Tata Sons, is what they peg it at. Could be more. Now, in terms of which companies own a stake of Tata Sons, well, you have Tata Chemicals, which owns roughly 20,000 crore worth of stock at 8 lakh crore valuation. Tata Power, Tata Motors, and Indian Hotels. Why does Tata Chemicals become important? Because look at the value of Tata Sons versus the value in terms of current market cap. The maximum value that in terms of market cap that's been extracted from Tata Sons, 59% of the market cap comes for Tata Chemicals, and that's why Tata Chemicals is the one which is in focus. If you ever want to play Tata Sons, that is why this is the best play. Now let's try and break down Tata Chemicals a little more, try and understand the nuances around valuations of Tata Chemicals itself. The core business of Tata Chemicals is valued at roughly 20,000 crore as per Motilal Oswal in its February post Q3 numbers, post earnings. Where does the value come from? Is all the way from here. Now first, soda ash and their foreign business itself is around 19,000 odd crore. If I net off the cash versus the debt, you're left with roughly 20,000 crore. Now I'm going to try and understand the value of the Tata Sons business as well as other businesses which Tata Chemicals holds. Because Tata Chemicals does not just hold Tata Sons. The market cap of Tata Chemicals is 34,000 crore. But let's try and pull up the numbers with regard to what other companies Tata Chemicals holds. So Tata Sons, of course, 20,000 crore, we spoke of that. But Titan, it owns roughly 5,300 crore worth of Titan, around 700 crore of Indian Hotels at current market price, and around 500 crore of Tata Steel as well. So these are some of the other names that Tata Chemicals owns. But outside of that, it also owns Tata Investments, Tata Motors, and Oriental Hotels. These are the valuations for that. Cumulatively, it owns roughly in its non-core portfolio, listed stocks were 27,000 crore. Outside of this, it owns Tata, including this, it owns Tata Sons as well. And at a 20% discount, this value, which is the general holdco discount, which most analysts are applying, you have a value in terms of market cap of 22,000 crore. If I add the value of the core business, it comes to a market cap of 42,500 crore compared to the current market cap of 34,000 crore. So that's the broad breakup of why Tata stocks are in focus, one, and Tata Chemicals in particular.
Thanks, Harsh. That's Well, that's in depth, all right. So while the street, and rightly so, believed that the Tata Sons upcoming IPO is the reason, when you kind of scratch the surface a bit, you realize the quantum of other investments that are there in Tata Chemicals as well. The problem, of course, is that soda ash prices have been falling in the international markets due to weak demand in the recent days. Could that act as a party pooper? That's the question. Now, Mayuresh, a fundamental question to you, and then Shivangi, before we thank you, a word on this and some ideas too. But Mayuresh, to you first, this tug of war between falling international prices versus this value that Tata Chemicals carries in its plate of other investments, what weighs higher?
At the juncture, I think value of other investments is weighing higher, Neeraj. But I think the market will at some point revert to how the core business is expected to function, because that's the base case in terms of how the functionality will probably ensure earnings growth will happen. And you're absolutely right. If you probably look at the latest quarter, soda ash, both pricing as well as volumes were significantly lower because of lower demand across geographies. So except the Kenyan market, I think the US market, the UK market, and even the Indian market has suffered both in terms of price erosion as well as volumes. Again, there was a plant shutdown, a planned one in the North American markets. But even to a large extent, I think the recovery probably seems only after a few quarters. The sodium bicarbonate business also is struggling. I think the volumes were a little bit better quarter on quarter. But again, pricing is becoming a big issue here, as well as the salt business for Tata Chemicals. So to that extent, the kind of capex plans that Tata Chemicals has lined up, they've got 500 crores to probably go through for the remainder of this year. And again, a huge capex of almost 2,700 crores spread over the next 3 years, where they're expanding capacities quite significantly, both in terms of soda ash, sodium bicarbonate, and they're doing the silica business almost 5 times where it is at this juncture. So to that extent, I think the net debt at a net level has gone up to almost 4,400 crores. And the core business is still expected to take a while before it recovers and start showing some element of earnings respite. So I think at this juncture, Neeraj, it's all about Tata Sons, the investments in other assets. But the core business is clearly struggling as we speak.
So, I mean, soda ash prices, I think, is nobody's concern. It's just a whole different kind of a situation going on there as far as Tata Chemicals is concerned, one supposes. But Shivangi, I wanted to know your take on Tata Chemicals right now, or any of the Tata stocks if you're tracking them.
So we've seen that there has been quite a lot of surge in the last 2 sessions in Tata Chemicals, round about 35% price and open interest addition over here. So, of course, the stock has seen a long consolidation, but there has been a good run-up over here as well. The entire, space is in a lot of a buzz and action. But talking about the other Tata stocks, we are also looking at Tata Consumer, which is looking quite attractive at these levels. And this stock is more stable comparatively and has been, holding on to its support zones. Also, we've seen that the stock has given a weekly breakout, which is indicating that it is quite sustainable at these levels as well. Now, the entire consumption space is also picking up momentum, and we are expecting this stock to move around 13-15 zones, and 1240 would be a crucial support to watch out.
Shivangi, I must ask you for your picks before I let you go. We're just about 10 minutes from market close. Anything that you would see as not a BTST, but maybe buy today, sell Monday play?
So we've talked about Bajaj Auto and HAL. These two picks are on radar for BTST trades. Looks quite positive, and the kind of price volume surge that we've seen in the last half of the session is quite remarkable for these stocks. Now, one more stock which I am looking at is SBI. Recently, we've seen that there has been a good price run-up over here. It retraced to its 23.6% retracement of the recent swing. So stock has taken a good support and now heading on to a good levels. So this is one stock on radar, and we are expecting 820 levels over here with a support of 770.
Okay, Shivangi, we'll let you go on that note. Thanks so much for taking the time out, and have a great weekend. All right, that's the view from Shivangi Sarda, and watch out for some of those ideas. Mayuresh, today a bit of a U-turn in some of the stocks which were getting badgered the last few days. I think we spoke to Suzlon and JP Chatsani kind of, at least in his comments, led us to believe that for the next 3-4 years, this change of bidding mechanism, even if it happens, doesn't impact the company one bit because the quantum of orders already given out are to the tune of 27 gigawatts. I mean, who will execute these? So in some sense, the change that we see in a Suzlon and Inox Wind, etc., does it inspire confidence, or would you want to wait on the sidelines for the time being?
No, so I'll wait out for Q4 numbers because a large part of the move, Neeraj, has taken place. And you're absolutely right. I think the quantum of orders that have probably come through, the kind of fixed asset turnover that one expects from these companies, at least in the near foreseeable future. So if you start discounting the next 2 years in terms of revenues, working at 100% capacity, I think the orders are going to suffice at the margins at which these orders have been given out. So to that extent, I think even if you roll over FY25 numbers, they're still going to look very, very strong year on year over the next couple of years. And therefore, I think the kind of earnings stability that one expects to come through will sustain for that periodicity of time. What happens thereafter is something to be seen because of the new mechanism which has probably come in. There might be some curtailment or some clawback in terms of earnings estimates if you start rolling over post 2 years as well. But I think over the next 2 years at least, numbers are safeguarded for this place.
Just another sector that has completely been sparkling today, Mayuresh, in last few sessions actually, is the metals pack. Even today, from a JSW Steel to, of course, a Tata Steel, a Hindalco, all of them showing quite a good, boost up. What do you think the reasons are fundamentally, and can this sustain?
So I think two aspects, Taman. I think what the market probably believes is some element of a huge stimulus at some point, which everybody's expecting to come through from China, and some recovery happening as far as the Chinese real estate market is concerned by the end of this fiscal. So as the rate cut scenario starts coming through for most global markets in the second half of this calendar year, there is expectations in terms of some support mechanism that the Chinese real estate market will get. Now, if that probably happens, and a combination of both these factors, with the kind of inventory levels that are across the metal chain, whether you talk about ferrous or non-ferrous, they're absolutely at low levels as we speak. So as demand starts clawing back very, very steadily as far as China is concerned and the rest of the globe as well, the metal prices on LME will start moving northwards. And as that starts happening with restocking taking place, the moment can be even sharp. Now that reflects directly in terms of how the realization aspect is played out for Indian companies as well. So higher LME prices, stable volumes, at least in the domestic context, stable input costs will mean that a huge element of operating leverage starts getting played through for most metal companies in this context. And therefore, the earnings scenario will start looking better over the next year as well. So to that extent, I think there are these tailwinds that the market is probably working on. How does that translate into numbers? I think Q4 will be a totally different story.
All right. Thank you so much, Mayuresh, for joining us as we wrap up this week. I would just say not too bad, all things considered. You've had sort of a lot of news flow, market spooked to some extent, but once again, the underlying resilience being seen. You've touched 22,500 levels there. Doesn't look like we're going to end there, though. A bit of weakness coming in. The recovery in the broader markets, though, is the real story. And of course, what's happening with Tata Group stocks, the recovery in GM Financials and IFL Pack also showing that kind of a story turnaround, where the fears of too much regulatory action seem to be receding, at least for now. Thank you so much, Mayuresh, for joining us. So we've had quite a day through the market hours on NDTV Profit, celebrating women entrepreneurs, and not just piecemeal, or not just, to talk about on one day. We've spoken to all of these wonderful experts and entrepreneurs, not just about being women in their chosen field, but also about their businesses. Listen in to what some of them said.
We started the year by being present in 300 and 50 or 375 towns and cities all across the country. And we're going to end the year by being present close to 600 towns and cities all across the country, right? So distribution in terms of access, providing access to people who can access our specialized tests and our normal tests, and providing that entire 4,000 varieties of test menu to every small part of India is definitely going to be a critical part of the strategy. So geographical expansion will certainly be a key part, but along with that, product mix, as we keep moving people to better, more advanced, specialized tests as well, when it's required by them from their healthcare perspective. I think both of these will play an important role in our strategy.
Even though sugar is trading at like 46 rupees ex mil for export, we would rather still have the ability to make ethanol rather than export sugar at this moment, because the government is very, very balanced when they come to that approach. So let's come back to the point. The reason that all of this regulation came in was because of the El Nino effect, which they thought would last for 2 years. Now already the El Nino effect is weakening. As you know, it's kind of raining all across the north of the country, a little bit also maybe in Maharashtra, Karnataka side, which in El Nino it does not happen. So El Nino is already weakening. La Nina is supposed to set in June, July at the latest. If this is happening, which is quite certain, I would say, in this case, the crop production will again be up and everything will be back on track. We will have enough sugar for domestic consumption, we will have enough sugarcane for ethanol blending, and we might even still have something left over to export.
So today I can say, and the blue collar, we have around 30% women. And that's been something really inspiring. And we want to have at least 45% women as we go forward. And my key, thing, if I say, and when I hang my boots, I would say that, if I've done my work well, is where, it becomes an equal well spun in all ways, diverse well spun in all ways. So I think that's what is very, very important to me. So whether it's in the blue collar associates or working at the factory level or at the white collar or even the leadership, I think is where I really feel we can have more women.
There's a bit of a buzz in the NDTV Profit newsroom, I must say, as the markets are shutting shop. Where the markets are flat, as flat can be, the newsroom is not. Just a quick mention of the heat map and show you while it's ending flat, a number of stocks which have made some serious moves. So at the end, at the losing side, you have Mahindra & Mahindra, of course. And then, Tamanna, because of a change in GRMs.
Yes.
I think RIL and BPCL.
So the Singapore GRMs have come down. Crude prices are slated to go up. That's impacting here. The story really on the top. Tata all the way. Tata Consumer jumped up now. Tata Steel, Tata Motors again up about 2%. TCS as well. In fact, if you look at the entire Tata pack, and the buzz is because of Tata Sons IPO coming up, you've seen that completely shine. We should just pull up Tata Chemicals also while we are at it. Tata Chemicals, Tata Tele, all of them, Rallis, all of them have had a great day. The other spectacular story of the day, Neeraj, I would suppose, is IIFL and JM Financial.
And Inox Wind and Network 18.
Completely. Everything that was down is back up. And that's telling you that the market beyond a point is buying on dips and completely. Even a JM Financial, is not like the regulatory overhang is over for any of these companies. What was true 2 days ago is even true now. But yet you're seeing the turnaround. I just want to see how Mahanagar Gas closed while we're at it, because there was again a concern about prices being stifled because of policy decision. It recovered a bit, but it's not done too badly. Closed about a 1.5% down. But the focus today, since we're celebrating Women's Day on NDTV Profit.
You want to come this side? Let me stand there and wish everybody. You want to do that?
I think we can all wish. Come on, guys. We want to focus and show the women power in the NDTV newsroom. Some of them are familiar faces that you see on screen every day. Some of them are those who work behind the screen to really,
power the product that you see. So here, at least at NDTV Profit, the fact that we have women representation is not piecemeal. Don't feel
so
left
before
out,
I get
Neeraj.
out of the screen,
come on.
before I get out of the screen, to all you wonderful women.
Come ahead. So our producers are here, our reporters are here, the people who work in the PCR, in the graphics team, on the back end, all of them here. And all of us all together, Neeraj, you can come and stand with us. No problem. Wishing.
I'm a very minor minority today, so I'll get out of the screen and let the women grab the screen as they should. But to all of you, thank you so much and a very happy Women's Day.
Very happy Women's Day from all of us. Thank you so much for watching. Happy Women's Day!
Co-presented by Patanjali Honey, world's best Patanjali Honey, 100% proven on more than 100 parameters of purity.
Hello. Good morning, ma'am. I'm speaking from XYZ company. Are you looking for a job or a job change? Have you been receiving unwanted calls from spam numbers? Are you tired of being offered new jobs, insurance schemes, or free health checkups? Well, today we will look at an interesting survey report by local circles on pesky calls that received 60,000 responses. Most unwanted calls are related to financial services, 54%, and real estate, 22%. In fact, the report has taken names. 40% mobile subscribers have identified Bajaj Finance as a top offender, HDFC Group as the second biggest pesky caller. The report reveals that 60% of people received 3 or more spam calls on an average day every day, and 92% of people registered on the Do Not Disturb list still get pesky calls. So is being listed on DND working? Clearly not. But the report also recorded a minute relief as per which 6% people don't get any such phone calls. This relief comes after the TRAI directive to banks, insurance companies and other commercial entities. TRAI is the Telecom Regulatory Authority of India. In fact, the Department of Consumer Affairs has constituted a committee comprising members of different regulatory authorities, telemarketing companies, and cellular industry to draft the guidelines to address the issue of pesky calls. So yes, pesky calls are still a worry, but there is a little relief too. Can you ignore them though? Toll-free numbers are identifiable, so institutions have found a new way. According to the report, calls from different mobile phone numbers that seem to belong to companies or brands have risen from 29% in February 2023 to 36% now. And look at the change in trend. Real estate selling has risen from 18% last year to 22% now. However, job offerings have decreased from 10% to 4%, and in the case of those selling financial services, the calls have slipped from 60% to 54%. So the bigger question is, will the nuisance of pesky calls end anytime soon? There should be a system where pesky callers are blacklisted at the Aadhaar level, so they have the risk of not getting a new SIM. Also, brands on whose behalf the contracted callers are calling also need to be held accountable by the Department of Consumer Affairs, so brands institute the right consumer outreach practices both with employees as well as third-party contractors. For more such updates, stay tuned to NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with.
go. It's fantastic. We're on top of the world. We're leading the change, and we have the support of all our colleagues.
Talented, supportive,
happy. They empower men and women combined in the newsroom.
They are driving it, not just changing it.
smart, fun yet intellectual,
Radiating confidence.
Vibrant, effervescent, and stunningly intelligent.
innovative, hardworking.
Multitasking, versatile, enigmatic, and very cheerful.
Tenacious, humble, and wanting to get to the depth.
They are much more talented. They are much more creative and innovative. And they are bringing a sanity in overall discourse that we are currently creating and consuming.
Hello and welcome back to NDTV Profit, where we bring you a Women's Day special. I'm your host Mihika, and with me is Mahima. So now, internationally, Women's Day continues to serve as a forum to bring attention to the larger discourse of inclusivity, gender parity, and rights talk. On the occasion of Women's Day, we bring you the stories of women from different walks of life, stories of dedication, perseverance, commitment, all this while breaking barriers. Take financial independence, for example. Women are just not concentrated to fixed deposits and gold, they are diversifying, and how. We got to speak to a group of retail investors on how they manage their investments. Let's take a look.
It's always said, no, that do not put all your eggs in one basket. You should always diversify. So what is your strategy when it comes to investing in stocks and mutual fund, and how do you diversify your portfolio?
So honestly, I've been fortunate enough to be in the BFSI sector itself. So I mean, I work with a wealth management company. So that gives me a lot of knowledge as to what's happening in the market. So that really sort of made me much aware with the market. Honestly, I was very intimidated with the market initially when I thought of investing, because traditionally my parents also always thought that if you have surplus money, keep it in FD. But I mean, because I'm in this industry and I've sort of gained knowledge as to there are various securities that you can invest. I obviously chose mutual fund because for me investments are currently long term, and like I said, I'm intimidated with the market, so I started with mutual funds. But while I've been investing for the last 5-6 years, I've understood that direct equity is also not that bad. So as we speak today, I'm not really investing in direct equity, but I mean, I would sort of like to take that leap of faith also of investing in direct equity.
And so there was this interesting data, I mean, I would say quite sad data. The data is there have been declining trend when it comes to opening of demat account with respect to women. So Anmol, my question to you is, what should one do to increase the financial literacy amongst women?
First is we need to target educational courses and workshops where we can have these discussions about what exactly is mutual funds, how has your experience been. Especially discussion among peers is most helpful. Not only it guides you, it also helps you understand their previous experience as what has their been journey, and it kind of leads you. You don't have to start from step 0. You can start at step 1 because of the right guidance. So those are very important. Even for me, I started investing in mutual funds because of recommendation from my peer. They told me how it works. Especially these conversations, I feel, don't usually happen among women a lot.
Right.
Men usually will talk about, okay, we're investing in stocks, this has been the result. But in women, we have to start talking about it.
Mahima this side. So my question to you is that you manage your family portfolio as well as your portfolio. How important do you think is a woman's participation in terms of family financial decisions?
Oh, it's very, very important that women need to be a part of the decision-making process as far as finances are concerned, because we all know that women are mostly managing the day-to-day affairs of the household. And a woman who is financially literate, who has a sound relationship with money, the whole financial health of the household will really depend on that. So that becomes, somebody who's aware, she will know. But, it's not just, you don't have to be frugal only. Like housewives are told they have to be frugal, they have to save. Where do you put your savings? If your savings are lying in the locker, they're useless. So if you've saved that money, you've got a corpus, you have to invest it wisely. Be prudent with your money. Make your money earn for you. Money breeds money. We all know that. Another very important factor why women should be important part in the decision making is because we are setting the right precedent for the future generations. Because if my child is to take a huge student loan today, I mean, the rest of her life or his life will be incurred in paying off that debt, and then for his expenses, he will take on a credit card, and he will get caught in that vicious circle of paying, borrowing, and paying off, and poor thing will never be. So if you have a healthy relationship with your money, you will teach that forward, and probably we'll serve the society better.
Well, those were our retail investors, but moving on, while women retail investors might seem skeptical about the stock market, many of them are engaged in goal-based investing, whereas 44% prioritize retirement planning while 35% allocate the funds for their children's education. 39% start investing in their 20s and 41% in their 30s. My colleague Tanvi Dhote guides you through the process of mutual fund investing.
Financial independence. These two words can fulfill the dreams of so many women across the globe. And one of the easiest ways to achieve financial independence is by investing in mutual funds. This Women's Day, why not begin our journey towards financial independence? Without further ado, let's get started. Step 1. Figure out your financial goals, whether you wish to buy a house by the time you're 38 or wish to create a retirement fund. Step 2. Understanding your risk appetite. Investment advisors usually suggest people who are 35 years or younger to invest in more equity-based mutual funds and less in debt funds or fixed income sources, since this age group has lesser liabilities and a higher risk appetite. As you grow older, or if you're in your late 50s, then it's better to stick to more debt funds and fixed deposit strategies and reduce equity in your portfolio. Step 3. Offline or online investing. You need to choose whether you plan to invest online or offline. You can find plenty of platforms like Grow or Zerodha, or even mutual fund house platforms that will help you invest in mere minutes. Or you can reach out to a SEBI registered investment advisor offline. Both online and offline require you to submit scanned documents like your PAN card and Aadhaar card along with your bank statements. Next, you need to link your bank account to the platform. Initiate the investment process by selecting a mutual fund, transfer the amount you wish to invest as a one-time payment or SIP, and then keep track of your investments online. As you gain more understanding about mutual funds, you can make changes to your portfolio. Do make a note that investing offline is time-consuming, since offline investing will require you to fill out physical forms each time you invest in a new mutual fund or change any other details. There you go, you are now all set to start your mutual fund investment journey. And if you still have some doubts running in your head, don't forget to send us your queries to the Mutual Fund Show only on NDTV Profit.
Well, that was a short summary on how you could, invest in mutual funds. But next, the spotlight is on the gender gap between male and female fund managers in the industry. Did you know out of 473 fund managers, only 42 are women managing funds? Let's take a look.
The fund management industry has plenty of opportunities. Despite that, women fund managers are drastically underrepresented. The latest findings of Morningstar report shows that of the 473 fund managers, 42 are women who are managing funds either as primary or secondary managers. While there has been a steady increase in the number of fund managers as compared with 428 seen last year, the number of women fund managers has been static. Given that there was no increase in the number of female fund managers since last year, the representation marginally declined to 8.88% from 9.18%. The total open and closed-end assets managed or co-managed by female fund managers was approximately Rs 6.66 lakh crore or 12.63% of the total mutual fund assets. The assets managed by women saw a sharp uptick compared with last year when women managed about Rs 4.44 lakh crore, a growth of 50%. Women in finance are no longer an oddity, with some fund management companies even led by women.
However, the percentage of women fund managers in the country still remain exciting. We spoke to a few female fund managers at top AMCs, with some of them having 25 plus years of experience in the field of finance, and understand their growth and challenges.
When I started off doing, there were people who were joining and gradually getting into it, but wherever they had family support, the number of girls who were coming were much lesser. But today it is almost every family, at least to start with, people target to get into career, have that thought process.
The journey has been quite challenging as well as quite a learning perspective, and I guess on the curve of learning I am still there and learning every day. That's the best part of my field, I can say. The problem of representation of females being less is not particular just to the finance industry. It's overall, because the overall pie itself, right? The labor force participation, if you look at females, has been quite low in India. I mean, it's even lower than what our neighboring countries have. So the problem is everywhere. But as you mentioned, yes, in our field of finance, it has been even much more. Maybe one reason would have been the lack of confidence.
Gender or pay scale has not been an issue anymore, and opportunities have also been the same and equal for all in this highly competitive industry. So what could lead to more participation and representation of women in the fund management industry?
Organizations start prioritizing the fact, look at women diversity, and not only for namesake, because women diversity, gender diversity is a big fad today.
Better flexible hours of working, work from home if possible on few days, a hybrid model, and the proximity to the workplace. These are some things which can reduce the burden on females, and the participation rate would increase.
Well, 42 out of 437 is quite sad, but let's hope that this number increases every year. Well, on that note, it's time for a break, but stay tuned. We will be right back with more on the other side.
Electoral bonds have been deemed unconstitutional by the 5-judge Supreme Court bench headed by Chief Justice D.Y. Chandrachud. They were first introduced in 2018. An electoral bond is a means to fund a political party in India while maintaining anonymity. These bonds are available in multiple denominations ranging from 1,000 rupees to 1 crore in specified branches of the State Bank of India. This was introduced in the system to maintain transparency in political funding via a banking network and reduce black money. But on the flip side of this intention, questions have been raised on the basis of an important fundamental right of democracy. That's right to information. Is it constitutionally right to keep the source of political funding discreet? Why shouldn't the public know who is funding how much money to different political parties? As per the findings of Political Party Watch, a program under Association for Democratic Reforms, 28,030 electoral bonds worth Rs 16,618 crore were sold between March 2018 and January 2024. The Supreme Court's unanimous decision follows a petition filed in September 2017 challenging the Finance Act 2017, which introduced the electoral bond scheme for the purpose of electoral funding. The Act has also removed the previous limit of 7.5% of the company's average 3-year net profit for political donations. The Supreme Court has asked the following corrective actions to be taken immediately. State Bank of India will need to stop issuing electoral bonds immediately. SBI will have to submit the details of the purchase of electoral bonds and their encashment by political parties since the interim order of the court, which is April 12, 2019, to the Election Commission.
Welcome back. Let's now understand gender budgeting, which presents an entry point for integrating a gender perspective in all stages of the public financial management. Pallavi Nahata joins us to explain. Pallavi?
A budget, as we know, is one of the most comprehensive documents that the government puts out, and that helps lay out what the next fiscal is going to look like in terms of the government's priorities and where it intends to spend. Likewise, a gender budget is concerned with gender responsive formulation of policies, schemes, resource allocation, their execution, audit and impact assessment. Now, gender budgets are not separate budgets for women. Let's be clear about that. They're just attempts to disaggregate how much is being spent by the government according to differential impact on gender, and it can be a very powerful tool to bridge the gender gap. The more important question, of course, is where India stands in terms of gender budgeting. Yes, the union government does put out a gender budget. In the FY25 interim budget, the gender budget increased by about 38.5%. Now, while that appears to be an extremely impressive number, just for some perspective, the share of the gender budget in the total union budget has only inched up to about 6.5%. It was at about 5% before this.
Moving on, the spotlight is on Shramik Mahila Vikas Sangha, which is a trust which operates several food joints across different semi-urban areas in Mumbai. Let's take a look on how the organization continues to empower women of over 3 decades now.
How often have you come across a food joint which is completely run by women? Rarely, right? But here I am at this amazing food joint which is run by not 1 or 2 women, but hundreds of women, paving way for Atmanirbhar Bharat.
Shramik Mahila Vikas Sangh, a trust which operates several food joints and provides affordable food services across different semi-urban areas near Mumbai. The trust has been empowering hundreds of women over the last decades. So let's hear some interesting tales from the women who work here and get some interesting insights.
मेरा नाम जयश्री सामंत है, जयश्री उदय सामंत है। मैं अब ये संस्था से लास्ट 35 ईयर्स से हम लोग काम कर रहे हैं। रसोई के अंदर जो औरतें हैं उनको उनके पाँव के ऊपर उनको खड़ा करना, क्योंकि ये जो संस्था है ये संस्था के पहले यहाँ पे पापड़ बेले जाते थे, लेकिन ये पापड़ का ये बंद होने, रोज़गार बंद होने के बाद उनके हाथ में काम भी नहीं था। जो औरत सामाजिक, आर्थिक, शारीरिक दृष्टि से दुर्बल घटक में हो, ऐसे ही औरत लोग यहाँ पे आ सकते हैं। साफ़ सुथरा खाना, अच्छा खाना, सही दाम, और इस कम्युनिटी छोटा से छोटा आदमी भी अपने इधर आके खाना खा सके, ऐसे सोच के हम लोगों ने शुरू किया था, और उसी तरह से उस टाइम के दाम थे।
Shramik Mahila Vikas Sangh also provides food services to several schools and hospitals in Vasai and other suburbs such as Nalasopara. The trust is a consequence of the vision of Indumati Barve, who, with 7 other co-founders, brought this Sangh into picture in 1991. Workers still idolize her principles, for whom her love, care, support and skills remain unforgettable.
लॉकडाउन में मैं स्कूल में काम कर रही थी ना, तो मेरा वो जॉब छूट गया, तो मैंने बोला मुझे कुछ तो काम चाहिए, तो मैडम ने इधर मुझे सुपरवाइज़र का काम के लिए बुलाया। सैलरी तो अलग रहती है, हमारा बोनस भी मिलता है, और जो ऑर्डर रहता है ना उसका पैसा भी अलग से मिलता है, और हमारा PF भी कट होता है। और हमारे बच्चे जो पढ़ रहे कॉलेज, जो 11वीं 12वीं वो 10th 11 में जाते हैं ना, उनके लिए मनी पॉकेट अलग से देते हैं, और जो यूनिफॉर्म का पैसा भी देते हैं, हम लोग बुक्स भी खरीद के देते हैं।
अभी हम लोग ऐसा बाहर जाके इतना कॉन्फिडेंस आया है, इतना कि इधर बाहर हम लोग 200-300 लोग का मैं अकेली भी कर सकती हूँ, और मेरे आदमी के साथ इधर आके ही आ गया इतना कॉन्फिडेंस, ऐसा पहला नहीं था किधर। मैं अभी खुद के पाँव पे खड़ी हूँ ना, तो मेरे को बहुत गर्व है उसका, और मैं 4 औरत को भी बोलती हूँ कि इधर आके आओ और देखो कैसा लगता है, बहुत अच्छा है अभी।
It's not just about running a business or ensuring employment for women. The Shramik Mahila Vikas Sangh does much more by instilling strength, confidence and resilience in the hearts of women and empower them in its truest sense.
Well, if that's not women empowerment, then what is, right, Mihika? Well, on that note, that's all we have on the show. Stay tuned for more news and updates.
The farmers' protests have been making headlines. Indian farmers have demands such as legal guarantee on MSP, pension and debt waiver, no hike in electricity tariff, reinstatement of Land Acquisition Act 2013 and more. But while the protest becomes important from the point of view of elections and politics, it's not just India that has its farmers agitated. The streets of Spain, Belgium, Hungary and Poland have been roaring with protests by farmers too. Around 1,400 tractors took part in a protest in Poland and roads were blocked across the country. What do they have a problem with? Rising production costs, falling sale price, stringent regulations. They say that the European Union is not doing enough to stop cheap imports from Ukraine, which is affecting the demand for local produce. They are also not happy with the European Union's Green Deal that's designed to zero out pollution by 2050 because it limits the use of pesticides, which in turn affects yield. In Greece, farmers have demanded lower electricity prices, tax-free diesel and subsidized animal feed. In France, farmers have been fighting for improved pay and protection from foreign competition. The French government offered 400 million euros, that's $436 million, in various measures in reciprocation to their problems over low earnings, heavy regulation, and unfair competition from abroad. In Germany, farmers are against the government's decision to phase out tax concessions on agricultural diesel. Their argument is that this will lead them to bankruptcy. In Romania, the protests stemmed from anger about low prices for produce, rising costs, imports of cheap foodstuffs, and constraints imposed by the European Union's drive to fight climate change. In the United Kingdom, farmers are struggling to keep up with weather changes and war-related supply chain disruptions. The whole of Europe seems to have the agricultural sector in pain as climate change becomes a central focus and production prices increase. And no, it doesn't end there. As per Down to Earth, since 2023, farmers have protested in 67% of countries in South America region for a variety of reasons, such as wanting better export exchange rates and reduced taxes amid an extended economic downturn and Argentina's devastating drought, which have severely damaged crops and agricultural output. And look at this data. Farmers' protests have happened in 12 countries in Africa, 11 countries in Asia, 24 countries in Europe, 8 countries in North and Central America, and 2 countries in Oceania in just a year's time. So let's boil down all this worry to 5 main reasons, India included. Pricing of produce, delayed compensation or subsidy, unfair effects of climate change, policies and regulations, import and export duties, and supply chain discrepancies.
Market gains for the 4th straight week as benchmarks beat broader markets. Nifty media top sectoral laggard for 4th week in a row. Mutual funds to release stress test results by March 15th. CBI searches 67 more locations across Rajasthan and Maharashtra in the UCO Bank IMPS glitch case, seizes 130 documents related to UCO Bank and IDFC among other things. Association for Democratic Reforms files a plea for contempt of court against SBI after it failed to meet the top court's deadline to submit the list of donors through electoral bonds.
One honor. go. It's fantastic. We're on top of the world. We're leading the change, and we have the support of all our colleagues.
Talented, supportive, happy. They empower men and women combined in the newsroom.
They are driving it, not just changing it.
Smart,
Fun yet intellectual.
radiating confidence.
Vibrant, effervescent, and stunningly intelligent.
Innovative, hardworking.
Multitasking, versatile, enigmatic, and very cheerful.
Tenacious, humble, and wanting to get to the depth.
They are much more talented. They are much more creative and innovative. And they are bringing a sanity in overall discourse that we are currently creating and consuming.
Hello and welcome. You're watching The Reporter. I'm Smriti Chaudhary. Let's take a quick look at the market action that happened today. Broader markets outperformed the benchmarks, which traded in a narrow range despite hitting all-time high during the session. Harsh Saita is here to tell us more about that.
Well, another day where markets started at record highs but tapered thereafter. We've gained around 1/10% or thereabouts. Slight positive bias is where we've closed with regard to the Nifty 50 benchmark. Broader markets seeing some bit of resilience though. We've seen broader markets decline for at least yesterday. We saw sharp cuts on the Nifty small cap, but today we've seen the Nifty mid cap as well as the small cap recover a wee bit. Around 1/5% of gains for the Nifty mid cap, around 9/10% higher for the Nifty small cap. So we've seen some bit of recovery come through. In terms of sectoral indices, let's talk about for the Nifty auto as well as the Nifty bank, which declined 1/4% each in trade today. We also saw Nifty realty declining, and Nifty energy saw 1+% decline. So Nifty energy was the top sectoral loser in trade today. But outside of that, we saw good gains. We saw the likes of the Nifty FMCG pick up pace, 1% higher almost. Nifty media was up 2.5% after yesterday's decline, 1.3% up for the Nifty metal as well. So all of those counters saw a bit of buzz. Nifty energy, not a surprise to decline or being the top sectoral decliner after GRMs seem to have contracted a wee bit, and which is what possibly was the biggest impact on the Nifty energy index. But outside of that, we've had a good week. The benchmark itself recorded a 4th straight week of gains. Broader markets, we saw that they've declined for a 2nd week in a row, so broader market seeing some bit of pain. The PSU bank index was the top sectoral gainer for the week, gained for the 2nd consecutive week, and Nifty media was the top laggard this week, with network 18, TV 18 as the top laggards. The Nifty bank gained for a 4th week in a row, largely led by Bob and PNB. So the PSU pack aiding the Nifty bank.
Thank you, Harsh, for that. We brought you exclusive news that mutual funds will soon need to conduct stress tests for mid and small cap schemes. NDTV Profit is now learning exclusively the results of the first test to be out in just a few days. Sajid Mangat is joining in to explain what this stress test will contain.
We understand from our sources that AMFI in its circular to all the AMCs has indicated that all the mutual funds which have small and mid-cap schemes will have to undertake a stress test, and the results of the stress test will have to come by the 15th of the month for the preceding month. So the starting February portfolio, the results will come on or before March 15th, and these results will have to be disclosed on the website of the schemes of the mutual fund and of AMFI, and it will be on a monthly basis that these stress tests will be undertaken.
Well, the method to calculate portfolio liquidity is going to be a critical part of the stress test, Sajid. How will mutual funds calculate that?
There is a standard format which has been arrived in consultation with SEBI and which AMFI has shared with all the mutual funds. The stress test disclosure will have columns or data with respect to the portfolio liquidity, beta of the portfolio, annualized standard deviation with respect to the index which is a benchmark for that scheme, and also data like the 12-month trailing PE and the portfolio turnover of the scheme. In addition to that, the method for testing the liquidity is a little complicated, but let me explain it in a very simple term. So if you have a portfolio of say 100 stocks, the method is to first determine how many days it will take to liquidate each and every stock, and based on that you calculate the liquidation for 25% of the portfolio and the 50% of the portfolio. As part of this liquidation process, the bottom 20% of the portfolio, which has the maximum number of days for liquidation, will not be touched upon. So the balance 80% is the portfolio, or 80 stocks. The top 80 stocks in your portfolio with respect to liquidity will be touched as a criteria for liquidation purposes, and then you have to calculate the stocks on a pro rata basis and how it is for 25% and 50% there. There is a volume methodology which also been implied here, which basically means that the mutual fund or the asset management company will have to assume that the volume that it may be able to sell on a daily basis will not be more than 10% of the volume in the market, which has been calculated as 3 months average volume for that particular stock, and you multiply it by 3 times of that. So you take 10% of that volume as the volume that you can liquidate on a daily basis till you fully liquidate the stock. And once you're fully liquidated, you are able to calculate the full number of days you need to liquidate the stock. You calculate that by 2 to get 50% portfolio liquidation, and by 4 to get 25% portfolio liquidation. So it's a pretty comprehensive criteria to look at the stress test coming of each of the portfolio. The good thing is that many of the portfolios have up to 15 to 20% of the large caps, so they are highly liquid, and so it brings in also a risk, saying that if there is a run on small and mid cap, you may see the first stocks to go out or to be sold will be the highly liquid stocks which are large cap stocks.
Well, thank you, Sajid, for that. We'll be tracking that very closely. Now, a development in electoral bonds case. The Association for Democratic Reforms has filed a plea for contempt of court against State Bank of India after the bank failed to meet the top court's deadline to submit the list of donors through electoral bonds. Varun is here to tell you about the key details. Varun, the deadline was yesterday, and we know that SBI has sought more time on this. What's the latest?
Yeah, hi Smriti, thanks. So yeah, the Association for Democratic Reforms has filed an application seeking to initiate contempt proceedings against the State Bank of India, alleging that the public sector bank has willfully disobeyed the top court's order in not furnishing the electoral bonds data to the ECI by March 6. As we all know, last month the Apex Court had declared the electoral bond scheme unconstitutional and had directed the State Bank of India to furnish all the information pertaining to these electoral bonds to the ECI by March 6, which in turn was supposed to make the information public by March 13. However, the State Bank of India has filed a plea in the Supreme Court asking for a deadline extension till June 30. Now, ADR's plea states that the SBI has deliberately sought an extension till June 30 so that the data is not disclosed to the public before the Lok Sabha elections of 2024. It is alleged that SBI has a record of a unique number for each electoral bond along with the KYC details of each of its purchaser. Thus, the plea states that it is incomprehensible that the state bank does not have the recorded information easily within its database. Citing certain tech experts, the plea alleges that since each electoral bond has a unique number, a simple query on the database can generate a report in a particular format that does not require any manual verification. Lastly, alleging contempt on SBI's part, the plea states that this defiant approach of the public sector bank towards the citizens' right to know about huge sums of money that were received by that were received through electoral bonds by these parties in a non-transparent and unaccountable manner is extremely reprehensible.
Well, thank you, Varun, for that. We have another important update coming in on the Zee versus Bloomberg case. The Delhi High Court has now reserved its order on Bloomberg's appeal against a trial court directive. Charu is joining in to tell us more about that. Charu, what's the case about and what's the latest update on this?
On March 1st, there was a directive to take down an order. There was a directive to take down an article that was published on Bloomberg's website. The article said that Security and Exchange Board of India has found accounting irregularities worth $240 million on part of Zee Entertainment. Now, what has happened is that trial court found it to be defamatory and passed an ex parte order. Ex parte order is an order where the other party is not given an opportunity to be heard, and that is why Bloomberg, aggrieved by that order, approached the Delhi High Court yesterday, and now the matter was heard for the first time today. They said that how can an order be passed without giving them any notice, without giving them a chance to be heard. However, Zee said that firstly, the information was not a publicly accessible information. It was an allegation of a sort, and then with a headline which said that a finding of such an irregularity has been undiscovered, kind of defames the organization like Zee, which will be aggrieved for a very long time because of a report like that. Now, the Delhi High Court heard both the parties and has asked for more time to give its ruling, and that is why it has reserved its order for now.
Well, thanks, Charu, for that. We have another update from the Supreme Court. The Supreme Court today dismissed Make My Trip's appeal alleging an infringement of its trademark by Google on the Tech Measures ads program. Now, Make My Trip had sought an injunction against Google for using its trademark Make My Trip in displaying and promoting the business of its rival counterpart, Booking.com. The court ruled that Booking.com is not using the trademark in this instance and that customers who want to book tickets on Make My Trip won't confuse it with Booking.com. It observed that this is not a case for trademark infringement as Booking.com is not passing off their product as Make My Trip's product and that there is no case for deception at all. However, stay on with us. We have more news on the courts. The Supreme Court has dismissed a plea by the Jalan Kalrock Consortium against an NCLT order that allowed the sale of 3 Jet Airways planes to a Malta-based aviation company. The top court agreed with the tribunal's opinion and said that interference with the order is not warranted as the sale would help revive the airline. To give you a little context, on this, in December, the NCLAT dismissed an appeal by the Jalan Kalrock Consortium, which, as you know, was the successful bidder for Jet Airways and permitted the sale of 3 aircrafts. The planes were expected to be sold for 400 crore rupees to the Ace Aviation, which pushed for a quick resolution because delays in the sale could render the planes less usable over time. Now, another update. Now, this one's about the RBI's new card network rule, which might spell new opportunities for RuPay. Mimansa joins in with more details on this.
Yeah, Smriti. So the RBI circular from yesterday, where the regulator said that the customers will now have a choice to opt for the credit card networks when they're applying for a new credit card or renewing their credit card. So it is going to push the homegrown RuPay card network. The rule applies to 11 banks as they have more than 10 lakh active credit cards, going by the latest RBI data for January. So we spoke to some leading banks and experts for the story, and they said that the RuPay credit cards can be used for overseas transactions at point of sale devices, ATM and e-commerce platforms, where RuPay has partnered with international card networks. If we were to name a few, there are Union Pay, Diners Club International, Discover Financial Services, JCB and Pulse. So another thing about RuPay is that customers can make UPI payments as well, which gives an added push for RuPay credit card holders to take on to switch to RuPay credit cards. This is also true because 7 countries so far have adopted UPI internationally. Having said that, RuPay will have to partner with high-end brands to offer competitive benefits like the ones that Visa and MasterCard have been offering. So that will ensure a considerable shift from Visa and MasterCard. For banks specifically, compliance to RBI circular would mean added costs and some implementational challenges until these changes come into effect on September 6th. But the bankers that we spoke to told us that they would need some clarifications from the RBI as to whether all the variants of the credit cards that they offer need to be made available on multiple card networks, and what happens to the exclusive and existing business arrangements that the banks have with some specific card networks.
All right. Thank you, Mimansa, for that. Now let's talk about gender budgeting. Now, a budget is one of the most comprehensive documents of the government's social and economic plans and priorities. This presentation this presents an entry point for integrating gender perspective in all stages of the public financial management. Pallavi Nahata joins in to explain more on this.
A budget, as we know, is one of the most comprehensive documents that the government puts out, and that helps lay out what the next fiscal is going to look like in terms of the government's priorities and where it intends to spend. Likewise, a gender budget is concerned with gender responsive formulation of policies, schemes, resource allocation, their execution, audit and impact assessment. Now, gender budgets are not separate budgets for women. Let's be clear about that. They're just attempts to disaggregate how much is being spent by the government according to differential impact on gender, and it can be a very powerful tool to bridge the gender gap. The more important question, of course, is where India stands in terms of gender budgeting. Yes, the union government does put out a gender budget. In the FY25 interim budget, the gender budget increased by about 38.5%. Now, while that appears to be an extremely impressive number, just for some perspective, the share of the gender budget in the total union budget has only inched up to about 6.5%. It was at about 5% before this.
Thanks, Pallavi, for that. It's time for a short break, but we'll bring you more updates on the other side. Stay tuned.
Hello and welcome to NDTV Profit. Today we will talk about tattoos and the worth of this market. The history of tattoos in India can be traced back to prehistoric times when tribal people were captivated by drawings on stone or wood walls. Their attempt to replicate these figures through needles gave birth to the practice of inking skin. Over the course of time, tattoos were embraced by tribals as a mark of bravery, war, religious beliefs, customs, marital status, protection from the male gaze, and so on and so forth. Today, in 2024, tattoos have become a means to express thoughts, individuality, personal experiences, and sentimental designs. The industry is estimated to generate over 20,000 crore rupees per year. What is driving this growth? One of the key drivers behind the growth of the tattoo market is the rising demand for customized and unique designs. Improved technological equipment for making advanced, safer, and painless tattoos have boosted the market. The laser technology for removal or modification of tattoos have also added to the spurge. Increased exposure and promotion of tattoo designs on social media have led to widespread influence of tattoo culture on the youth. Take a look at these figures now. As per Fortune Business Insights, the global tattoo market is projected to grow from $2.04 billion in 2023 to $3.93 billion by 2030 at a compound annual growth rate of 9.87%. This is a sharp rise from 3.8% year-on-year growth between 2017 and 2022. As per Custom Market Insights, the diamond jewelry market is expected to grow at a compound annual growth rate of 5.5% by 2032, while the luxury jewelry market at a rate of 8.9%, but the tattoo market is estimated to grow at 9.5%. Is the tattoo business lucrative? According to an article by Opportunity India, tattoo kits are now easily available for less than Rs 10,000, while high-end kits range from rupees 20 to 35,000. Now, in a city like Mumbai, the average cost per inch is rupees 2,000 to 2,500. In Delhi and Bangalore, the cost per inch is between rupees 1,000 to 2,000, and in Goa, it is about rupees 500.
Welcome back. You're watching The Reporter. Let's talk about Bharti Airtel. Now, Singtel, which is Singapore Telecommunications, sold 0.8% stake in Bharti Airtel today. Now, the stake was 4.9 crore shares were offered for sale at a price of 1,193 apiece. In total, the worth of this stake was over 5,849 crores or thereabouts. Now, this stake was sold by Singtel through their subsidiary Pastel Limited that held about 10.4% stake in the company as of December 2023. We saw the shares closing 1% higher after this transaction in the markets today. But let's talk about Flipkart now. Flipkart is planning to foray into quick commerce. Currently, only Zepto, Instamart and Blinkit are part of the 10-minute delivery race, but Flipkart is looking to deliver a wider range of products at a faster speed. Rishabh joins in with more details on this.
Right, so we have an update coming in from India's burgeoning quick commerce space. E-commerce major Flipkart is now entering the race to deliver within 10 minutes. Now, what's very interesting is that it will be taking on the likes of Zepto, Zomato's Blinkit and Swiggy Instamart in what is proving to be a very hot sector in India. Though none of these companies are profitable yet, but we are seeing them expanding a lot of selection within quick commerce. So what earlier was just essentials in terms of groceries will now sort of expand to electronics, it will expand to fashion, it will expand to many of these more categories. Now, while we don't have a lot of details, Flipkart denied to comment on any specific timelines on whether there will be a sub-brand, what cities it will launch in. But what's very interesting to note is that in February, it launched something it launched same-day delivery, which is and that was across 20 cities. During the pandemic also, it launched something called Flipkart Quick, which guaranteed 90-minute delivery, but that was discontinued. So what will be interesting to see is whether Flipkart Quick will be revived or whether it will be a newer service that will be a part of its quick commerce expansion.
Thanks, Rishabh, for that. We'll definitely be tracking that and see how that plays out. But let's talk about coffee, chocolate and cookies that hit a sweet spot in the dull FMCG market. Out of the 90-odd categories, about half of them, like cooking oil, rice and salt, have seen a decline in purchases. But even so, instant coffee became a staple as consumers stocked up on their favorite brews. We are joined by Sesha Sen for more on this. Sesha, what does this entail?
Right. So the average Indian household clearly seems to be spending more on what they want rather than what they need. So a recent Kantar data confirms this shift in consumption. Like you mentioned, out of the 90-odd categories that the market researcher tracks, about half of them, including basics like cooking oil, rice, salt, and even washing powder, have seen a decline in purchases. However, instant coffee, chocolates and cookies have emerged as popular choice in the annual shopping basket. Now, within non-food categories, also insecticides, fabric softeners and even washing liquids attracted new buyers. Now, these are the only 6 categories that grew much faster than the FMCG consumption, which remained stagnant in 2023. It also grew faster than the household population growth of 9 million and even faster than the FMCG spend growth, which was at about 8.5%. It remains to be seen how this transition takes shape going ahead. But one thing is clear, that the growth in these categories combined will have a negligible impact on the overall FMCG. The sector is poised for subdued growth, according to Kantar, at least till the September quarter. And this is primarily due to the uncertain outlook for the agriculture sector. The upcoming general election too is likely to have little impact on consumption as seen in the past.
Well, thanks, Sesha, for that. Let's talk about the Defence Minister Rajnath Singh, who reasserted that the NDA will cross the 400 mark and BJP will cross the 370 mark. Rajnath Singh, while speaking to NDTV, said, and I quote, "We have already crossed 370. Now, this is an apparent reference to the Narendra Modi government's 2019 move to remove Jammu and Kashmir's special status under Article 370 of the Constitution. Let's listen in.
NDA 400 पार,
NDA 400 पार में थोड़ा ये पता करना है हमको,
बीजेपी 370 पार,
बीजेपी 370 पार, 273 और 370 में फर्क क्या है?
370 को तो अच्छी तरह समझते होंगे आप। 370 पार कर गए हैं।
Well, that's all that we have on this edition of Reporters. Thank you so much, viewers, for tuning in. And from the team here, a happy Women's Day to all of you.
Amul has completed 50 years in India. PM Modi will attend the Silver Jubilee celebrations of the Gujarat Cooperative Milk Marketing Federation, the owner of Amul. At one point of time or the other, we've all grown up with Amul butter or milk for sure. The famous Amul girl created in 1967 is family. We all recognize her. But as the brand grows 50 years old today, do you remember the full form of Amul? It is Anand Milk Union Limited. From producing 250 liters of milk per day since the time Amul was formed back in the mid-90s to today, where Amul has over 36 lakh dairy farmers and produces nearly 300 lakh liters of milk per day, the brand has had a long journey. The story goes way back in time. In the 1940s, dairy farmers were worried. The middlemen exploited their ways of profitable income and a poor milk production system made their living difficult. Tribhuvan Das Patel and Verghese Kurian identified these issues and helped in the formation of the first milk union called Kaira District Cooperative Milk Producers Union in 1946. The cooperative model gave farmers direct ownership of the dairy industry. The union helped them process, market and sell milk and milk products without the interruption of intermediaries. And it was in 1955 that this union chose a brand name for itself called Amul, which means priceless in Sanskrit. And then in 1973, Amul Dairy along with 16 other district cooperatives formed the Gujarat Cooperative Milk Marketing Federation, which has now completed 50 years in India. Amul also started India's white revolution that made our country the world's biggest maker of milk and milk products. The brand follows an umbrella marketing technique which has helped GCMMF prevent association clashes and keep an open door for the patrons to coordinate in creating items. As per a report by Statista, the annual sales turnover of Amul from 2011 to 2023 has consistently risen, recording about 55,000 crore rupees.
एनडीटीवी के प्लेटफॉर्म पर आज रक्षा मंत्री की स्पीच बहुत ही लेयर्ड है। जो आत्मविश्वास और फ्यूचर का खाका इसमें से निकल के आता है, उसके बारे में ये कहना गलत नहीं होगा कि ये डिफेंस समिट कम है और ऑफेंस समिट ज़्यादा है। बिल्कुल। आपके भाषण में लोकतंत्र, सोशल कंसेंसस, विपक्ष, बहुत सारी बातें हैं और चुनाव का वक्त है तो जाहिर है कि हम उस पर फ़ायदा उठाएंगे और आपसे बात करना चाहेंगे। लेकिन मेरा पहला सवाल इस बात से जुड़ा हुआ है कि रक्षा उत्पादन के मामले में भारत की जो अब एम्बिशियस प्लानिंग है, वो मौका इसलिए भी अच्छा है कि चीन का बाकी माल तो सस्ता खरीदने में लोगों की रुचि रहती है, लेकिन रक्षा सामग्री चीन से कोई नहीं खरीदेगा। और दूसरा एक बहुत ही बड़ा टर्निंग पॉइंट है भारत की रक्षा नीति में, वो ये है कि लैंड सेंट्रिक के बजाय सी सेंट्रिक यानी नेवी की भूमिका बढ़ी और इंडो पैसिफिक में भारत का रोल, इस पर मैं आपसे कुछ सुनना चाहूँगा।
सी सेंट्रिक एंड एरोसेंट्रिक दोनों, तो उसमें भारत की क्या पूछा आपने?
कि भारत की भूमिका इंडो पैसिफिक स्ट्रेटजी को लेके ग्लोबल केंद्रीय भूमिका में है।
हाँ, तो इंडो पैसिफिक में भारत की भूमिका मैं कह सकता हूँ पहले से कहीं अधिक प्रभावी हुई है। और आपने हाल में ही जो एक घटना हुई थी, शायद उस घटना की आपको जानकारी होगी, उसमें हमारी इंडियन नेवी ने जिस प्रकार का रोल प्ले किया है वो बहुत ही सराहनीय है और उसके लिए अपने इंडियन नेवी को मैंने कांग्रेचुलेट भी किया था। अब यदि भारत की तरफ चाहे नेवी, चाहे जिसे समुद्र के माध्यम से, जल के माध्यम से, वायु के माध्यम से, थल के माध्यम से कोई भी यदि कोई नापाक हरकत भारत के साथ करने की कोशिश करेगा तो भारत के अंदर इस समय वह इतना स्ट्रांग विल पावर है हमारी सेना के पास भी कि हम उसका मुंहतोड़ जवाब देने की ताकत रखते हैं।
एक बहुत बड़ा बदलाव और हम देखते हैं और वो ये है कि पहले चीन की बात करते थे तो देश के स्तर पर एक एंग्जाइटी और एक चुनौती का भाव रहता था। अब जो भाव है पूरे देश में, पब्लिक का जो मूड है कि ठीक है चाइना को भी देख लेंगे, ये क्यों बदला है?
स्ट्रांग विल पावर की लीडरशिप चाहिए और लीडरशिप मजबूत होगी तो स्वाभाविक रूप से जनता का कॉन्फिडेंस उस लीडरशिप के प्रति होगा। और मैं समझता हूँ सबसे बड़ी बात यही है और सदैव हम लोगों ने अपनी जो भी हमारी फोर्सेस हैं उनके मोरल को हाई रखने के लिए जो भी स्टेप्स लिए जा सकते हैं वो सारे स्टेप्स हम लोगों ने लिए हैं।
जी। एक सवाल और इसी से जुड़ा हुआ है, जो चीन कहें या जो बॉर्डर की ज़रूरतें थीं, इंफ्रास्ट्रक्चर जो बनाया और ख़रीदारी में, रक्षा सामग्री की ख़रीदारी में पहले भारत हिचक के बात करता था, उसको इस सरकार ने तेज़ गति से काम किया कि ख़रीदना है तो ख़रीदेंगे और अपना भी बनाएंगे। इस परिवर्तन के पीछे भी एक ये थॉट रहा होगा कि किस तरीके से भारत को मजबूत बना।
देखिए, किसी देश के, हमारे पड़ोसी देश के साथ अथवा किसी देश के साथ वार की संभावना हो अथवा न हो, बराबर हमारे फोर्स के लोग भी यहाँ कुछ